allegiance with the president's populist agenda.
Mark Short, really wonderful to have you. Thank you so much for being with us. Mark Short, the former Chief of Staff to Vice President Mike Pence. Thank you so much. Coming up, Greg Bowdle of BNP Paribas, United Airlines Executive Vice President Andrew Nocella, Lindsay Piegza of Stifel, and Chanel Desai of Franklin Templeton, as we try to wrap our head around what companies are saying, what policy is saying, and how much the economic data is a clean read versus a distortion of front-loading and consumers that still have money to spend. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates,
yeah,
how do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit, and that's not good for the economy. Growth is really critical, and I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
There
there's not an all clear from a tariff policy perspective.
We know the administration is going to push back. They're going to push back hard.
The tariff levels that we had yesterday are probably going to be the tariff levels that we have tomorrow.
It would be a little bit foolish for countries to just assume that this is over.
The worst case is definitely off the table, no matter what happens in the court case.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back. This is Friday after a long week, after even a shortened long week, and a long month that we ended up with something that looks like potentially the biggest gain going back to November, a 6% gain in the S&P 500. A lot of people looking past the policy roulette, moving toward this question of what the economic data will show at a time when potentially we could be getting some weaker than expected inflation, which will be a bout of good news. Emery, I think it's very notable that after all the turmoil in trade, Jerome Powell had his first visit to the White House in person to meet with President Trump yesterday, where the president said it is time to cut rates. And the Fed chair said, we are watching the data.
We're watching the data, and he's going to be watching the data when it drops in about 29 minutes' time, of course. Right now, what the administration wants to see is better inflation data, lower gas prices, and they think that will be enough for the Fed, and should already be enough for the Fed to start cutting interest rates. The issue, of course, for Jay Powell is he's looking at what we've been living, Lisa, for the past few months, and really on high alert the past 24 hours, on where the president's trade policy is going. Is it going to get stuck in the courts? And what does that mean for the direction of travel, even though we do know what the end destination is?
We do get personal income. We do get personal spending. We also get core PCE coming up in about a half an hour time. And there is this feeling that the consumer is resilient, softening but resilient. We've heard from Costco how they're adapting and adjusting. We've heard from Walmart about how they're doing the same. NVIDIA seeing better than expected earnings. Abby Yoder on earlier talking about how we have seen a 30% beat for the large tech companies at a time where nobody was expecting that. How much is that giving some wiggle room to the president to kind of go hard with some of these policies?
Well, potentially it does give him wiggle room, but at the same time, this administration is moving ahead when it comes to trade deals. The Treasury Secretary said last night on Fox News that this morning, today, he's going to have a massive Chinese delegation in his office today. Yesterday, Kevin Hassett talked about the fact that there are 3 trade deals that could potentially be announced very soon. They have this July 9th self-imposed deadline, which is why I think it's so interesting with the courts. Almost that is just strictly noise. If they're going to stick to the July 9th deadline, then it doesn't matter what the courts come out with.
Meanwhile, we are drumbeating to next Friday, which is the jobs report. Today, we do get a number of data points at 8:30 in about 28 minutes time, and then we get the University of Michigan sentiment survey. We have, of course, initial jobless claims next Thursday. Super interesting after yesterday's continuing claims that rise to the highest level going back to 2021. And of course, we do also get a whole host, I'm sure, of additional policy headlines. Right now, markets clawing back a little bit after that 6% gain for the month of May. You can see bond yields pretty quiet as people look to stronger than expected auctions and weaker than expected consumer spending. Coming up this hour, Greg Bowdle of BNP Paribas. As the stock rally pauses, Andrew Nocella of United Airlines on the summer outlook for travel, and Lindsay Piegza of Stifel ahead of another read on the inflation and the consumer. We begin this hour with stock steady as President Trump's tariff agenda faces court battles and slow-moving negotiations. Greg Bowdle of BNP Paribas writing, quote, reduced tariffs could potentially be good for risk. However, recent news has massively increased uncertainty. Greg joins us now. Greg, welcome. Great to see you. Happy Friday. There is a feeling that nothing has changed after this week's turmoil in the court system over tariffs. You disagree and think it does increase uncertainty. Why?
So I think there's a lot of uncertainty as to how the tariff uncertainty manifests in terms of the macro data, and this has increased the uncertainty of how the tariffs are potentially deployed and the timing of those. So we think that uncertainty is the theme for the market, and we think it's going to start to become a headwind for equities here.
So you think that this is an opportunity potentially to sell and get bearish, or you think that this is just volatility that widens the range, as we hear so many people say?
Yeah, so we think there's some asymmetry in the market. So it's not necessarily about being outright short the market, but it's about owning the left tail of it. So when we look at the equity market, we see more risks on the downside than the upside. We certainly think there's a risk that we could tread water through through the summer months. We titled our note yesterday, Tariff Fatigue. We think everyone is tired of the kind of continued headlines, and the market is starting to become less reactive, and we saw that yesterday, to the incremental headlines. So we do think there is a risk that the market treads water through the summer before some of those potential deadlines in July and August, and potentially a softening of the data change the course.
Why do you think more uncertainty with this court case if the direction of travel is staying the same?
So I think the path, the timing of it are things that are uncertain to us. So there's a raft of macro data next week, but is that data that comes too early? Should we look through it? Are the deadlines that we're looking for the 90-day expiry in July? Or are we looking out to August where that China window ends? For those of us who traffic a lot in the options market, the timing of things is as important as the end destination, and we think this has just increased the uncertainty as to...
So you think that July 9th deadline, though, do you start to bake in that they will get these trade deals done? We are hearing that from Kevin Hassett and the Treasury Secretary.
No, not necessarily. So I think it's a potential stumbling block, a point of uncertainty. So when we're looking at the options landscape, we don't see an awful lot of premium priced in for any of these specific dates. So we think there's value in owning optionality that spans those potential windows, rather than the kind of shorter dated optionality that we think might be more difficult to carry.
So really treading water. Where do you see option pricing on specific dates? What is the market excited about?
So I think there's some interesting nuance in it. You know, when we look to things like the US listed China ETFs, we see implied option values as low as they have been in the last 6 months. So there's a lack of fear, a lack of panic, particularly on the downside of that optionality complex. You can compare that to the US index options, and even though the market is we're in touching distance of those all-time highs, there is still a decent premium baked into both the at-the-money optionality, but particularly the downside.
We've seen economic data points lose relevance over the past couple of weeks as people say it's really distorted, noisy, has a lot of front-loading effects that are baked in. Does that start to matter more as potentially you have this push-pull of both soft economic data rising up to the hard data, as well as ongoing caution from a number of CEOs?
Yeah, exactly. So that dichotomy between the soft and the hard, both in terms of the macro data, but also the earnings, is going to be important. And that's why the passage of time matters. We can look through some of the data, even though there's a lot of important macro data next week. It wouldn't surprise me if the market looks through it. But as we get through June, July, then we start to move into that world where the tariff impact, if there is one in terms of the data, should start to manifest. So we think the timing of it, the sequencing of it is important. And as we get through the summer months, June, July, August, we expect to see that manifest more in both the macro, but also the earnings.
We've been asking all morning whether the rally that we saw in May gave you more confidence or less confidence in equities going up in the United States. A number of guests have said, actually, it's given them more confidence because you've seen accompanying earnings that have been really positive. It sounds like you disagree.
Yeah, I do disagree a little bit with that. I don't think there's so much that you can read from it. I think the earnings are backward-looking. So the earnings that we've seen haven't necessarily worried me, but I don't think they're that relevant for the risks that we see for the market. I think in terms of the rally we've seen, a huge amount of it has been driven by positioning. We've seen massive imbalances in some of the flows that we see in the market, both from the option market, the rebalance of some of the levered products, CTAs, vol targets. Some of these systematic pockets of the market have had a hugely disproportionate impact, both in terms of the initial sell-off that we saw post-Liberation Day, but also the amplitude of the rally. So I think reading too much into either the backward-looking earnings or the price action for the last month, I think is a bit dangerous.
Yeah, these have been really tough signals to read. And I was looking at some of the flows data from EPFR that came in overnight, and it showed that U.S. equities saw a second straight week of outflows, of withdrawals. And even as you saw inflows into places like Europe, you saw inflows to gold. You saw the classic sort of safe haven trades. I just wonder what you make of flows versus price action, how you judge that and put it against one another.
Well, we think that the flows are now starting to look increasingly balanced. So we had incredibly washed out positioning where people got very, very bearish post-Liberation Day. And we think that really contributed to the magnitude of the rally that we've seen. But we do think that flows picture over the coming weeks starts to look more balanced. And we also are in a situation where we think the long gamma position in the market will start to reaccumulate. What that means in practical terms is that can start to become a suppressing force for volatility. So rather than amplifying moves, it can start to suppress those daily equity moves. And we can start to see this more muted reaction to both the data and the policy.
I feel like you're very focused on tariffs. What kind of catalyst do you think this one big beautiful bill can have, which they want done by July 4th?
Yeah, I think it's complicated. From an equity perspective, if we get a bill that's fiscally expansive, expensive, and that should be good. And that's how we tend to look at things. But then we have our friends in the bond market who might start to hold us to account a little bit. And we saw a dry run of that recently. So for equities, you are stuck in this kind of range where if something is too good from a kind of expansive fiscal perspective, it should be good for nominal growth, then you start to run the risk that the bond market gets a little volatile and de-anchored, and that will help cap equities. So we think particularly for things like the small and mid caps, which tend to be very sensitive to growth, very sensitive to rates, we think the upside there is more capped.
Do you think that this bill is a removal of a headwind, or there will be actually a tail risk?
I think it depends what manifests and what comes through it. I think this theme of uncertainty is how we kind of open this discussion. I think there's uncertainty as to what gets passed in that bill. There's uncertainty as to how the bond market reacts to that. And then there's the uncertainty from the tariffs, the growth outlook, and the next earnings season. So for us, that creates this kind of real mix of things as we move through the summer, June, July, August, where there's a ton of uncertainty. And that's where we think owning equity optionality that looks out past that window is for us attractive.
Greg Bottle, thank you so much of BNP Paribas. We appreciate it. Have a wonderful weekend as we parse through, I'm sure, all the headlines that we'll get. Hopefully not over the next couple of hours, but hopefully, and I imagine, over the next few days. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Danny Berger. Danny.
Thanks, Lisa. Pfizer announcing that its colorectal cancer drug doubled patient survival time. Adding Pfizer's Bravofti to a cocktail of cancer medicines cut death by 51% during the study and slashed the risk that the cancer would progress by 47%. That met the trial's goals. Dell shares, meanwhile, are rising in the pre-market by just 0.5%. It gave a profit outlook for the year that exceeded estimates. The company says AI server demand is unprecedented. At more than $12 billion, orders last quarter exceeded what it had in shipments for the entirety of last year. Sales of consumer PCs, however, were weaker than expected. And the New York Knicks mounted a comeback from the brink of elimination in front of hometown fans. They beat the Indiana Pacers 111-94 in Game 5 of the Eastern Conference Finals last night. Game 6 will take place Saturday night in Indianapolis, with the Pacers looking to clinch their second ever NBA Finals. The Knicks looking to push for a Game 7 to win their first championship since 1973. And I think we're all thankful for Anne-Marie sending the good vibes with her mug today. Lisa.
Thank you so much, Danny. She's not just that. She's also scrolling through websites to try to figure out how to get tickets that are lower than $80,000. And potentially, you might be making a trip over to Indiana.
Yeah, the tickets, if I go to Indiana, are much cheaper than if you were to go to Madison Square Garden. Although they do have one very pricey one, courtside. It looks lovely, $82,000. But you could sit up in the bleachers and spend $250.
I'm glad that you're focused this
I thought you were going to be happy that I changed mugs.
I am actually very happy.
the Yankee mugs for the Knicks mug.
I think that's much safer. One note that I think is interesting, what you can see in the two-year yield, just over the past couple of minutes, you've seen a sharp rally in the two-year, with the two-year yield markedly lower. This is ahead of the data that we're getting in just about 16, 17 minutes time. Question about whether traders are just sussing out maybe some weakness in the inflation data, which would be a good kind of downside surprise. Whether this is just month-end types of dynamics, we will discuss that, of course, as the hour goes on. Up next, the morning calls, plus United Airlines Chief Commercial Officer Andrew Nocella. That's coming up next. This is Bloomberg Surveillance.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. Welcome back. A little bit of volatility on the heels of this. It wouldn't be a morning without a Truth Social posting from President Trump, the latest coming out, talking about China, saying the bad news is that China, perhaps not surprisingly to some, has totally violated its agreement with us. So much for being Mr. Nice Guy. Hard to know how much of the move in treasuries is attributed to that, but it was in tandem, and you do see the 2-year yields coming back a bit after a pretty big rally on the heels of this. Anne-Marie, do we have a sense of what this post means?
I imagine that has to do with some of the provisions and agreements that were put in place after Geneva. And earlier this morning, speaking to the American press, Ambassador Greer was talking about that the U.S. did exactly what it was supposed to do, but the Chinese are slow rolling their compliance. So I imagine this is something that has irked the president. We heard yesterday from Scott Bessent, the Treasury Secretary, maybe foreshadowing this Truth Social, saying the talks have stalled. It seems like trade negotiations are moving forward with everyone else right now but China.
Which is the reason why we are watching for some sort of phone call getting scheduled between the two leaders. We will keep you posted on that. Right now, though, let's shift our attention to the morning calls. First up, Wells Fargo cutting its price target on Best Buy to $67, citing low room for error, thanks to continued tariff uncertainty. Next up, JP Morgan raising its price target on Ulta to $525, noting better than expected earnings and market share gain. And finally, Truist downgrading Airbnb to sell, saying soft summer leisure trends aren't being fully anticipated by analysts and investors. Sticking with travel, United Airlines and JetBlue yesterday agreed to a partnership that will allow travelers to use loyalty points and book flights across both carriers in the New York City area. I am so pleased to say, joining us now, United Airlines Executive Vice President and Chief Commercial Officer, Andrew Nocella. Andrew, thank you so much for being with us. First, can you just tell us why you thought this was an important deal to do?
Sure, well, it's great to be here. Good morning. You know, I think United is the largest airline in the world. In fact, I know it. But we also have a few gaps in our network, and we would like to be a better choice for travelers in the New York City area. We're very strong on the New York side of the river, and we'd like to have a presence on the other side, along with in Boston. That's more significant than we have today. And this partnership with JetBlue is going to get us there.
How much is this tied to some of the issues that Newark has had with air traffic control signals and all of the publicity around that, and diversifying so that there are some options in the New York City region apart from that hub?
Sure, it's a good question. We've had a very long-term goal of being back at JFK Airport. We've been working on this particular partnership for JetBlue for a long time. So what's happened in New York, and Newark in particular, over the last few weeks is a bit of a speed bump, but the second runway will be operational again in just a few short weeks, and we should be back to normal.
Do you expect other types of agreements like this, Andrew, at a time when we know that airlines have been trying to come up with agreements to flesh out their service area, their options for consumers? Is this kind of the path of travel?
Well, that's a really good question. At United, we've always been focused on the consumer and providing choice, whether it's from basic economy, our most basic offering, to Polaris, if you're trying to go to Singapore and have a lie-flat bed, and now the Polaris Studio, which is a brand new product we announced a few weeks ago. So we're always trying to figure out what the next step is, how to innovate, how to offer more choice to consumers. I think the rest of the industry is just finally caught up with that. I call it the Great Reset. The other airlines are out there doing a big reset, trying to figure out how to gain footing again. Whereas United, we figured that out a long time ago. We figured out the consumer was in charge, and providing optionality was what they wanted. And we're just a step ahead, a generation ahead because of that.
What are you seeing right now that the consumer really wants when it comes to travel?
Well, I think they want choice. And what I'd say is the U.S. consumer has been very resilient. And for example, trips to Japan, I think, are just really in fashion right now. Japan, I would describe as one of our hottest destinations this summer, where everybody's trying to take the family to Japan. I'm not sure we'll have enough seats, to be frank. But the consumer wants choice in a product range. They'd like the optionality of flying basic economy, but they also like, sitting in a premium seat from time to time. And most importantly for United, they like the optionality we provide to go around the world. Whether you're trying to go to Mongolia or Cape Town or anywhere in between, United can get you there.
It's interesting you talk about Japan, because I remember Lisa sent her son to Japan and perfectly nailed it when the yen was really to her favor in terms of doing the currency exchange. Where else are travelers going this summer? Because people have been talking about there's all this concern about whether people are going to spend and travel because of tariffs, but it sounds like for you it's pretty robust.
Yeah, I think it's going to be a very busy summer, and our airplanes are going to be full. In addition to Japan, I would say that the hot spot, and this is for now the third year in a row, is Southern Europe. We just started flying to Sicily last week, and we fly to Naples, we fly to Rome, Athens, Spain. People in the United States are anxious to get to Southern Europe, and it's just, it's a really great vacation, and I think that is another big hot spot across the globe.
One big question has been not necessarily outbound traffic tourism outside of the U.S., but inbound traffic with people from overseas coming to the U.S. How much have you seen a real drop-off, especially as we have heard a lot of headlines and tensions between the U.S. and other countries?
I think that is a fair point. We have seen a small drop-off. We've talked about it from Canada. There were previous reports that were just completely false, but it is a small drop-off. And other parts of the world, some of it driven by currency. I think Japan is largely driven by currency. But the U.S. consumer has been incredibly resilient. And so from a load factor point of view on our jets, that small drop-off overseas has been more than offset with more U.S. consumers seeking that vacation to Rome or Japan this year.
We're about to get a read on inflation as well as consumer spending and income. And there's been a real question about what's driving disinflation. And it has been airline prices, actually. Airplane tickets have been coming in. And I wonder whether you expect that to continue or whether that was a temporary blip that has changed, especially as people are feeling better.
Well, as you can imagine, airline tickets over the long run are a great bargain if you adjust for inflation, for sure. And we have seen a lot of inflation. I do think, earlier this year, when we did see some consumer weakness, we adjusted our posture in terms of how much we're charging to fly within the United States and around the world. So that did stabilize demand, but yields or ticket prices from our perspective are a little bit lower than we expected this spring and this summer if you roll back to the very beginning of the year based on what we see from consumer demand. So we do think there's a lot of bargains out there.
Do you expect that to change later in the year?
That really depends. It's hard to predict the economy, as you know. We spend all day trying to think about that. If the economy gets stronger, then of course we would reset. But once we get out of summer, my guess is these trends will probably continue for a bit. But 2026, I think, is going to set up to be a very great year for United. We have a bunch of new products we're introducing, including Starlink and new Polaris seats. So we're bullish about the long term at United.
Andrew, it is so great to have you. Before we let you go, I want to ask, just finishing where we started with the idea of JFK versus Newark and the foray into JFK. I'm wondering whether this is the beginning of a broader expansion once again. I know you've had a love-hate relationship with the airport. Is this sort of the first foray into getting a bigger footprint at that hub?
There's no doubt we would like to get a bigger footprint at JFK. We're going to be starting off with a high single-digit number of flights, which is rather small for United. We are the largest airline in the world. So we look forward to looking for more opportunities to expand there. But JFK, not like the other New York City airports, are runway restricted. The runways are very full, as we've talked about often. And so the ability to grow at JFK or any of the three New York City airports is constrained by these runways. So we're sure hoping that there's advanced technology that allows runway expansion to continue. But in the medium term, the short term, the runways are full at the New York City airports, and our ability to grow by any airline is quite limited.
We've all experienced that. Andrew Nocella, thank you so much for taking the time. Wonderful to speak with you. United Airlines Chief Commercial Officer there, joining us from Chicago. We are just minutes away from personal income, personal spending, as well as core PCE, but still digesting those headlines just moments ago, Anne-Marie, from President Trump on Truth Social, talking about no more Mr. Nice Guy.
No more Mr. Nice Guy. What he says is he seems very agitated what's going on with China, saying China, perhaps not surprisingly to some, all caps, has totally violated its agreement with us. Still trying to figure out what the president means when he says agreement to us. Jamieson Greer, the USTR ambassador, was speaking to some reporters earlier, and he talked about how China was the only country to retaliate when it came to these measures, and the president introduced them in early April. And basically, China has put in place countermeasures, including restricting the flow of rare earth magnets, and also saying how in Geneva they agreed to remove the tariffs and countermeasures, but it seems like for the administration, they're just doing it too slowly.
Yeah, well, this might be what Scott Besson, as you mentioned earlier, and it was an astute point, was talking about when he said it's actually hitting kind of a snag and maybe they ought to get on the phone and work things out. Coming up, we're going to be talking about that, but also another round of economic data, including the Fed's preferred inflation gauge, the core PCE. How much of that reaction, the two-year yield, which is coming back, has to do with tariffs? How much has to do with the potential for disinflation? Lindsay Piegza of Stifel joins us next as we parse through the state of the consumer.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
25 seconds to go until we get the key U.S. economic data of the week, core PCE, that key inflation metric that the Fed does look at. We also get a read on personal income and spending, which is important given the state of the consumer and where we are. We are, of course, also watching a rollover in futures, possibly on the heels of the True Social posting, ratcheting up pressure on China. Right now, with those numbers of personal income, personal spending, core PCE, let's head to Dallas, where our own Michael McKee, Bloomberg economics and policy correspondent, is getting a tan. Mike.
Getting a tan, I wish. We don't have those numbers yet. They haven't dropped from the Commerce Department, but here they come right now. Personal income up 0.8%. Personal spending 0.2%. Spending went up by 0.7 in the month of March. So a drop off there. We're waiting on the price numbers to come through here, and we have a PCE price index headline of just 0.1%, which pushes the year-over-year number down to 2.1%. We are just 0.1% away from the Fed's target. The core is up 0.1%. On a year-over-year basis, that falls to 2.5% from 2.6%. The other number that we're watching today, the advanced goods trade balance, comes in significantly. We're going to have to get a breakdown on that in a couple of days when we get the full numbers for this. But $87.6 billion, that's down from $162.3 billion in the month of March. And of course, that was when everybody was trying to pull forward all of the imports they could get before we got to the tariffs. So a major change here in the trade situation that should add to growth for the month of April. And PCE comes in as expected, lower than anticipated. Incomes were good. I'll look for the breakdown on that. And personal spending falls off, again, after people maybe front-run the tariffs a little bit.
I'll let you parse through some of the details there. Just to reiterate, as you were talking about, Mike, 0.8% increase in personal income, and you did see a real increase in personal spending of 0.1% versus the expectation of 0%. When you take a look at markets, it is the wrong kind of maybe upside surprise when it comes to consumer resilience, at least for the bond market, where you do see a bit of a retracing of some of the rally yields marginally higher across the curve, as the 2-year is still maintaining some of the declines. A question here about how much we can really lean into these numbers in the currency market. When you bleed it through, we had been seeing dollar strength. Right now, we have seen basically a fading away of that, and now that looks like it's being retraced just a touch. And equity markets are kind of dancing to their own music right now. Hard to say how much this has to do with economic data, how much this has to do with the Truth Social posting, which we'll get into in just a bit, where President Trump ratcheted up the pressure on China. Mike, you've had a couple of minutes to look through, or seconds to look through the details. What are you finding in terms of that personal income pop and what we're seeing about where people are spending?
Well, what we're seeing about where people are spending is an interesting change from last month. Last month, 56% increase in the number of automobiles bought. But in April, housing and utilities were the biggest expenses, up 24.7%. Healthcare follows that, and food services and accommodations. Automobiles, transportation falls to negative 4.5%. So people's increased spending by 56% in March, and it dropped off to 4.5% in the month of negative 4.5% in the month of April. The other thing I can tell you that the goods imports fell by 20% basically during the month of April, and that is the biggest drop on record. So what we did see was a lot of front running as people anticipated the tariffs coming. In terms of the personal income, wages and salaries up 0.5%. That's the same as we've seen for the last 3 months. Disposable personal income 0.8% higher, and the savings rate jumps to 4.9%. So it looks like Americans are preparing for a maybe bad period during the economy.
Michael McKee, wonderful as always. Stay close as you get more information, intel from the line items here. Really interesting to see that resilient consumer. We were hearing that from Andrew Nocella of United. We've been hearing that from a whole host of companies where consumers can still spend and they are preparing for what might come next.
Are they preparing for what might come next, or did they front run and buy all the big ticket items? I have family members who went out and did this, and I'm not talking about little items. I'm talking about cars, laptops, computers. They were so worried about prices going up. They did all their early shopping, including Christmas for some people in my family, very early on in the year.
Just some other data points. If you track the Canadian economy, they expanded 2.2% in the first quarter, beating all estimates. It was originally 1.7%. You saw a higher than expected CPI print in Germany this morning. I just wanted to mention that because the global backdrop is less bad than it has been pretty much across the board. And the data that we just got in the United States seemed to really double down on that. Joining us now is Lindsay Piegza of Stifel. Lindsay, what's your take on that resilient consumer and how much their incomes rose as well as their ability to spend on an inflation-adjusted basis?
Well, certainly welcome support from that organic component of income, supplementing consumers' ability to go out into the marketplace and spend, albeit at a reasonably reduced pace. We are seeing some loss of momentum. So the consumer is still resilient, but again, it is at less robust levels than what we've seen over the past couple of years. And this supports exactly what we've seen in the price index, that deceleration in headline costs, reflecting the fact that businesses aren't able to pass on further price increases to the consumer, to the end user, without the risk of losing market share. So while consumers are out spending, they are becoming increasingly cost sensitive. But for the Fed, this is good news. We have a resilient economy, resilient consumer, and inflation that has been decelerating now for the past couple of months.
Is it enough for the Fed to potentially, if inflation's coming down, to think about cuts this year?
Well, I think the Fed is already thinking about rate cuts, but the window of opportunity for action is very limited. Against the backdrop of negative growth in the first quarter, against the backdrop of that deceleration of price pressures, the Fed could act to cut rates minimally, maybe 2 25 basis point cuts mid-year. But as we look out towards the second half, further out towards the fourth quarter, I do expect a more positive impact, a stronger impact from some of these trade policies, from tariffs, to set into price pressures, risking upside momentum in costs and really removing any window of opportunity for rate cuts and potentially shifting the conversation back to rate hikes by the end of the year.
Wow, rate hikes at the end of the year, and that's driven by what exactly? Because the concern of inflation driven by tariff policy?
Well, again, right now, the Fed is walking a very delicate line. There, as we saw in the FOMC meeting minutes, there are downside risks to growth and employment, which we've already seen that storyline playing out, as I said, in the first quarter, and likely to see very minimal momentum in the economy in the second. But by the second half of the year, those upside risks to inflation, I do think, are going to become more prominent. And the Fed has to focus on getting inflation back under control. Now, the numbers this morning in the PCE were favorable. That headline is moving closer to 2%, but the core numbers still remain stubbornly sticky, up at 2.5%. And again, the risk is to the upside.
Lindsay, Neil Dutta was talking earlier this morning that the housing market is kind of the fly in the ointment for this argument, that you've seen a real fall off in terms of activity, people's ability to buy homes. You've seen even prices come down in certain regions for the first time in years. There's a feeling that that aspect of inflation, which is a massive one, is really going to be more of a drag than some sort of boost, and that financial conditions have actually been incredibly tight in that area. What do you make of that argument?
Well, I think when we look at the inflation numbers, it's going to be very difficult for the Fed to achieve a sustainable 2% level without further reprieve in housing costs. Remember, CPI shelter costs are still up over 4%, so that's double what the Fed's intended target is. And so it's going to be very difficult for the Fed to achieve, again, that broader measure of price stability without further reprieve in the housing market. That being said, we haven't yet seen a sizable amount of relief. Now, price pressures have slowed, but nominally prices are still very elevated as would-be home buyers face near record low affordability rates, so there's still a lock-out effect. And existing homeowners are still facing a lock-in effect, whereby they're largely precluded from offloading their existing property for fear of resetting to significantly higher rates. Remember, even if you're buying a lower cost nominal asset, if you're resetting from sub 3% to up near 7%, well, that's going to result in a sizable increase in your monthly payment, which most Americans simply cannot afford. So that lack of mobility, both into and out of the housing market, I think is going to slow any further progress for the price pressures that we're seeing in the shelter component.
There's a theory out there that the tariffs and trade debates will dampen growth, and that we're seeing that on the margins, whether it's people getting more concerned emotionally and maybe not in their spending habits, as well as companies that aren't hiring as robustly or doing capital investment plans the way that they have been in the past. Why do you think that won't be enough of a dampening effect to counterbalance some of the inflationary pressures and strength, frankly, that we're seeing in the consumer?
Well, I think the biggest impact that we've seen thus far has been on the soft data, on the confidence numbers. Consumer confidence has fallen to a multi-year low as consumers are anticipating these dire conditions coming down the pipeline, driving inflation expectations up to a multi-decade high. But on the business side, we've also seen that. We've seen that impact on confidence come down to a multi-month low, with 90% of businesses saying now is not a good time to hire, now is not a good time to invest. But as we saw this morning, when we look at that hard data, consumers are still spending, businesses are still investing. So it's as if we're vocalizing more concern than we are actually changing behavior. And so again, that's going to perpetuate this resilient notion for the economy, both on the consumer and the corporate side, and help to offset that impact on inflation and still leave us facing significant upside risks in terms of price pressures.
Lindsay Piegza of Stifel, thank you so much for those insights as we parse through stronger than expected income and spending data. Back with us is Mike McKee, Bloomberg Economics and Policy Correspondent. You mentioned this statistic, but I wanted to dive a little bit deeper into it. You noticed that the U.S. April goods imports fell almost 20% month over month, which is the biggest drop on record. Is this essentially the consequence? I think about Gene Soroka of the LA ports talking about how much was just delayed in ships that didn't come to the ports. Is this the hard data that supports that?
Basically, it is, Lisa, and you made me laugh because I was thinking the month of April was like, look at this, the biggest drop ever. May could turn out to be a hold my beer moment, given what Gene Soroka has been telling us about no ships coming in at all. During the month, we saw imports of automobiles up by 9%, but exports fell by 21%. I'm sorry, in terms of automobile imports fell by 19%. Exports fell by 21%, so the auto industry just completely stalled out. Foods down 4.4% in terms of imports, capital goods down 3.1%, and industrial supplies down 31.1%. So it looks like companies just went out and bought whatever they could in December, January, and February. We got to March, it started to fall off, and in April, imports just stopped. And now we have to see what happens in May because, according to Gene Soroka from the Port of Los Angeles, we are not seeing anybody bringing anything into the country at the moment.
And potentially those tensions are going to ratchet up, what the president saying today. China's not abiding by them. Mike, I'd also love to get your take on just what we heard from Lindsay. She's saying that all the trade and tariff noise can potentially mean the Fed talking about a hike if this leads to inflation at the end of the year. Do you hear anyone at the Fed talking about potentially putting a hike on the table?
No, and they get asked about it all the time. They say they don't think there's any reason for that at the moment. One reason is because the inflation rate has been coming down, and they still think that they have a tight policy. But the other is that if this is tariff-driven, there isn't much the Fed can do about that. Raising the interest rate isn't going to change the tariff situation and any kind of price increases brought about by those. So the Fed's a little bit handicapped. It would only be second-round effects if people start going to their bosses and asking for additional money because they have to pay more for goods that are tariffed. So at this point, I don't think we're really talking about increases. And we're not even talking about cuts at the moment. What we're talking about is how long are we going to have to wait until the Fed has any idea of what's going to happen.
Mike, thanks so much. Enjoy Dallas. Michael McKee there of Bloomberg. I just want to bring this to you. Just crossing the Bloomberg terminal, that OPEC Plus is said to consider an increase of more than 411,000 barrels per day for July at a time when we're talking about possible disinflationary forces. You take a look at oil prices, they're lower by an additional 1.2% to $60.22. And it just highlights the push-pull on so many different levers about the supply-demand dynamics in oil and what the ramifications could be for inflation.
Well, I would say that redhead is certainly music to the ears of this White House, and Bloomberg actually scooped that OPEC Plus was thinking about doing this, aka Saudi Arabia. Two reasons why I think we need to think about this. One, they are trying to make it very clear to the cheaters that are non-compliant, like Kazakhstan, in the group, that actually you need to comply, and if not, we are going to make this challenging for you. And second, what a better time than to do it now than to get the foreign policy boost that you're going to get. The President of the United States came to Riyadh, gave his transformational speech in front of Mohammed bin Salman, basically charting a new course in foreign policy. I imagine oil was discussed.
Looking at average national gas prices in the U.S. right now, $3.16 versus a high on April of 3.3%. It's been actually really somnolent. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Danny Berger. Danny.
Hi, Lisa. Tensions rising between the U.S. and China. President Trump accusing China of violating its preliminary U.S. trade agreement. That occurring after Treasury Secretary Scott Bessent said trade talks with China have stalled. The president also met with Fed Chair Jay Powell at the White House for their first in-person meeting since the inauguration. The Fed says that the president invited Powell to discuss economic developments, growth, employment, and inflation. White House Press Secretary Caroline Leavitt says that Trump pushed Powell to lower interest rates, but did not discuss whether Trump would seek to remove Powell from his role. And the Edmonton Oilers punched their ticket to the Stanley Cup final last night with a 6-3 win over the Dallas Stars. The Oilers were led by center Connor McDavid, whose breakaway goal swung the momentum in Edmonton's favor. The Oilers will face the reigning champs, Florida Panthers, in a rematch of last year's final. The best-of-7 series starts Wednesday in Edmonton. And that's your brief. Lisa.
Thank you so much, Danny. Up next, setting you up for the week ahead, plus Sanal Desai of Franklin Templeton. Let's get her take on what she thinks about a Fed rate hike later this year. This is Bloomberg.
The President of the United States does say he wants to keep a more mutually beneficial trade balance with these countries. What does a country like Egypt and Kenya and some of these others have to provide that won't completely dent their own GDP?
No, it's tough. I mean, there is the commodity side. There is the. I think it's less about bringing it to the table and more trying to take advantage of the hit elsewhere. So China exports 30% of all the textile exports to America come from China in 2023. It's something like $40 billion. And whatever the tariff rate ends up being on China, it's going to be a lot higher than it is on Africa. So there might be scope for African countries to say, well, let's move those textile factories.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Well, we got that key economic data, and for the most part, markets have retraced most of any moves that you can see. Two-year yields still marginally lower, 10-year and 30-year yields marginally higher, didn't really move the needle. What is moving the needle maybe is what you can see in the stock market. You do see flat market turn more negative, although that's also retraced. It seems like everyone's trying to figure out how to understand this, which is the trade headlines that we are getting, and the latest being President Trump, and the latest out on Truth Social, having to do with China and no more Mr. Nice Guy. We'll get to that in a second. Coming up over the following week, we do get ISM manufacturing. Watch this space, given the fact that we just got the decrease in imports to the U.S., jolts and durable goods on Tuesday, Thursday. Jobless claims will be interesting, ongoing claims, and Friday, of course, is the big event, May payrolls. A busy day in Washington ahead as President Trump turns up the heat in China. Bloomberg's Mike Shepard joining us now to decipher what this Truth Social post actually meant. Mike.
Well, from reading the Truth Social post, it's clear that the president is displeased with the progress in discussions with Beijing on getting to the next level of an agreement with China that would settle some of their differences on trade. But he did not elaborate on what had set him off. We did, however, get a clue from his top trade negotiator, Jamieson Greer, who was interviewed on another network, CNBC, and told the audience there that, look, this is much more about the non-tariff barriers that China has put up and that they are slow walking in lowering. And he was referring specifically to curbs on exports to the U.S. of rare earths and critical minerals and magnets used in high-tech products here in the U.S. And this was a key win for the U.S. in coming out of this discussion with China just a few weeks ago in Geneva. Remember, Beijing had imposed those curbs in retaliation for U.S. export curbs on semiconductors and on semiconductor manufacturing equipment as a way of retaliating against that. The Trump administration wants to see more progress more quickly on that front, and apparently they're not getting it. We have not heard yet back from the Chinese government. A call has gone to them after hours seeking their comment. So far, we have not heard back yet, Lisa.
Shep, thank you so much. That's Bloomberg's Mike Shepard from Washington, D.C. Joining us now is Chanel Desai of Franklin Templeton. In this whack-a-mole world that we're in, we go from what's going on in Washington to what we're hearing on the front of economic data. Chanel, what do you make of what we just saw coming out of the Bureau of Labor Statistics?
So if I look at that whole slew of data, ultimately, Lisa, it is quite messy. It's going to be messy for a little while. I don't think it moved the needle very much, really. It's very difficult to interpret, clearly. And then when you look at what's going on with imports, it's impacted by so many different things. On the one hand, you've got the port issue that you were referring to. On the other hand, you had so many importers who imported early to try and front-run the tariffs. So you don't know whether it's payback for that we're seeing. Are we just seeing a reduction due to ships not being able to dock? Just really hard to read the data right now. I think that's where I'd come. I haven't changed my views on the back of the higher frequency data that we're seeing right now.
When you say messy data, do you mean just basically paralysis, lack of clarity in Washington?
No, actually, though there is, I mean, that's happening. But what I would say is I'm really referring to the fact that the actual data moves are distorted by people's behavior, companies' behavior, which is in response to prospective changes. So for example, we didn't really have GDP contracting by that amount during Q1. We had a massive expansion in the trade deficit on the back of front running of imports. For example, you just don't know how much of that is bleeding over into the next month's data and will continue to do so. So for example, if we see a massive contraction in imports in the second quarter, you're going to get an artificial bulking up of GDP. So I think right now, a lot of the data is being impacted by these moves, which don't really talk to the underlying strength of the economy. In particular, a lot of people have been talking to the confidence indicators. I really think that this is one time when confidence indicators may follow hard data rather than hard data following confidence indicators, because those confidence indicators are so impacted by rhetoric and overnight tweets, for example. And the hard data is how people are actually responding.
Sanal, if that's the case, and I'd just love your take on this, Lindsay Piegza was talking about how the Fed might even have to put a rate hike back on the table later this year because of the strength that we're seeing in the consumer, but also potential inflationary pressure from tariffs and just that ongoing strength. Do you agree with that?
I think the bar for raising rates is very high, but I would like to address specifically the issue of tariffs leading to inflation. We have a roughly $30 trillion economy. 70% of it is consumption, 70% of consumption is services. So when you come and you narrow that funnel down as to where the price increases will actually happen, it's rather small. So when we calculate it, we see a 0.5 to 0.9 percentage point increase based off tariffs. And I think that's probably too much. I mean, even that is probably a high point in terms of what would happen. So I don't see the Fed responding to a 0.5. I mean, it wouldn't be great, but we're not going back to those 9% levels.
So now it's a long week, and it comes with gains, Anne-Marie, the idea that all the trade turmoil actually ended with the biggest monthly gain going back to January.
Right, but we're going into the weekend once again with uncertainty. Sunday evening is going to be also challenging, depending on maybe how China responds to this. The President of the United States says they've totally violated their agreement with us.
We will parse through it all coming up on Monday. Russ Kostrick of BlackRock, Matt Hornbach of Morgan Stanley, Sarah Hunt of Alpine Saxon Woods, and Victoria Fernandez of Crossmark. We'll be parsing through all those headlines. Maybe there won't be any, but I can't really guarantee that. Go Knicks. I see you, Anne-Marie. You're very excited. This was Bloomberg Surveillance. You're like, it's a big game on Saturday. I know it is. You're trying to get
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
In case you missed it on Balance of Power.
if we're going to get all this revenue from tariffs, why would the president be pushing for higher taxes on anybody? Because our understanding is for the wealthy, he's looking at a new rate of 39.6%. And I thought the Republican Party didn't stand for that kind of thing.
Well, you realize that the tariff revenues doesn't count toward the reconciliation numbers. Don't ask why. I can't understand why. We're running at like 25 billion a month, and they're not counting it, but we'll leave that aside for another day. This is Washington. They have their own accounting practices. So the president's trying to make sure he gets no tax on tips, no tax on overtime, and no tax on Social Security. And if he says, look, the richest Americans, remember, he cut it from 39.6 to 37. So if he just goes back to what he did last time, you know, I'm in favor of that. I think it's smart.
Don't miss Balance of Power live every weekday.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Marie Hodern in Buenos Aires, Argentina, and this is Bloomberg.
30 minutes until the start of cash trading. We're looking at futures mildly down. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, markets on edge with tariff concerns eating into a banner month for stocks. The president accusing China of violating the country's trade agreement, and another batch of retailers sound the alarm on an unpredictable outlook. Katie, walk us through the pre-market reaction here.
I would be happy to. Let's take a look at Ulta shares surging after raising their profit forecast for the year. You can see up currently about 10% in the pre-market. A different story for Costco, navigating tariffs well by rerouting products and examining price changes. Shares down a little bit. And then a much different story for Gap over there, down about 15% right now, struggling with a combination of weaker demand, but also the trade war impact on the business. We'll discuss all of that and more with the CEO next hour, Matt.
All right, I want to also point out that Dell reported a profit outlook that beat estimates as AI demand remains strong. Shares right now off about 1.5% in tandem with the broader markets, but we're going to keep an eye on that story as well, Katie, as AI really has been obviously the driver for the gains we've seen this month.
Absolutely, but let's get back to trade now because markets continuing to digest that latest tariff development. President Trump posting on Truth Social, writing, China has totally violated its agreement with us, using all caps there. So much for being Mr. Nice Guy. We also heard from Treasury Secretary Scott Bessent saying that negotiations remain in limbo.
I would say that they are a bit stalled. I believe that we will be having more talks with them in the next few weeks, and I believe we may at some point have a call between the president and party chair Xi.
Let's get the latest now with Bloomberg senior editor Michael Shepard. He's in Washington, D.C. for us. So, Mike, what do we know about this? It looks like a breakdown in U.S.-China relations.
Well, we are definitely getting the feel-good vibe fading from the talks in Geneva. It's clear that there is a rupture in the conversation that had moved toward maybe easing some of the trade tensions between the world's two largest economies. Remember, during those talks in Geneva, they had agreed to lower the significantly higher tariff rates on each other's goods. The U.S. had put its rate as high as 145%. That was lowered to 30% pending further discussions, and China did the same. Now, as part of those discussions, the U.S. had been looking for China to also lower some non-tariff barriers, and that included controls on exports of things like rare earths and other critical minerals that are important to the technology supply chain here in the U.S. Now, while the president didn't spell out in his Truth Social post what set him off there, Jameson Greer, his top trade negotiator, indicated today that it may have something to do with China slow-walking the removal of some of those barriers on exports of critical minerals, Matt.
Well, we heard from the Treasury Secretary Scott Bessent last night saying that talks between the two countries have totally stalled And his view was that maybe there needs to be a call between President Trump and between President Xi of China. We know the two haven't spoken since before the inauguration. We also know that the Trump administration has been angling for a conversation between the two. Are we any closer to that?
Well, Greer said this morning that they were still working to arrange this call, and a conversation between President Donald Trump and President Xi Jinping certainly could break the ice. And we did see that having some effect when Trump spoke with European leader Ursula von der Leyen after Donald Trump threatened a 50% tariff on imports from the EU. And that led the president to move back his deadline for imposing that much higher tariff rate to July 9th, pending further negotiations. So it could be a critical icebreaker, and yet China and the U.S. remain very far apart. The issue of export controls is a real one, not just for the U.S., but also for China, which has objected to limits on exports of semiconductors and other sophisticated machinery needed to advance their ambitions in areas of artificial intelligence and other sophisticated technologies.
All right, that is Bloomberg's Michael Shepard joining us from D.C. with the latest on the negotiations between the world's two largest economies. But let's talk a little bit more specifically about the U.S. economy and U.S. consumers hitting the brakes in April while inflation remained tame. We're going to break down this morning's data with Bloomberg's international economics and policy correspondent Michael McKee joining us from Dallas, which is fun. So let's talk about the PCE numbers that we got at 8:30 this morning, really coming in across the board, right on the screws. And then you take a look at personal spending, pretty much coming in line with expectations as well. I can't imagine this moves the needle too much for the Federal Reserve.
No, Katie, the Fed is not data dependent at the moment because it has to wait and see what the impact of whatever the policies turn out to be from the Trump administration, what he wants in tariffs or what the courts will allow him, et cetera, et cetera. But we did get to 2.1% on a year-over-year basis for the headline, and the headline is the Fed's 2% target. So they are within 1/10 of a percentage point of that target. They would have their soft landing if not for all this tariff talk. We also saw the core rate come down as well, a big drop in energy there. So we are starting to see some progress on inflation that would have probably led to more rate cuts if the Fed were able to figure out what was going on. The spending number is interesting because, of course, people front-loading what they wanted to buy in March, and then it falls off in April, although incomes are still relatively strong, so they can buy things in the future. But it is that pull forward that has been the news today. The advanced goods trade figures, just totally shocking, down 20% on imports, which is the most ever. Factory goods, industrial supplies fell by 31.1% in terms of imports, and auto imports fell by 19%. So not only were consumers front-loading, but businesses were front-loading as well.
All right, Mike, thanks very much for that wrap. We're looking forward to University of Michigan data at 10 o'clock as well. Bloomberg's Michael McKee there, a policy and economics correspondent. On the earnings front, a mixed outlook for retailers from Gap to Costco to Ulta and Dell. Tariffs maybe impacting the supply chain, changing the way businesses think about that, and consumer sentiment weighing on demand, as well as discussed with Columbia Threadneedle Investments senior equity analyst Mari Shore, who joins us from Boston. Mari, first of all, what do you make of the Gap issues? Because they said tariffs could take a $300 million bite out of their bottom line, and the shares have lost about 1/5 of their value in the pre-market.
Yes, thanks for having me. Gap is trading down in the pre-market, as you said, I think for two reasons. The first is that the expectations had risen significantly into the print. So even though the Gap and Old Navy brands are taking share, the sales results were not as strong as some had hoped. And then the second point is on the tariffs, as you said, management did not include the tariff impact in their guidance, but it will be a significant impact, about 10% to full year operating profit. And so that is now something that investors are also having to bake into their numbers.
Yeah, it's interesting to dig into the details of their portfolio. Like you said, of course, the namesake Gap brand and Old Navy doing well. Athleta, Banana Republic, a bit of a disappointment, even though I love both of those lines, but clearly that didn't help in these earnings. Talk to us a little bit more about that tariff impact, because they said that they anticipate as much as $300 million worth of impact here. They're going to take some mitigation efforts. Does that number seem large to you? Seems large to you? Because you take a look at some of the sell side reaction, and a lot of folks were surprised, to your point.
The number does not seem large to me. After the Liberation Day announcement in early April, I immediately began doing analysis and running numbers for all of these companies, and Gap actually screened as one of the companies that was most exposed here. Some of that is given the nature of their sourcing, but also the fact that they sell most of their product domestically, whereas other global brands are selling a lot of their product in international markets as well. So as you said, they talked about a $300 million gross impact, but net it will be about half of that, which is about 10% to full year operating profit. So that number does not surprise me. I think overall Gap is one of the companies more impacted, but there have been others like Target, for instance, where I also thought we could see a greater impact, and management talked about being able to fully offset the tariff impact there. So I think overall, stepping back as we went through retail earnings, the tariff impact was actually a lot less than investors had expected. But in some cases, like you mentioned, Gap, investors had not been forecasting or assuming any impact in their numbers. And so now we are having to bake that in.
I was surprised by the strength of Costco's, not only their growth, both in store and online. I think online was 16%, but also the fact that they only get 8% of their goods from China. Less than 30% of their goods come from overseas. And I would have thought a big box store like that would rely a lot more on Asian manufacturing. What do you think about Costco?
Well, remember, about 70% of their total business is food and consumables. So most of that product is sourced domestically. And then, as you said, in terms of the product they're sourcing directly from overseas, it is a much smaller percentage of the overall mix. I think Costco has been one of the most consistent models for many years, if not decades, in all of retail. And we see that momentum really accelerating in the current environment. I think any company that is offering that mix of value, convenience, and a broad assortment like Costco, Walmart, Amazon, those are the models that we see taking share across channel and across category in the current environment.
All right, Mari, great to get some time with you on this Friday. Have a great weekend when you get there. That is Mari Short. She is Columbia Threadneedle Investments Senior Equity Analyst. And next hour, we'll be speaking with Gap CEO Richard Dixon, going to get into some of these issues around tariffs and the impacts to Gap's business. But let's take a quick check on futures. We're less than 20 minutes until the opening bell. You can see we're taking a little bit of a downdraft right now, but it has been a banner month for the S&P 500, up 6.2%. So some of that superlative probably is going to stick, even if we slip a 0.4%. Much more market action coming up next. This is Open Interest.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get to high interest now. Look what's making headlines around the world. Israel has accepted a U.S. ceasefire proposal for Gaza that would involve a 60-day pause in the fighting and restore United Nations-led aid distribution to the Palestinian territory. The proposal includes Hamas releasing 10 live hostages, as well as negotiations for a permanent end to the fighting. Hamas has criticized the proposal as one-sided and has not officially responded. A colorectal cancer drug from Pfizer doubled survival time for patients with a specific genetic mutation, according to a new trial. The drug, Braftovi, cut deaths by 51% and slashed the risk that the cancer would progress by 47%. The results are a boon to Pfizer as it bets on cancer medicines to counteract weakening demand for its COVID products. And watch enthusiasts are snapping up used Rolex and Patek Philippe watches before possible tariffs from President Trump. The watch dealer Subdial saw a 160% higher than normal trading spike in April after people received their paychecks, with strong growth in the U.S. and the U.K. The phenomenon echoes another trend in Switzerland, where watch exports jumped by nearly a fifth last month. Katie?
All right, let's get back to these markets. And earnings season, it never truly ends, but at least for right now, it's winding down. And for investors, one thing is certain, and that's uncertainty. Bloomberg senior editor Eric Weiner joins us now to discuss. And you take a look at earnings calls transcript from this recent reporting season. Across industries, every CEO was dropping the word uncertainty.
Yeah, it was it's an uncertain time.
Yes.
But there's a lot of it. And when you're dealing with projections on earnings, it's much more difficult to game out if you just know what your customers are going to do. It's one thing, and that's difficult to game out. But when you have tariffs, when you have trade fighting, when you have geopolitical tensions, there's just a lot that you don't know. And this is a way for CEOs to sort of confirm to investors that they're not exactly sure where things are going to be heading in the next half.
I don't know who originally came up with it, but Howard Marks always says it's difficult to make predictions, especially about the future, right? There's always uncertainty. Yes. That's how it is. How much are CEOs and C-suites using this kind of excuse in earnings reports to buy time?
Oh, it is. It's all about buying time. The reality, though, so to Howard Marks's point, which is a great line, to his point, there is an added level of uncertainty now in that you don't know what's going to be coming in terms of levies on the products that you either need to build what you're building or that you sell. There's just a lot of price instability that's going on, and that makes it's always difficult to predict where your earnings
Is there
are going
any
to
way
go.
to quantify how much more uncertain it is now than, say, it was last quarter?
Well, it is more uncertain now because, I mean, just based on the numbers that we're seeing, the way that it's being played up is at historic levels. What's interesting to me is that it's higher than what we were hearing in 2020 when COVID broke, and it's higher than what we were hearing in 2008 during the global financial crisis. Those were deeply uncertain times. I mean, there is no game plan for COVID. So what do you do? And yet there's more of it now. And I think it's because of the rat-a-tat-tat everyday tweeting that the president does and the constant talking that just sort of flips things all of a sudden.
Yeah, it's interesting. I mean, you take a look at that great chart in this article. Uncertainty, uncertain, and uncertainties had been mentioned on earnings calls 3,100 times this past earnings season. You compare that to the second quarter of 2020, and it was greater than even then, to your point. Just quickly wrap this into the broader market because, yes, okay, we have CEOs coming out on their earnings calls talking about how unsure they are, but yet the S&P 500 jumping by 6% in May.
Yes. Well, this is also part, so if you're an investor, you're uncertain too, because it's not just that what the CEOs are saying, it's that the stock market's a forward-looking mechanism, right? You know, you're betting on where things are going to go. And if you're at this very high level, is this the time to enter? Is this a time to retrench? How much of this is real? How much of this is, to Matt's point, is just pushing things down the road? And so the uncertainty filters into the market, and that's why, although we're coming off a banner month, things have kind of flattened out a little bit, and that's sort of the recent. The tariff up and downs, and yet yesterday the court threw a monkey wrench into everything. So you just don't know. And as an investor, you really don't know where the S&P is going to head. And we're close to highs. I think we're about 4% from a all-time high on the S&P. So what do you do? When do you enter? And that's a tough call.
All right, Eric, great having you on the program. Thank you so much for joining us. Thanks. Eric Weiner there from Bloomberg News. Coming up, we discuss the tariff back and forth with Morgan Stanley's Mike Wilson, who says they think the bottom is in. So the second half is likely to be better than the first. This is Open Interest.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
The markets haven't really had to come to grips with the idea that the economy might be slowing. We haven't really had that one piece of very, bad hard data where it's like, oh, aha, like sort of, recession risks are higher than we thought.
And that was Neil Dutta of Renaissance Macro on Bloomberg Television earlier today, speaking about the fragility of markets these days. Let's discuss now with Morgan Stanley Chief U.S. Equity Strategist and CIO Mike Wilson. And Mike, it didn't feel like things were that fragile in May. A gain of 6.2% on the S&P 500, despite what we were just talking about in the last block. All this uncertainty that's out there, all this caution from corporate America. What do you make of where we stand right now?
Well, I would say the fragility got priced. We had a big sell-off, 20% sell-off plus 35% in most stocks. And I think the fragility now has moved to the bond market. That's where the main concern is now, whether it's the global bond market with JGBs, kind of getting out of bounds, and of course now with, term premium in the U.S. Treasury market. I think that's where the risk is the greatest. The growth fears have subsided because, look, we did take the off-ramp on the tariff concerns. And from my perspective, we were probably weeks away from having a recession. If those 140% plus tariffs had stayed on, I don't think there's any, it's very little doubt that corporates would have had to take action with the labor cycle. But now that it's backed off and the stock market's up, you know who watches stocks more than me and us? CEOs.
Yeah.
Okay. So stock market recovers, loosens financial conditions. They say, you know what, hold off on the layoffs because things may be turning around. And I think we bought ourselves quite a bit of time, and that's why the market's responded to that. I don't think it's unusual.
CEOs rarely admit that to us.
That's why I was laughing. They always say, I don't watch the stock on the day-to-day basis, but of course they do. Yeah. Mike, you think that the bottom is in and that the second half is going to be better, or at least you started the year saying the second half is going to be better than the first half. Do you still think that? Obviously we came down a lot, but we came back a lot, and now we're, flirting with 6,000 again.
That's right. Markets and economies are reflexive. Okay, we know that, and I think we had a unique view coming into this year. Our view is that things were already slowing dramatically, and particularly on earnings. Earnings revision breadth was rolling over. The AI story was losing steam. Okay, but all of those things now have bottomed from a rate of change standpoint, and that's what stocks care about. That was the focus of our mid-year outlook, was that the rate of change is now bottomed. It bottomed in economic terms, in fiscal, monetary policy. I think is bottomed in terms of the most hawkish we're going to see, and that is all going to now lead to a better rate of change in the second half, which the stock market is already discounting.
All right, Mike, we are just getting started. You are sticking with us through the opening bell. That is Mike Wilson of Morgan Stanley. Much more coming up at the open next. This is Bloomberg.
in Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes out in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
We are moments away from the start of trading on this Friday. Last day of the week, last day of the month. It looks like we're going to have a down day, but it's been the best month of May since 1990, since before Nirvana came out with Smells Like Teen Spirit. So S&P futures down 0.2%. Before Pearl Jam, before 9 Inch Nails. The NASDAQ futures are down 0.1% as well. 1990 was a long time ago.
Yeah.
It wasn't so long ago that Darden Restaurants didn't own the Olive Garden, which is lovely. They're ringing the opening bell today. The stock has tripled in the past 5 years. It's up 50% in the past 2 years. They're doing pretty well. First Interstate Bank System, ringing the bell down at the NASDAQ marketplace. Very interesting company there as well. But I'm going to hand it over to you, Katie, because there's a lot going on the last day of earnings season.
Absolutely. The last gasp of earnings season really delivering in a big way, and in many cases to the downside, which we'll get to. But let's start with an up arrow, and that is Ulta surging after raising its profit forecast for the year. A hard thing to do, but shares up 13% in response. Costco really sort of wiggling between gains and losses in the pre-market. It's navigating the tariffs relatively well. It's rerouting its products and examining price changes. Traders still deciding what to do with that. But the big story for me today is what's going on with Gap. Shares down 18% at the open. This company really struggling with the combo. You have weaker demand, but you also have the trade war impact on the business, coming out with some of the impact, up to $300 million, really shocking consumers, and it's going to be fascinating. We have a conversation with the CEO coming up next hour, Matt.
Yeah, I'm very much looking forward to that. Speaking of the 1990s, I don't feel like the Gap or Banana Republic has really changed much since then. So we'll ask him about his vision for the stores. Dell reported a profit outlook that beat estimates as AI demand helped them out. Shares right now rising after they were lower in the pre-market. So maybe a little bit of a sentiment shift here. Dell is just one of really a handful of companies that came out overnight and beat expectations. Bank of America says the latest turn by the Trump administration to favor tax cuts and lower tariffs could spell trouble for markets. The flip in U.S. economic strategy could incentivize traders to ditch bonds and pile back into AI and crypto trades, which would risk inflating a market bubble, according to the team led by Michael Hartnett. Are we already back to a bubble? We're here with Morgan Stanley's Mike Wilson. That seems... wow, that's a That's an interesting call. That's a way to get noticed on a Friday.
I mean, bubbles are, apparently every year now in certain things. I mean, I do agree with Michael in the premise, okay? We've been in an environment for, I would say, post-GFC, where policy has sort of elicited, mini bubbles in certain assets. The money moves to the hot kind of toy, whatever it might be. But it's nothing like the late 1990s. Like, I don't think what we're seeing in AI, anything like the late 1990s, is just not as broad. I mean, there are 4 large companies spending all the money. There are maybe 8 to 10 big beneficiaries of that spending. That was like a mini bubble. We talked about that at the end of last year. One of the reasons we were a little bit more negative on some of those stocks coming into the year was because there was a deceleration in growth. But it's not like in the 1990s when you had every enterprise overspending on equipment. You had this huge IT spending bubble. So I don't agree that we're in a bubble, but I do think the policy we've chosen, okay, which is to kind of at every sign of trouble come in and stop it. It does elicit that type of behavior where that's why you get this chasing going on because buy the dip is a function of that policy that we've been doing for 15 years.
Yeah, and I mean, largely, if you take a look over the grand scope of time, buy the dip has worked because stocks go up in the long run. But I take your point. It kind of feels like bubbles in the eye of the beholder here. But I am curious where you think we go from here, especially when it comes to the AI trade. That narrative had been out there that, it was getting kind of tired. There was a lot of existential worries over DeepSeek and cheaper models coming through.
Canceling leases.
Exactly. But it feels like, especially with these NVIDIA results that were this week somehow, it feels like a long time ago, we're still putting our foot on the gas here.
Well, what I would say is that the AI is transitioning from the infrastructure plays, okay, so the investment cycle, to the adopter phase. And that's what we've been talking about for the last 6 months, is okay, we have the compute power, it's built, there's gonna be more to be built, but that initial surge is kind of done, and now it's gonna continue, but at a slower pace. And now the fun part starts, right? Let's build the application layer. Let's build the killer applications that then can make, we can diffuse the technology into the economy. The price is coming down, that's when technology takes off. That is the essence of Moore's Law and tech diffusion. That's when you can actually get the productivity benefits. And so we've always had the view that 25 was going to be in terms of the productivity, but 26 and 27 is when we think that productivity benefit can start to come through.
Is that what drives us to 6,500? I mean, that combined with the fact that tariffs turn out to be not so bad, at least at these levels, and no one cares if we blow out the deficit another couple $1 trillion.
Well, it's another part of our rate of change argument, right? So that AI now is moving to
focus on the rate of change. That was the title of your note.
Exactly. And so like AI was a negative in terms of ROE and return on invested capital. It was a cost. And now the rate of change on AI from a broader market perspective is turning into a tailwind for margins and productivity. And that's what the market is. That's another factor in our more positive view over the next 12 months.
Well, I actually want to go back to the bond market. Speaking of the deficit, you mentioned before the break that things are actually looking a little bit fragile, not so much in the equity market, but perhaps the bond market. And I'm curious, in your role as chief U.S. equity strategist, how much time are you spending looking at the 10-year yield?
Well, I spend a lot of time looking at the 10-year in any environment because it is the pricing mechanism for all assets. As we've said for years now, 450 is kind of that crossover point, and it still continues to be a crossover point. When you get north of 450 on a 10-year, you start to see negative correlation to equity multiples. Okay, so we're right around that level. And by the way, I'm pretty sure the authorities know that as well, so they try to defend those levels. I don't think we're going to see a real defense.
Authorities meaning the Fed.
All of it, Fed, Treasury,
but not Congress. You're not.
Well, Congress is a different animal. I mean, and I've made this statement before. It's maybe controversial. I believe Treasury is somewhat captured by Congress, right? They got to fund it, and the Fed is somewhat captured by Treasury. They got to help out. So they work. It starts with the spending, and then it trickles down. And so, I don't think we're going to see an aggressive action until we get to 5. If we get to 5%, we said this last time, going to 5% is going to be bad for stocks in the short term.
Right.
However, if we get to 5%, I'm pretty confident they're going to intervene.
Well,
and that will be positive.
For better or worse, it feels like we are just glued to 4.5%. We just toggle around in a range around
until we get
number.
over it.
Until we get over it.
And then we watch for 5.
But then we go back down, and we're back at 4.5%. At least that's been the story of the past couple months. So, Mike, What do you make of that?
Well, I would say the other side of that too is like, let's not ignore what's going on in Japan. Okay, so they're way ahead of us in terms of using the money printer to kind of backstop bond market. They've been doing it for 30 years, right? And QE, they were the originators of that, and we followed suit. And so now the question is, okay, now they have inflation. Okay, and the yen, by the way, is a big part of that. So the question is, can they control the yen's movement? I don't know if they're more focused on the yen going south of 140, okay, or they're more focused on keeping JGBs from blowing out to higher levels. But it appears to me, as an observer of markets, that when the 10-year yield or 30-year yield gets to a certain level in Japan, or the yen gets closer to 140 against the dollar, we also see intervention. So these are all related. These are all related. But the fact that we're seeing these things get pinned around these key levels suggests to me that they're observing it, and they're gonna try to control that.
All right, keep an eye on Japan. We'll be doing that over the weekend. Hope you have fun too. That is Morgan Stanley's Mike Wilson. Great to speak with you. Let's take a closer look at this market right now. It is the end of the month, and things could get weird as we get closer to the close, but at least where we stand right now, we're looking at very slight losses. And you take a look at the breakdown of this market, there's more breadth to the downside. You can see that only 139 names in the S&P 500 are higher right now, much more to the downside. You have one relatively big gainer today, and that is Costco. This is an earnings story, of course. We heard a little bit from the company about how they're navigating tariffs, and shareholders seem to like that news. You also have Netflix and Palantir moving higher. You take a look to the downside, though, and this is where things could get dicey, because your biggest loser on a points basis right now is NVIDIA, chopping about 5 points off the index, down about 1.3%. Then you have Apple, Amazon, Tesla also trading to the downside as well. That could become a big weight as we get deeper into the trading day. But let's take a look at the sector level as well. It's broadly the same story, limited upside here. Consumer staples taking the lead right now. That, of course, comes down to Costco. You also have utilities in the green as well. A very defensive setup on the last trading day of the month. You go down the list right now, tech, healthcare, and energy in the red, Matt Miller.
Yeah, all red. We could turn around and see some gains at the end of the day, right? It's the last day of the month. A lot of window dressing could be in store. Coming up, one more measure in President Trump's proposed tax bill is alarming Wall Street. A real concern, especially for foreigners or investors in foreigners. We'll tell you what it is next.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, Airbnb getting cut to a sell over at Truist thanks to soft summer leisure travel trends in both the U.S. and in Europe. Next up, we have Rockwell Automation getting raised to a buy over at Barclays. The firm cites an improving sales outlook for the manufacturer. And finally, I want to highlight the ag firm AGCO getting downgraded over at Citi. The firm says it sees less upside in shares following a 30% post-Liberation Day rally. Shares currently off by about 2%, Matt Miller.
All right, thanks for highlighting AGCO. More now to on one of the most read stories on the terminal, and one that I have been obsessed by since I read it last night. It's so well written. I highly recommend you check out this story on an obscure tax item in one big, beautiful bill. Wall Street is growing wary of what is known as Section 899, or the Revenge Clause, Trump's tax treatment of what he's doing with tariffs. If signed into law, it could repel foreign investors even more. Deutsche Bank says the tax amounts to, quote, weaponization of U.S. capital markets into law that challenges the open nature of U.S. capital markets by explicitly using taxation on foreign holdings of U.S. assets as leverage to further U.S. economic goals. We're joined now by Bloomberg's managing editor for markets and editor on this story, David Papadopoulos. David, fantastic story by Yishi and Liz
I like
McCormick.
The hype.
Yeah.
Good. Well,
he doesn't say that to just everyone.
Look, so what really is in this legislation is that, you know, if another country is hitting us with taxes that we don't find fair, we're going to clobber them with taxes as well. But it seems to me like this is Trump's tax version of tariffs. Like he's just looking to take money from foreign players that want access to this market.
I think that's right. I think what it is of a piece with this administration and this president's view, Matt, that it's an incredible privilege for foreigners to have access to our markets, to have access to our treasury bonds, access to our Mag 7 stocks. And so, you know, if you want that access and you happen to be from a country that we deem is treating us unfairly from trade perspectives, pay an additional tax. If this bill, approved by the House, goes through the Senate, is signed by the president, it would be on some investors an additional tax of as 5 percentage points, and it could go up from there.
So I want to talk about the scope here, because you mentioned Magnificent Seven stocks. We're talking about U.S. assets broadly here, right? Is there any one asset class that is particularly vulnerable?
So, Katie, I would say that for starters, some of the details are still a little fuzzy for us and for others, but our sense is that the thing that would be affected the most and hit the most is income that investors earn on treasury bonds. Of course, outstanding U.S. treasury bond debt, somewhere around $30 trillion. That throws off an enormous amount of income each year, a huge amount of that. Don't ask me for the exact percentages. I don't have them in my hand.
Read the story.
Read the story. A huge percentage of that is in the hands of foreigners. And yes, if you are from, as of right now, from France, the UK, Canada, Australia, among other countries, you will now pay this additional tax if this bill goes through. Listen, it's a gambit that I suppose can work, and I can see what they're going for. But Matt, at a time when the whole American exceptionalism story is really in question, and investors are already kind of fleeing U.S. markets. U.S. markets are by far underperforming global markets. It's another thing that's sort of just like nudging investors to
leave. It's like asking investors to leave. Please take your business elsewhere, you know? Don't list your company here. Don't buy our treasuries. I mean,
it's just curious to me because typically at times like this, when a country is effectively dealing with a bit of a, trying to stem what is effectively capital flight, they usually say soothing things and they try to keep investors hanging around. May I offer you a drink? Sit down, hang out, hey, maybe a little bit higher interest rate. Here, you're right, to a certain extent, it's a little bit like, may I show you the exit door? Let me lead you there.
I mean, John Farrow always asks on surveillance if we can still expect foreigners to finance our purchases if we're not purchasing their goods, right? And this is, I think, along the same lines. Can they still be expected to finance everything we do if we're not letting them play here or profit off of our markets?
Well, there's no doubt that there's a real risk that, as amazing as the U.S. dollar is, as incredible a currency it's been as a storage of wealth and as a means of transaction, as incredible as U.S. markets are, the U.S. consumer market is, if you keep doing things that are potentially suddenly cutting them off from those markets, yes, you will discourage them to the point where they'll say, heck, I'll just simply go somewhere else.
So where does this go? Because you take a look at the market reaction to this, there hasn't really been much to speak of. I mean, reading this article, this is the most detailed account I've read about this proposal, and I'll stress that it's a proposal. What is the
Well, but it's a proposal, to be clear, but that has been approved by the House. So, yes, the Senate could tear it up. It's possible, but it is well, we don't, frankly, exactly know what's going to become of it in the Senate. There's speculation that it will indeed get thrown out. There are also some who believe that there is going to be Republican support for it in the Senate. We'll find out. We don't exactly have that answer right now. What I can tell you is this. Tax lawyers, going back 2 months ago, were initially onto this. While the rest of us were sleeping on it and Wall Street was sleeping on it, they were starting to spread the word. It only really jumped up onto the radar of Wall Street a day after the big, beautiful bill was passed last week. There was small rumblings Friday, slightly louder rumblings early this week, and then in the last couple of days, it's gotten really cacophonous out there, and
I hadn't heard anything about this. I hadn't read it all. I hadn't read a less detailed. I hadn't read a broader brush strokes account of this, to the point where I was actually surprised that Yi and Liz got so much commentary from the pros. I mean, everybody's been sidetracked by the taco trade.
Yeah, that's true.
And now we're reading about Section 899.
We should have all been listening to those tax lawyers.
Yes.
Luckily,
Matt, listen to your tax lawyer.
There you go. Luckily, of course, David Papadopoulos and the markets team had it covered. Really appreciate the time and reporting. Encourage everyone to go on Bloomberg.com and read that story. But coming up on this program, the S&P, it had a stellar month, but cracks are emerging as we roll into June. We'll tell you why next. This is Open Interest.
Season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks, and I feel less confident about my prediction that we could turn around today. We're not down by too much. S&P 500 off 0.6%. And Katie, as you've been saying, we're up 6% for the month. So it's the best month of May since 1990. NASDAQ off a little more, 1%. But with these big behemoths down so much, when NVIDIA's off 2%, it's tough to get a gain. Apple is down 1%, Google off 1%, Tesla down a little bit less. The Gap has lost fully a fifth of its value today. Only Costco, at least on this board of chiclets, only Costco is gaining here.
There you go. Well, we'll be speaking about Gap in detail with the CEO next hour. But let's talk a little bit more about the month in markets. The S&P 500 now up by only 5.5% in May. That is still its biggest May gain since 1990, by far the best month of 2025. Let's discuss with Bloomberg Markets reporter Michael Ball. And I just keep coming back to the point that sell in May, especially this year, would have been terrible advice. You should not have sold stocks heading into May.
Yeah, this year was different because of what happened in April. The rebound in May made sense from a lot of perspectives with the step down in max protectionism and tariff war. But overall, now we're going into a much more questionable period for the rest of the summer.
The best May since 1990 seems like a lot. I mean, that's 25 years ago. You were born
That's
already.
more than 25 years ago.
Oh, right, 35 years ago. No, Katie wasn't even with us.
I didn't exist.
Michael may not have existed. Is this all about the turnaround? I mean, did we just plummet so far in the month previous that this is about catch up?
Yeah, I think so. I think a lot of people just sort of went full out of the market based on the Liberation Day announcements. And then as we saw the slow pivot back into a less of a kind of confrontational approach to this from the Trump administration, everyone found themselves actually net short and started to build positions again. And, that was exacerbated by other more mechanical flows. But overall now we find ourselves with people much more balanced and probably better positioned moving forward. Right. Not so long, not so short, but, more cautious, but still in the market.
So maybe back to a more neutral stance. We have 30 seconds left with you. Give us the bearish take. What are all the things that could go wrong over the next half of the year?
Yeah, I think some of your other guests touched upon it. There is more uncertainty now. We're back to this. What will Trump do next? He seems to be on the ropes again. He's lost some credibility. He's obviously being insulted by this sort of taco trade concept. And on top of that, we haven't really got anywhere with the budget bill. Now we have lost the tariff revenue for that bill, and that was actually a tailwind for stocks because it would be more stimulative than thought. Now that may not be the case. Obviously, there's still several more weeks till we get more of a final version from the Senate. All this just creates greater uncertainty. No one wants to step in front of that. And then we're all still sitting here waiting for the hard and soft data to tell us really what the real story is. Are we going to go down to the soft data, which has been weaker, or are we going to come up to the hard data, which is still hanging in a little bit, but cooling?
All right, Michael, great to have you on the program. Bloomberg Markets reporter Michael Ball. You can read his work on the terminal by typing MLIV GO. Coming in the next hour, JP Morgan's Mira Pandit on the muted reaction to the tariff court drama and some soft data at 10 o'clock.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Stacey Lynn in Washington, where Elon Musk will join President Trump for a press conference this afternoon as his run with the Department of Government Efficiency comes to an end. Here's CBS's Jared Hill.
Ahead of his final day at Doge, Elon Musk not completely cut out of government. President Donald Trump on social media posted, "Musk will always be with us, helping all the way." On his way out, Musk sat for an exclusive with CBS Sunday Morning. Musk acknowledged he and the current administration haven't always seen eye to eye.
I agree with much of what the administration does, but we have differences of opinion.
He didn't elaborate, but one issue Musk has reportedly broken with the White House over, President Trump's tariffs, which are now back on.
On Wednesday, the U.S. International Trade Court ruled the president didn't have the authority to impose sweeping tariffs. But then 24 hours later, a federal appeals court temporarily halted the pause. Senior White House trade advisor Peter Navarro.
The Trump tariff agenda is alive, well, healthy, and will be implemented.
On social media last night, President Trump called on the Supreme Court to take up the case. In just about a half hour, former President Biden will be doing a public appearance. He's scheduled to deliver a speech for a Memorial Day service held annually at the Veterans Memorial Park in Newcastle, Delaware. Well, Google is back in federal court today.
In closing arguments, the Justice Department will ask the court to order an end to Google's lucrative deals with Apple and force the company to sell its Chrome browser. It says the company's dominant search engine is an illegal monopoly. Christopher Cruz, CBS News.
Following the announcement earlier this week from Health Secretary Robert F. Kennedy Jr. regarding kids no longer needing COVID vaccines, the CDC has updated its child immunization schedule, dropping the broad recommendation that all children ages 6 months and older get the shot. Instead, the CDC now says that children who are not immunocompromised may receive the vaccine, but should talk to their their doctor about the decision. Detroit meteorologist Ahmed Baji says the wildfires in Canada will impact the Midwest this weekend.
The way the jet stream is set up for this weekend. All winds coming in out of the north and northwest, which sends smoke toward us.
A tornado hit Henry County in the Atlanta area yesterday afternoon. Damage was reported, including to the home of the Wire actor Trey Chaney. He posted a video on his Instagram and said he was knocked unconscious. His 18-year-old son was thrown 300 feet away into the woods. The teen is in the ICU. Checking Wall Street markets are all in the red. This is CBS News. A massive music collection is now up for auction.
The makeup team working on the 1964 Beatles movie A Hard Day's Night put Paul McCartney in disguise so he could go out in public, complete with mustache and glasses. A photo booth series of 4 pics he took that day can be yours. Part of the music icon sale, Julian's Auctions, is running through Saturday. Director of Marketing, Cody Frederick.
It tells Beatles history story. It also shows the degree of fame that Paul experienced and like the lengths they would go to just feel normal.
More than 680 items are up for grabs. Wendy Gillette, CBS News.
13-year-old Payson Zaki from Allen, Texas, has won the Scripps National Spelling Bee. E-C-L-A. According to the Merriam-Webster Dictionary, that means a clearing up of something obscure. Stacey Lynn, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, so head over to YouTube and check us out there. Alex Steele out today. No worries, because the John Tucker sitting in. First choice, by the way. Well, actually, second choice. First choice was Jess Menton, and then I said anybody else.
And you got anybody else.
John Tucker
it's fine.
Sitting in for the next 2 hours, and we appreciate that. Coming up, we are going to check out Jess Menton, get the latest on what's happening with these markets. Brian Levitt's going to join us here. He's global market strategist at Invesco. Get his thoughts about these markets. How is he navigating all the tariff talk and the economic uncertainty? Michael McKee, Bloomberg International Economics and Policy correspondent. He's down in Washington. He's down in Dallas, Texas. He's been out there in Texas for a couple of days in an oil patch. So we'll get his thoughts on some of this economic data we saw this morning. Justin Teresi, Bloomberg Intelligence antitrust and litigation analyst. I think the Google trial is wrapping up here, and the question:
the final arguments, today.
Yeah, so I mean,
what's the resolution?
Exactly.
The judge has already found them liable that in the antitrust case. It's just what are you going to do at this point?
I mean, you're not breaking up Google, are you? I don't know. I mean, how about YouTube? We just got some news this week about how big YouTube is. So just crazy over there. So we'll get the latest reporting there. Let's kick this whole thing off with Charlie Pellet, business.
Hi, thank you very much. Here's what's going on. Stocks lower and our market drivers update brought to you by IBKR. Will U.S. oil production exceed 13.4 million barrels a day for April 2025? At IBKR forecast trader, the yes was recently at 39%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is June 29th. Breaking economic data, consumer sentiment rebounded in late May from one of the lowest readings on record earlier in the month, and long-term inflation expectations retreated as concerns about the economy eased after the rollback of China tariffs. The 52.2 final May sentiment index marks an improvement from the preliminary reading of 50.8, that according to the University of Michigan. Right now, we've got the Dow turning around, up 13, little changed, up less than 1/10%. S&P lower by 13, down 0.2%, and NASDAQ right now down 93, drop there of 0.5%. The Bloomberg Mag 7 index down 0.5%. 10-year 4.40%, with the 2-year 3.92%. Gold down 1.1%, $32.81 a barrel on WTI. And West Texas Intermediate crude oil down 0.7% with a 60 handle now, 60.55 for a barrel of WTI. The trading month of May is rapidly winding down. Hours to go. On to the trading month of June. Linda Dissel is senior equity strategist at Federated Hermes.
It's been crazy. It's kind of been dizzying. With uncertainty being the most common word everybody's using now, don't you think after a while we get kind of used to it? Kind of feel silly running from this way to that way. Could you imagine if you sold all of your stocks before May because you were worried about this big trade war and you missed the best May since 1990? So what you have to do is relax and, look over the long term. And actually the long term looks pretty good.
Linda Dissel of Federated Hermes interviewed this morning on surveillance. Oil stocks lower right now, falling with the price of oil. ExxonMobil down 0.6%. BP down 0.4. Chevron lower now by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele and Paul Sweeney. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with John Tucker. And we're joined by Bloomberg's Jess Medin. Jess, what are you looking at today?
Well, sorry I couldn't join you to co-host. It's because I'm filling in for Tim Stinovic later this afternoon with Carol Masters. So, but of course, I wanted to point out what's going on in retail, because I feel like so many times when we have these companies come out, it's kind of a tale of two different stories depending on which retailer we're talking about. So I wanted to start with Ulta Beauty. ULTA is the ticker symbol on this, up about 15%, on pace for its best day since April 2020 there. So quite the move there, and it's atop the leaderboard when you're looking at the S&P 500, so the best performer today. So if you're looking at that, of course, a cosmetics retailer, it actually jumped on a profit forecast that was boosted, and also analysts are flagging some of that strong execution at the company, with Citi analysts also noting that some of the competitive pressures from its new points of distribution, say like Sephora, is beginning to abate there. So looking at that A&R function, I know that Paul Sweeney likes to keep an eye on here when you're looking at those sell-side recommendations. So 16 buys, 13 holds, 2 sells so far. But then also, if you move over and you look at apparel, specifically looking at Gap, which reported earnings after the bell yesterday, that stock's down over 20% this morning alone. So it's erased its year-to-date gains, and it's also its biggest drop as far as where it's at today if it goes through the close since November of 2021 there. So if you're looking, also, unfortunately, we've talked so much about tariffs tied to the consumer. So Gap was warning, and it did predict that a tariff impact of as much as $300 million could impact the company this year, and it revealed some of that stubborn weakness at 2 of its smaller brands when it comes to Banana Republic as well as Athletica.
Have you ever heard of the lipstick index?
Of course, it's a key crucial tie to the economy. It was a little tricky though during COVID, during the pandemic, because everyone was stuck at home, so it wasn't
like Ulta. Well,
right.
The CEO, I love this quote from the CEO. Many consumers indicate they're leaning into beauty as a comfort and escape.
Well, it's also one of those things that people view as recession-proof, because no matter, and then also that's something when I've talked to portfolio managers about with, say, Estee Lauder and different companies like that, even though they've had some issues with their exposures overseas, taking some hits there, a lot of times they own those stocks because they view them as, regardless of what the cycles are in the economy, women and others that are, buying some of these beauty products, they're going to continue to do so.
So when you see macro uncertainty, do you say to yourself, I'm going to go get some eyeliner?
I mean,
that's what the CEO's
fair
pretty
question.
much saying.
I mean, I'm still, purchasing.
Exactly.
makeup.
Cooper Companies, what's going on with Cooper
Paul's
Companies?
over it. He wants to move on to Cooper Companies. So this is a medical device company. It's headquartered in California. So if you look at this, it's actually one of the worst performers in the S&P 500 if you're looking at that today too. So it has a market cap over $10 billion, but it's down 12%. COO is the ticker symbol for Cooper Companies. So it's on pace for its worst drop since March of 2020. Obviously, that was the height of when the pandemic started there. So actually what happened here, it cut its organic growth outlook. So that's the problem that's really weighing on the stock right now too. And of course, it's also a contact lens maker, and that's why people are watching it pretty closely. So yeah, exactly. So that's why you've heard that name, if it does sound familiar. So it reported better than expected results for the second quarter, but that disappointing guidance ended up spurring a downgrade by JP Morgan right now. So they actually cut their target to neutral from overweight. The price target is $76. Previously it was $110.
Regeneron Pharmaceuticals.
Yes, so this one is also actually the worst performer in the S&P 500 this morning too. So REGN is the ticker symbol for Regeneron Pharmaceuticals, down 17% at this point this morning, on pace for its worst day since April of 2011 there. So that's quite the drop when you're looking at that. And also this happens to happen when it actually had an uneven smoker's lung drug data trial here. And that's why you're seeing that, as well as if you're moving over and just looking at the not even just healthcare index in the S&P 500, but also specifically when it comes to pharmaceutical stocks, that's weighing more broadly on those shares this morning.
All right, Jess, thank you so much. We appreciate that. Jess mentioned she's not going anywhere, folks. But for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. One of the reasons John and I love chatting with Jess Metten, because we can just say, hey, Jess, what are you working on? And she'll give us three minutes and 45 seconds of gold. Hey, Jess, what are you working on?
So actually, I ran this for our Taking Stock column this morning, looking at where the S&P 500's gains ranked so far, specifically for May. So if you just look on a monthly basis, through yesterday's close, the S&P 500 was up 6.2% through Thursday. And if you stack that up, it would be the best month since November 2023. So that was obviously when we're coming off the back of that correction that happened this year. But if you look more specifically for May's, I went back, and SEAG Go is the ticker symbol for the heat map if you want to look at in the terminal seasonality wise of how the S&P 500 is stacked up in prior months. But I specifically went back to see how does that 6.2% gain in May through yesterday's close rank against history, and it's actually on pace for its best May since 1990. So it would need to stay above about 5.9% through today's close to hold that gain. And if it falls below that, it would be the best May since 1997. So we'll see where things shake out. It looks like the S&P 500 month to date is still around 6%, even though we saw things gyrating a little bit around this morning. But nonetheless, when you think about how much stocks have rallied, close to 20% since those April lows for the S&P 500, even more so for the NASDAQ 100, around 25%. It's been quite a stellar May as the calendar flips to June, which at some points in history has been a little bit murky.
Yeah, what happened to sell in May and go away?
Well, actually, Ryan Dietrich at Carson Groups talked a lot about this, as well as Sam Stovall at CFRA, or Jeff Hirsch at the Stock Traders Almanac, and Ed Clissold, of course, at Ned Davis. They're usually kind of the four best ones if you're looking at seasonality, but the sell-in may go away if you're looking at a longer time frame, whether it's 50, the last 70 years. If you move it more shorter term, the last decade or so, it hasn't worked quite as well. Some of that coincides with the ability to have more access to fractional trading that you may have not done so before the turn of the millennium. But even in the last decade or so, there's only been 1 year where June has been down. So it's not necessarily that, it's basically the third worst month this century behind September and August, but it's not necessarily a rocky month. On average, the S&P 500 over the last 3 decades has gained just about 0.2% in June relative to about 0.8% relative to the other 11 months. So it's not terrible. It's just, especially for coming off of a strong May as the calendar flips, getting closer to the summer doldrums, there tends to be not quite as strong of gains. So we'll see how that stacks up and whether stocks can buck that trend. You do have a Fed decision on June 18th. It's June 18th, and then you have triple witching June 20th, and then of course you have the end of the first half and the end of the second quarter rebalancing.
So exactly.
Exactly. And then you have the Russell reconstitution information too. So you still have different events coming up. But of course, if you're looking at the swaps expectations for this Fed meeting, a lot different than you would have thought maybe a month ago before that last decision. So they're not those expectations, obviously, that we would get any sort of rate cuts at this meeting. But we do get another update on the dot plots from the Fed. So that'll be important.
See what I told you? She takes you right down to where you need to go. I mean, it's just...
That's all you need to know.
It's Jess Metten, the absolute best. Deputy team leader and senior reporter, U.S. Equities, folks. She's at Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. She'll be sitting in for Tim Stenovic this afternoon with Carol Master and Bloomberg Business Week from 2 to 5 p.m. Wall Street time. We're looking at the markets here, kind of red and green on the screen. Not a lot of conviction either way, and that's fine for what I'm going to call a summer Friday. S&P is off 8 points, the Dow's up 40 points, and the Nasdaq's off 69 points, about 0.3%. Coming up, we're going to check in with Brian Levitt, global market strategist at Invesco, get his thoughts on the market. And then Michael McKee, somewhere down in Dallas, which is a good place to be. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Well, since our last update, we've got the Dow higher now, up by 20 points. That is a gain of just under 0.1%. S&P 500 index lower, little change, down 7 right now, down 0.1%. NASDAQ down 63, a drop there of 0.3%. A solid month for stocks, ending on a weak note today as President Trump says China totally violated a tariff agreement. 10-year 4.40% with the 2-year right now 3.92%. Spot gold is trading lower by $31 the ounce, down 1%, 32.86. West Texas Intermediate crude down 0.8%, 60.48 a barrel, and Bitcoin down 0.8%, now with a $105,000 handle, 105,300 on Bitcoin. Consumer sentiment rebounded in late May from one of the lowest readings on record earlier in the month, with the final May sentiment index marking an improvement from the preliminary reading. Costco wholesale out with earnings higher by 2.9%, better than expected numbers in the third quarter. Gap, on the other hand, the retailer slumping now by 20.2%. It reported a tariff impact of as much as $300 million and stubborn weakness at 2 of its smaller brands, Banana Republic and Athleta. Right now, Gap is down by 20%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in Bloomberg Interactive Broker Studio in Midtown Manhattan. We're streaming live on YouTube as well. You can go search Bloomberg Live Audio, and that's where you'll find us. Easy peasy. We're also on your smart TV as well. Just search for Bloomberg Originals, and that's how you find us on your smart TV here. You look at the market, we had that 20% sell-off in the S&P 500 earlier in the year as the market was trying to figure out what's going on with the tariff story. The market's kind of retraced most of that, coming back up. So now the question is, where do we go from here? So let's check in with Brian Levick, global market strategist at Invesco. He's zooming in from somewhere in the Jersey burbs there. Brian, what's the message to your clients these days? We've kind of been whipsawed, but if you look back on a year-to-date basis, it's almost like nothing happened here.
It's amazing. It's like if you woke up today, you wouldn't have realized that any of this has been going on. You see that not only in the equity market, but also the bond market. Inflation expectations, real yields, corporate bond spreads are actually not all that changed since the beginning of the year either. We're talking to our clients about having optionality in our portfolios. We don't know which way we're going to be whipsawed, but we also don't want to be out of these markets. So diversification is sometimes a cliche, but it does make sense to try and diversify your portfolio, bring down the valuation. If you're just S&P 500, you're sitting at an elevated valuation. So bring down the valuation of the portfolio, potentially protect yourself. But if things do become better on a policy front, other parts of the market, whether it's value stocks, Europe, mid-cap, should do well in more of a recovery type feel. Heads, hopefully you win. Tails, hopefully you win.
Hey, Brian, can you ditch U.S. exceptionalism for European exceptionalism?
I don't like getting rid of the word exceptionalism because I think that it gives U.S. investors the sense that they shouldn't be invested in the United States. There still are exceptional businesses, and it's still going to be an exceptional economy over the long term. But what you want to think, though, with regards to Europe is there's a couple of things happening. For one, European equities have been cheaper, but generally for a good reason. So you need a catalyst to unlock that. What you have right now, of course, is easier policy out of the European Central Bank than you're likely to have out of the U.S. Federal Reserve. You also have oncoming stimulus from some of the major European economies, and all that's leading to some weakness in the U.S. dollar. So, yeah, I would say we do want to diversify into non-U.S. stocks. Investors in the U.S. have not wanted to do that for a while. I don't think that's trading one exceptionalism for the other. It's more increasing our exposure to the part of the world where I think a lot of people have become pretty heavily underweighted to.
Red headline crossing the Bloomberg terminal I want to get to. The Supreme Court lets Trump strip 500,000 migrants of legal status. So we'll have more reporting on that throughout the day. Brian, what are we doing in the world of fixed income here? I considered a 2-year treasury and get darn near 4%, which seems like a good living there. Do I take credit risk on top of that?
Yeah, I would take credit risk. 4% is what people used to beg for, and now you can get spread above that on good fundamental corporate bonds. You can get that in a tax equivalent basis on fundamentally sound municipal bonds. So, look, I mean, you don't want to put all your risk into one place, so a diversified mix can help. But I think just sitting in money markets, you're missing the opportunity to augment the yield. And, there's yield pickup in other parts of these markets.
What does that tell you, high yield, at this point about recession risk?
It tells you it's not likely in the cards. I mean, U.S. high yield bonds have been one of the best performing asset classes in the United States this year. When we saw volatility spiking the way we did following Liberation Day, we did see a modest pickup in high yield bond spreads, but still well below the long-term average. That was comforting to us. I still view the high yield bond market as the canary in the coal mine for the cycle. So if volatility is picking up and credit spreads can't even get to average, that's a buying opportunity in our perspective. And it's our view that it's a market that is telling us that a recession is not in the offing, at least in the immediate term.
Hey, Brian, we've seen risk assets, most notably U.S. equities, kind of snap back here from some of the initial shock selling of earlier in the year. We have not seen that in the U.S. dollar. The dollar remains at its, kind of recent lows here. What is that telling you?
Yeah, what it's telling us is that there's still some concerns around U.S. policy, and there's still some greater excitement around being in currencies outside of the United States. So while the U.S. has essentially gotten back to flat, you've seen substantially higher returns in other parts of the market, particularly Germany, other European countries, as well as some emerging markets. So what it tells me is back to that diversification story. It's not a collapse in the dollar, but it's a rebalancing away to some extent, or diversifying away from it. Remember, the U.S. dollar was at very elevated levels, and that was based on U.S. growth being stronger than the rest of the world. And, that starts to narrow as we have concerns about ongoing trade policy.
Brian, thanks so much for joining us. Really appreciate it on a summer Friday. Brian Levitt, global macro strategist at Invesco. Right now, let's go down to Dallas, Texas. Michael McKee is in our Texas bureau down there, and I can tell you, he does all the economic stuff for Bloomberg. We know Michael McKee. Yesterday, he was smack in the oil patch. We're talking like Midland, Odessa, Texas, oil, gas, the setting of my new favorite TV show, Landman. And I don't know what he was doing now. Usually that's Alex
He's
Steele
applying
territory.
for a job as a roustabout.
Michael McKee, a roustabout on an oil rig. Mike, thanks so much for joining us here. We had some economic data today. It seems like inflation, Mike, is still pretty much being contained here. What did you take away from some of the PCE data we saw this morning?
Well, basically, you're right, Paul. We're seeing inflation come down. We're just 0.1% over the Fed's target on the PCE headline. We came in at 2.1% this month. So the Fed is very close to being able to say soft landing, except, of course, for the tariffs and everything else that's going on with the Trump administration. And that's the hard part, is consumer spending held up, wasn't great, but was okay in April after a lot of people pulled forward purchases into March and February. So where do we go from here? That's where the Fed is stuck, because minute by minute we get new court decisions that make the tariffs on, make tariffs off, et cetera. So they can't really do anything. So we're still sort of still in this Groundhog Day of waiting to see what happens next.
All right, so the Fed's dealing with uncertainty, too. There's a meeting coming up, the 18th, and this time around we're going to get the little dot things. What are we going to learn?
Nothing. When you talk to Fed officials, and this was, of course, before this last week of back and forth court decisions, most of them would say, take these numbers with a grain of salt. We just have to basically act as if the current conditions are going to last, and we have no reason to think that they are going to. But we don't have anything to base a new forecast on. So I think when you get the decision, the dot plot and the new summary of economic projections, that they will have a shelf life of an hour or so, and then we'll be back to, well, what happens next?
Mike, we also got the University of Michigan data out for the month of May, and we showed an improvement from kind of the shocking decline we saw last month. But inflation expectations, while they've come down, are still pretty darn high here. What would you learn from the Mich data?
We didn't learn a whole lot, except that people weren't feeling as bad about the economy in April as they were, or in May rather, as they were in April. We saw a rise in consumer expectations, but it's still below 50. And it didn't match at all the rise in expectations in the Conference Board survey earlier this week. So it leaves us somewhat in limbo on what people think about the economy going forward. As you mentioned, the inflation numbers come down a little bit, but they're still very elevated. And right now, Conference Board and Michigan match in what people think is going to happen over the next year. Now, the drop in the inflation expectations may be because gasoline prices have come down a little bit and food prices have stopped rising as much. But at this point, people still think that the president's policies are going to be inflationary, and that's the consensus of most economists. So it's not telling us anything new. It's telling us that not much has changed.
Way back when Arthur Burns was called in to meet with Richard Nixon, we know the outcome of that. Yesterday, was it, that Donald Trump met with Jay Powell? What's going to be the outcome of this meeting, if anything?
Nothing, I don't think. Jay Powell reiterated the Fed doesn't know what they're going to be doing, and here's where we see the economy at the moment. The president tells us that he told Jay Powell to cut interest rates, but the Fed isn't going to do what the president asks just because he's asking if economic conditions don't warrant it. What it may be is that if things do turn out better than expected, then Donald Trump can come out and say, well, I told you so, I told Powell so, and they didn't listen to me. But if things turn out as economists expect, then Powell has the better response.
All right, Mike, thanks so much for joining us. Michael McKee, international economics and policy correspondent for Bloomberg News from our Dallas bureau. He's got to get back to New York. Flying back to New York on a summer Friday, what could go wrong? I mean,
Into Newark Airport?
Yeah, I don't know. I don't know where he's going, but I've always avoided Friday traveling in general, particularly in the summer. That's just kind of been my strategy all along. Sometimes it works, sometimes it doesn't. Markets kind of mixed here. No real direction on the tape. The S&P is down 6 points. Coming up, Justin Teresi, Bloomberg Intelligence antitrust litigation and policy analyst. Google trial, closing arguments today. What's going to happen there? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. Solid month for stocks, ending on a weak note as President Trump says China totally violated a tariff agreement, spelling fresh turmoil for the president's trade agenda. We got stocks trading mixed right now. Little change on the S&P, down less than 0.1%. The Dow higher by 55. That is a gain of 0.1%, while the Nasdaq Composite Index is down 47. For Nasdaq, a drop right now of 0.1%. Our Mag 7 index down now by 0.2%. The 10-year at 4.41% with the 2-year 3.93%. Spot gold today trading lower by $43 the ounce, now at $32.74, down 1.3%. West Texas Intermediate crude down 4.10, $60.71 a barrel, and Bitcoin now lower by 0.6%, 105,475 on Bitcoin. Lots of economic data, and it looks like U.S. inflation is playing hide and seek. Bloomberg's Vinny Del Giudice explains.
After jumping at the start of the year, the Federal Reserve's preferred gauge of inflation showed little change for a second month. The core PCE price index rose just 0.1% in April as Americans hit the brakes on household spending, reflected in a 20% drop in imports. While the impact of White House tariffs have so far been muted, the figures illustrate an undercurrent of anxiety. First quarter economic growth was the weakest in nearly 2 years. Vinny Del Giudice, Bloomberg Radio.
And one other economic note, consumer sentiment rebounded in late May from one of the lowest readings on record earlier in the month, that according to the University of Michigan. A colorectal cancer drug from Pfizer doubled survival time compared to the standard of care for a subset of patients, data that could change how physicians treat a particularly deadly form of the disease. Right now we got Pfizer shares up by about 0.3%. Again, recapping, the Dow higher by 36, up 0.1%. S&P down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're streaming live on that internet thing, so go to YouTube, search Bloomberg Live Podcasts, Bloomberg Live Radio. Either one will get you there. If you got a smart TV and you're doing that thing, go search Bloomberg Originals, and that's where you'll find the video feed as well. You know, when you think about big tech and regulation, you don't think about it a lot because the U.S. has generally, since the beginning of time, kept a pretty light touch. And one could argue that is one of the reasons why the U.S. leads in technology. That may be changing a little bit for some of the big tech giants. In fact, Google's on trial, and they had their closing arguments today. This was about their search case. There's a lot of litigation out there for Google, but this is about their search business. Justin Teresi joins us, antitrust litigation and policy analyst for Bloomberg Intelligence. He joins us here in our Bloomberg Interactive Broker Studio. Justin, talk to us about this particular case and where are we with this case today?
Sure. So you're right. No shortage of litigation right now from an antitrust perspective facing Google. But in this case right here, today is the closing argument in the remedies phase of the litigation. So we already had a liability finding against Google last summer regarding its search and how it operates, maintaining a monopoly in search. Today is the closing argument of this trial. It was about the last month or so about what to do about that. What's the remedy going to be in the litigation?
Okay, so as the judge looks for a remedy, he found them, were an illegal monopoly almost a year ago. Since then, let's see, we've had OpenAI come on the scene. We've had other competitors come on the scene. The landscape has changed.
You're right, and this is the problem, I would say, with a lot of these antitrust cases when they're brought against big tech, right? Things are changing so fast that by the time you get to a liability finding or a remedies phase, the landscape has changed quite a bit when you're trying to figure out what the right fix for a problem is. But to your point, that's right. A big star of the show here for the remedies trial was AI and what the future looks like in terms of search. Just last month, we saw ChatGPT kind of launch this shopping, function on ChatGPT that'll obviously compete with Google now. So to your point, things are really changing really quickly. Search as we know it probably won't look the same a decade from now, whether or not this case was actually brought.
So many times each day I say, I can't believe believe, Google, how good this search is. Because what do we do before search? John and I would have to get up off the sofa, go to the Encyclopedia Britannica, which was published in 1964 in our house, by the way, and hope it had what you were looking for. Now it just...
And if I get an electronic device with, I don't know, Bing on it, the first thing I do is eliminate that and go to Google.
Exactly. So, I mean, no user anywhere in the world has a problem with Google, I don't think. What are some of the likely remedies?
Yeah, you're really hitting the nail on the head here, right? And to your point about Bing or Yahoo or DuckDuckGo, a lot of folks prefer Google because Google's search algorithm, it's really been able to develop in a way that others haven't, and that's what this case is all about. Has Google maintained its monopoly by steering more searches to its products so that competitors really can't get to a place where you might say, hey, I want Bing, I don't want Google on my phone, right? So what we're probably going to see here, I would say, is that Google has all these agreements with companies like Apple, for example, where it pays Apple actually $20 billion a year so that its search properties are what's underlining your searches on Safari or Siri when you're using those on your iPhone. Those probably go away. That's a likely remedy that we see here, is that to kind of fund that exclusivity, that's probably something that's coming to an end, more so than seeing a divestiture of the Chrome browser.
I would argue, if I were a financial analyst following Google, I'd be like, that's a net positive. That saves me $20 billion, and you think I'm actually going to lose users and ad revenue? Are people going to switch then to Safari or Bing? I'm going to keep them as users, and I don't have to pay $20 billion for that access.
Right, and that's a great question, too. Does Apple even stop using Google as its search backdrop if it's not paid by Google to use it? To your point, John, right? Yeah. People love Google. So how that rolls out, we don't really know, but I think a divestiture, that's probably not actually tackling the problem that's been identified here by the court the way that ending these kind of exclusivity agreements would.
And they're not out of the timeout chair just yet, because there's other stuff happening with Google, right?
That's
Is it the
right.
same judge in the same court?
It's not. Everything seems to be happening in D.C., or around D.C., I should say, but Google's advertising technology stack, its digital ad stack, that was also found to be a maintenance of monopoly violation last month by Judge Brinkema in Virginia. So we're rolling into a remedies phase in that case. There's actually a hearing about some of the documents that'll be exchanged in that case today, but we're going to have a remedies trial there now in late September. So really not out of the woods here yet for Google and its antitrust liability.
So going forward, what do big tech, I mean, is this the new normal now, this type of regulatory review of the Amazons, the Googles, the Microsofts of the world? Because again, I grew up in a time where the last 30, 40 years, all you had to worry about was Europe, the European Union. And all that we learned from Microsoft 30, 40 years ago, just write a check and they go away. And that's still the case today. What's different now is, wait, now my U.S. regulators are starting to beat down on me. That's something completely different.
Yeah, and I think a big question here remains to be seen. And it's kind of like, what are regulators looking for? What is the ultimate goal here that antitrust enforcers have, right? Because same thing with the Meta trial that also just concluded in D.C. Not the strongest case, frankly, by the FTC, I think, the last few weeks as that's rolled out. So if the end game isn't looking like it's going to bring these large-scale kind of antitrust changes to these companies that regulators are looking for, perhaps we're looking at a situation where Congress actually has to step in and act here if that's really the solution to what we've said is some kind of societal problem. Whether or not it is, that's a bigger question that goes beyond our time together today.
I thought this administration was supposed to be regulation light.
Yeah, I think there were a lot of thoughts on that, and I think this administration might be more apt to do things like settle a proposed merger when there's a problem with it versus run right into court like the last administration did. But there certainly is this streak of populism we see in this administration that's really different than that traditional old, GOP kind of approach to business-friendly regulation and enforcement.
See, I think the markets take care of itself. Like if I'm a kid in a garage in Palo Alto, I'm thinking, well, Google's got the search business. I'm not going to invent anything in search. Meta's got the social business. I think I'll look somewhere else to be the next rock star. I don't know. Maybe we'll see how it goes. But anyway, Justin Teresi, thanks so much for joining us. This gives you a job. I mean, you can follow all this antitrust litigation stuff and Jen Rhee. So we got two of the best. So really helping us out there. Justin Teresi, antitrust litigation and policy analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. And again, one of the many, many, many reasons why Bloomberg Intelligence is the best research platform on the street is we have the litigation folks in D.C., in New York, telling us what's important, and what's not. Jody Laurie from Bloomberg Intelligence, she's going to be joining us coming up. Cruise ships. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, John Tucker sitting in for Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of my first memories of the early days of the pandemic, John, were the cruise ship operators rushing to the credit markets and selling debt because they knew that if they're not sailing, there ain't no cash coming in. So they better fortify their balance sheets. And boy, were they smart. And that's one of my first memories there. Jody Laurie joins us, senior credit analyst for Bloomberg Intelligence. She does cover a lot of the big consumer companies, the leisure companies, including the cruise lines. Jody, I know you and your team, you guys had a survey out there kind of asking people, hey, are you going to travel? Where are you going to travel? On what? Are you going to cruise? All that kind of stuff. What did you hear back from your survey here? What are people doing?
Paul, this is becoming such a fun project for us. This is actually our fourth survey that we've run. We run it every half year. And what was interesting this time around, and not fully surprising, is consumers were a little bit more hesitant about spending money on travel, but they're still very much prioritizing travel over goods. Now, we ran the survey at the end of April into the beginning of May, and given every week is a different week when it comes to the tariff discussion, inflation discussion, who knows, maybe it would be a little bit different today, but I would argue that given what we're seeing with consumer sentiment, given what we're seeing with concerns about inflation, that a lot of the data still holds up. So consumers are still a little bit scared about inflation, more so than November. They might not be spending as much more in 25 versus 24, but they're still planning on living large, shelling out on nicer accommodations, shelling out on eating out, which was actually a little surprising to us.
So living large, at last check, that costs money. Where's the money coming from? Where's it going on the credit card?
So, John Tucker, we actually looked at the income cohorts of the different people that we polled. So we polled 1,000 consumers throughout the U.S., those who have vacation spending as a priority for this year. And one thing we saw is that for higher income, unsurprisingly, higher income is a little bit more agnostic and they're more willing to spend. Now, if you start looking at that lowest income level, there is a little bit more hesitancy, unsurprisingly. And if you look at the middle income, it's a little bit more mixed and also plays into gender roles and age. So gender, age, and income are all factors that we're seeing a little bit differences. But by and large, unsurprisingly, the highest income is not really feeling the pinch as much.
Jody, you follow the cruise lines, and they see bookings. Boy, people book their cruises like well in advance. So I always remember these cruise companies have good, I guess, forward look into their bookings. What are they telling you guys these days?
Paul, the biggest question that I'm constantly asking them is not even so much on bookings, because we kind of get a good sense of bookings, particularly with our alternative data, the Bloomberg second measure data. We can kind of get a feel for what bookings will look like, particularly during wave season when most people book their cruises a year out.
What is wave season?
But wave season, it runs at the beginning of the year. So the first 3 months of the year is when people book a lot of their, Although what's interesting, since the pandemic, it's actually extended into Black Friday. So there's a lot of deals on Black Friday, and people have been taking advantage of it and booking their cruises way in advance of normal. So that's really great for them because they have a really good insight into how many people are going to be cruising and what the appetite is for cruising, so they can sort of plan accordingly. What I think is more indicative of consumer sentiment and consumer health is the onboard spending piece. And we have had discussions with some of the largest companies, and we've pressed them on it and said, okay, what are you seeing in terms of onboard spending? And a lot of them are saying that right now, we see onboard spending the same as what we've seen the past few years. People are spending on the drinks, they're spending on the excursions, they're doing all those components. But we've also gotten the sense from some of the companies that they're monitoring that metric a lot more closely and more daily as opposed to, say weekly or monthly.
So in response to the cruise companies, to the resorts, like you say, do they offer more deals given the data that you guys just released?
I would say that for the resorts, for the cruises, we're seeing a lot of teaming up also. So when you think of the Marriott MGM, for example, so that they have more of a platform, more of an insight into what type of consumer wants what package, I think that's key. And we're going to see more and more of that. This data aggregation, this sense of, the ways that we can leverage, AI is the word of the day, right? Or the phrase of the day. And I think the most powerful component of that, when we look at data analytics, is that we can really sort of zero in on people's preferences in terms of what type of vacation they're looking for, what sort of packages they're looking for, how to sort of get them to spend the most money and at what point. And so I think they're just going to get smarter and smarter, and we're going to see more and more of these partnerships similar to MGM and Marriott, or even MGM and Carnival.
Yep. Jody, great stuff. Thank you so much for joining us. Jody Laurie, Senior Credit Analyst, Bloomberg Intelligence. Check out all her work in the BI Go function here. I tell you what I learned way too late in life is the all-inclusive trip. I wish I had known that when I had 4 kids and they were crushing me with all the drinks and snacks and things like that. The all-inclusive.
Wait, your kids were drinking on the cruise?
No, but they just go get the smoothie. Smoothies, $5. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. S&P futures, -15. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, lots of smart discussion. Henrietta Triz, Managing Partner and Director of Economic Policy at Veda Partners. What's the latest on the tariffs? I tell you, there's nobody we speak to that knows what's going on Capitol Hill better than Henrietta Triz. Maybe she'll know, give us some sense here. It's Friday. That means we talk municipal bonds. Eric Kazatsky, Bloomberg Intelligence. He's a strategist over there on the muni bond space. Geetha Ranganathan joins us. She is the guru in all things media for Bloomberg Intelligence. Get her thoughts about Comcast. They're opening up, John. You get this big Universal Park they opened up in Orlando. Monster.
Are they like Disney wannabe at this point?
Yes, and they are good. I mean, again, just like theme parks have become the main business for Disney, quickly theme parks are becoming a huge business for Comcast. So we'll get the latest there. So a lot of good stuff coming up this hour. Let's kick it off with probably the most notable cruiser we know, Charlie Pellet.
Love cruising. Best vacation ever, without a doubt. We've got the Dow, the S&P, NASDAQ. Choppy waters, not so smooth sailing right now with the S&P dropping 12 points, 58.99. That is a decline right now of 0.2%. Last trading day of the month for stocks. The Dow Jones Industrial Average down 33 right now, down 0.1%. We've got NASDAQ down 74, a drop there of 0.4%. A solid month for the U.S. equity market, ending on a weak note as President Trump says China totally violated a tariff agreement. The 10-year at 4.42% with a 2-year 3.93%. Gold down $38 the ounce. That represents a drop of 1.2%. West Texas Intermediate crude down 0.4%, 60.70 for a barrel of WTI. As I mentioned, the trading month of May is behind us. It is on to the trading month of June. Brian Levitt is global market strategist at Invesco, and he was a guest right here on Bloomberg Intelligence.
It's amazing. It's like if you woke up today, you wouldn't have realized that any of this has been going on. You see that not only in the equity market, but also the bond market. Inflation expectations, real yields, corporate bond spreads are actually not all that changed since the beginning of the year either.
Invesco's Brian Levitt interviewed here on Bloomberg Intelligence. Ulta Beauty's first quarter results topped Wall Street estimates, signaling that shoppers are keeping up with non-essential beauty purchases despite growing economic concerns. Ulta right now is up by 12.6%. This on a down day for stocks when the S&P is down 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with John Tucker, and we're joined by Bloomberg's Natalia Kinjevich. Natalia, what are you looking at here?
Let's start with the retail sector, guys. I'm looking at the Gap, ticker GAP. The stock is down by 20%, guys. It's a big move, the biggest actually since 2021. It's the most interesting. Exactly. So the company, the move is largely driven by companies' expectations of how tariffs can impact sales. It said that tariff impact can be somewhere between 250 million to 300 million. And of course, we also saw some weakness in its brands Banana Republic and Athleta. At the same time, Gap and Old Navy, so these are the biggest brands in company's portfolio, they performed pretty well. So we see that sales, comparable store sales are up by 3% and 5% respectively. And the company continues to execute strong strategy, attract celebrities to promote those goods. So it's kind of not such a terrible report, but the market is so sensitive to any headlines on tariffs.
How much of what they make comes from countries that have tariffs?
So CEO was on Bloomberg TV actually earlier, and he said that the goal is just like to mitigate the impact of tariffs to like a minimum. And I believe he said that the goal is for any specific country, like the exposure to be not above 20%, if I'm not mistaken. Yeah, so they really want to try to reroute some of those supply chains.
All right, what else you got?
Airbnb, travel. So we see that Truist Securities cut recommendation to sell from hold. The ticker for the company is ABNB. The stock is now it's more or less flat. However, the stock is now trading at $128, but the target is now for Truist is 106. So it's almost a 20% decline from yesterday's close. Analysts are saying that summer leisure trends both in the US and Europe are not fully anticipated by analysts. At the same time, we also remember the latest earnings report, and the company really warned that outlook for the second quarter can be not as great, because they see a slowdown in sales and in travel demand in North America. However, globally, Asia Pacific region and Latin America are some of the brightest spots.
All right, one more.
Costco.
There we go.
Yes, the stock is up. Yes, by 2.3%, ticker COST. The main takeaway here is that the management wants to increase prices item by item. Okay. It's not going to be like a full large-scale increase in prices, and they're working on supply chains as well. And more or less, analysts are really happy, and they say that same-store sales are strong enough for company to mitigate all tariff impacts.
All right, Natalia, thank you so much. We appreciate that. Natalia Kanievich, Bloomberg News, giving us some of the movers there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Earlier across the tape, that the Supreme Court is going to let President Trump strip 500,000 migrants of legal status. Let's get the latest reporting on that. Greg Storr, Bloomberg Supreme Court reporter. Greg, what did the court rule here today?
So the Trump administration is trying to end so-called parole status for people from Cuba, Haiti, Nicaragua, and Venezuela. And what that is a temporary status that lets people live and work here because their home countries are in crisis, and it's designed to be for humanitarian reasons. And the question was whether the Trump administration could do this categorically rather than on a case-by-case basis. A lower court had blocked the Trump administration from doing this. The Supreme Court today lifted that block. That means these roughly 500,000 people, we don't know the precise number, no longer have those protections, and many of them are open to or subject to immediate deportation.
Who are these 500,000, and did they come here legally?
They did come here legally. They are allowed into the program. They were given this status by the Biden administration, and they have work permits. They are allowed to be here, but it was always understood that this was a temporary program. It was done on humanitarian basis. You have to get into this program, you have to get a U.S. sponsor, you have to get U.S. government approval, and you actually have to pay for your own flight into the country. But again, it was always designed to be temporary, and what the Trump administration says it's doing is we're just ending that temporary status.
Are these widows and orphans, or are they hardened gang criminals? Do we know anything more about them?
Well, it's a big group of people, so undoubtedly there's a mix. But unlike some other things, these are not people who just slipped across the Mexican border. They did have to get that U.S. sponsor. The government had to actually approve them. So there has been some vetting of these people going in. It is certainly not the case that, it's unlikely that a big category of them are going to be, hardened criminals, to use your expression. But we don't know a whole lot, and we don't even, as I suggested, know the exact number of people, because some of them may have left. We know that there were about 532,000 people who came in initially under these programs. We don't know how many remain in the country under that status. Some of them may have some other protected status and maybe aren't subject to immediate deportation, but certainly a big chunk of them will be subject to it.
All right, Greg, thank you so much for your reporting. Really appreciate it. Greg Storr, Bloomberg Supreme Court reporter. Appreciate that. Let me get the latest on what's happening down in Washington, D.C. When I say the latest, people, we're doing it on a hour-by-hour basis. I think it's not day-to-day. But somebody who actually has a this is what they do. They kind of tell us what's going on in Washington, D.C., and they're so valuable to us and our audience. Henrietta Trez is the absolute best, managing partner and director of economic policy for Aveda Partners here. Let's just start with tariffs, Henrietta. The courts are kind of going all over the place. What's the understanding in Washington within the administration of kind of where they are these days?
Well, I appreciate you having me on. The administration is preparing for all avenues, and fortunately for them, they have so many available pathways to perpetuate the president's trade wars and to keep the tariffs on. And I think that's why the market is not responding with ebullience today or even yesterday that the IEEPA tariffs have been taken off. The reality is we need to pivot to Section 301, which of course was the entire rationale and the authority used to wage the trade war with China in the first Trump term. We need to get very seriously in the weeds on sectoral tariffs, which are coming across myriad sectors: semiconductors, pharmaceuticals, copper, trucking, air, cargo, freight, the whole shebang. And then we really need to start thinking about stacking those tariffs, what that might mean for individual sectors. And then, of course, some components of the tax bill that also include effectively tariff strategy and authority for the Treasury Secretary. Something that's really captured the street's attention in the last couple of days is Section 899, which creates an authority for the Treasury Secretary to effectively tax entities from foreign nations, including individuals that have unfair trade practices or unfair tax practices on everything from the digital services trade and beyond. So there's a lot still to do. And, the trade wars are going to be a hallmark of President Trump's second term, just like they were in his first.
Okay, did you just tell me that uncertainty is far from concluded?
I think it's ramping up. I mean, we had a brief reprieve when IEEPA was the law of the land, and now we're in, get out your numbers, 201, 232, 301. This is what you need to pay for now, is the expertise around these various specific components.
So I guess there's more avenues for the administration to pursue trade policy, but my understanding is they take much longer than just saying we're going to have a 10% across the board tariffs, which the president can do with the stroke of a pen. What's the timing associated with all this? It sounds complicated.
Yeah, great question. So the IEEPA statute was the fastest, bluntest, and easiest instrument that the president could have taken up, and that's exactly what he did. But we have a number of components that are already in the pipeline, already in effect, and also that can easily be effectuated. So, for example, the Balance of Payments Authority, which is something Ambassador Lighthizer, President Trump's first trade representative, talked about in the run-up to President Trump's win in November of 2024, which is immediately impose a Balance of Payments Authority, which is an ad valorem duty of up to 15% for 150 days on any nation where there's a trade deficit. That can happen very quickly. Customs and Border Protection can change tariff rates within 12 hours. So that's something to be mindful of as sort of an IEEPA replacement. The drawback is that it's capped at 150 days unless Congress authorizes an extension. It's my base case expectation that Congress will not authorize that extension, mostly because many Republicans do not support the president's tariffs because, of course, they are taxes on consumers, and they're seeing the blowback in various industries like the farming sector and small businesses and manufacturers who are struggling with the lack of imports from China right now. But compounding that are the Section 232 tariffs that are already in place, including on automobiles and automobile parts. Those rates are 25% for the most part. They can be ratcheted up overnight. The president also has a series of investigations already in the works whose comment period have ended, and they can release their findings and impose new tariffs pretty much at any time now. That applies to the semiconductor space, the pharmaceutical space, copper, and a couple of others. And then I think the most important to be mindful of is Section 301. This is the authority to tariff everything coming in from China. In Trump's first term, we did that across lists 1, 2, 3, 4A, and we haven't done it on list 4B, but this is $550 billion worth of trade, and there is no upper bound on the tariff rate that can be imposed under Section 301 that I've ever been able to find. So we're mostly at 25% now. No reason that can't go up to 50 or 145.
A reporter asked the president the taco question, and you heard his response, I think. The Trump always chickens out on tariffs of this sort. He was angry, and he sounded even more emboldened. What was your take?
It just reminded me of the 2018 escalation. I'm sure y'all remember it at the time. I'll never forget it. The president got upset in the Oval Office and he escalated tariffs almost immediately and during the hot summer months. We saw that repeatedly throughout 2018, and I think that we're looking at it again here. I mean, these are very emotional, heady times for him, and when he puts these tariffs on and hears something like the street doesn't take him seriously, that's got to be pretty embarrassing. So obviously we're seeing escalation today.
All right, that's tariffs. Let's move on to another areas of your expertise, which is Capitol Hill legislation. We've got a House tax bill, I guess. The Senate's now looking at it. Where are we with that important piece of legislation?
We've got a couple 72 hours before things really kick off on the Senate side. The House passed their bill, as you point out. It is very comprehensive and really thread the needle between a whole host of factions that just don't exist on the Senate side. So, for example, the deduction for the SALT cap is very generous in the House passed legislation, probably about $200 billion more generous than anything the senators will agree to. So that's going to have to be something that they change when the Senate takes up their bill. I suspect it'll probably be about 3 weeks before we see any legislation from the Senate Finance Committee. This is the most critical committee in the Senate, unlike on the House side where we have Energy and Commerce that had to cut I believe it's $715 billion from Medicaid, and then a separate Ways and Means Committee that tackled a $4 trillion tax package. That's all one committee on the Senate side. So we're going to get their package late in the process, probably towards the end of June. They're hoping that they can get legislation through their chamber by the 4th of July, which I think is distinctly possible and puts us on a path to get that bill passed and signed into law by the July 24th recess in the House or the August 1st start of the recess in the Senate.
Since it's breaking news, do this in 20 seconds, the Supreme Court ruling letting the administration strip 500,000 migrants of legal status. Can you speak to the importance of migrants to the U.S. economy real quick?
Yeah, migration to the U.S. economy is critical for the housing sector. One of the sectoral tariffs I talked about and I didn't mention was the lumber tariffs. I mean, these are critical for the housing industry, and the combination of kicking out 500,000 immigrants and imposing tariffs on lumber has got to be brutal for that whole sector. I really would focus on that.
Henrietta Trez, thank you so much. We appreciate it. Henrietta Trez, Managing Partner and Director of Economic Policy at Veda Partners. Somehow she keeps all that Washington legislation, tariff stuff, tweets. Somehow she keeps it all in focus and she explains it to us because I can't follow it, but she's the expert there. Market's a little soft here on this trading day. We'll keep an eye on that. S&P's off about 18 points. Coming up, Munis in Focus. Eric Kazatsky, Bloomberg Intelligence. We're talking the municipal bond market. I'm telling you, the tax equivalent yields are very attractive there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Stocks lower. Solid month for the U.S. stock market, ending on a weak note as President Trump says China totally violated a tariff agreement, spelling fresh turmoil for the president's trade agenda. Keep it locked into Bloomberg Radio for the latest on any trade developments. S&P right now down 17, drop there of 0.3%. The Dow down 43, drop there of 0.1%. NASDAQ down 99, a decline of 0.5%. 10-year at 4.40% with a 2-year 3.92%. Gold down $30 the ounce, down 0.9%. West Texas Intermediate crude also down 0.9%, 60.39 a barrel. And Bitcoin right now trading lower. Right now we have got Bitcoin down by 0.6%, 105,500 on Bitcoin. Earnings news, lots of companies reporting. Costco posted better than expected earnings in the third quarter. Costco shares, they're gaining 3.1%. Gap now slumping by 20.6% after reporting a tariff impact of as much as $300 million. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you by BAM Mutual. Put America's strengths to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's go to that municipal bond market. Eric Kazatsky, Senior Municipal Strategist, Bloomberg Intelligence, joining us from Princeton. Eric, talk to us about the municipal bond market here. We've had a turbulent markets in general this year. How have the munis performed?
Yeah, hey, good morning. They performed about as well as could be expected given the macro backdrop that everyone's facing in the fixed income world, as well as sort of the other things that have sort of weighed heavily on the market, like questions about tax reform for the first few months. Now, those being aside, I think we've had a pretty constructive May, all things considered. Munis are up about 5 basis points. Doesn't sound like a lot, but our BI index is up about 16 basis points, which is pretty promising, being that we're a little bit longer duration. So showing that people are still willing to sort of, stretch a little further in the muni market.
Paul is all about the tax equivalent yield or the tax-free equivalent yield.
Yeah.
What is it right now? What's the average?
I mean, you're close to 10%, which is pretty amazing. And, from a historical standpoint, it really sort of stands out as, a statistical anomaly. People who are sort of shying away, and we're not seeing an abundance of inflows coming in, it still could be just like a call on question about fixed rates in general. Could they be going higher? Investors don't want to leap back in. But look, if you need to shield income, munis are really sort of that safer haven that we continue to talk to clients about.
Are these issues like a monorail in Peoria? That's, how iffy are they?
We've always had a certain degree of speculative projects within the muni space. And I think the latest headline that was addressed this week, dealt with the American Dream Mall. And
Jersey guys.
That we've
You
seen
got 3
there.
Jersey guys here. What happened to American Dream Mall along the Turnpike?
You know what? I think it was a good idea for the land space there. Came online in the middle of a pandemic, never a good recipe. But, look, there's a lot of deep pockets that hold a lot of that deal. So, my faith is that the prices are still holding up, and that's a positive sign of things to come, in regards to that bond deal.
All right. So talk to us about seasonality. Is there seasonality in the municipal bond market? Do some people buy bonds at certain times of the year?
Yeah, I mean, look, the seasonality is definitely a thing for munis. We see it around tax time. We see it more so during the summer. And when we talk about seasonality, we're really talking about a lot of more cash coming back into investors' pockets that, in theory, should be reinvested back into the market looking for a home, right? So we do have that supply-demand imbalance going on, more on the demand side. However, there has been a lot of supply. So we think that, this June, while we think returns are still going to be positive because of that technical, backdrop. We think that a lot of the issuance that's coming online could mute that a little bit.
Are there any questions about revenue at this point?
You mean in terms of local credits,
in terms
state credits,
of
things like that?
taxpayers paying their tax bills and being able to do all that stuff?
I think the bigger issue really sort of revolves on how a lot of these, municipalities are going to fare now that all the COVID and pandemic money has fully rolled off. And, I think that if we had to sort of play this out and get a crystal ball of the next 12 to 18 months, you're probably going to see a lot of cost cutting and almost like a little Doge-esque, approach to fiscal conservancy on the local level. Hopefully some of those cost cutting efforts will trickle down and result in a little bit of belt tightening and better balance sheets.
All right, what's the fun issue that you're looking forward to over the next several weeks or months?
I think when it comes to issuance, we're really sort of focusing on, what's coming from a trend standpoint. And healthcare really sort of seems to be the, deals of the day when you look at the forward calendar. Pretty sizable ones coming up, almost $1 billion in healthcare issuance alone. If you look at returns this year, hasn't really been one of the bright spots. But, I think we can probably get a metric on how well received these deals are going to be in the marketplace, on how spreads are going to behave over the next several months.
All right, very good. Eric Kozatsky, we appreciate that. Eric Kozatsky covers all of the municipal bond business for Bloomberg Intelligence. We chat with him every week and get the latest on the municipal bond market. Again, some of those tax equivalent yields, particularly if you live in some of those high tax states like New Jersey, it's a good thing. Let's switch gears, have a little bit of fun here. Let's think about the theme park business. And when you think theme parks, historically, I think most people think about Disney World, Disneyland, all that kind of good stuff. But Comcast, the cable company out of Philadelphia, when they bought NBC Universal, one of the things they bought, and everybody kind of forgot about it, was the Universal theme park business. And that is a very profitable business for Comcast. And just like Disney, they're allocating much, much more money to that business. They're investing a lot more money in that business because they know it's a good business. Let's check in with Geetha Ranganathan. She joins us from Bloomberg Intelligence. She's down in Princeton. She covers all the media stuff. Hey, Geetha, didn't Universal just open up a big park in Orlando in the last week or two?
Yes, Paul, they did. On May 22nd was the grand opening of Epic Universe in Florida. This is the first big park that has opened in Florida in 25 years, and it was the biggest investment by Comcast in a theme park. They spent over $7 billion on just this park. So as you said, huge investments by Comcast in their theme park business. This is really an area of growth for them, especially now that their broadband business is struggling actually quite a bit.
So what is this likely to do for their earnings?
So, you kind of think about Comcast and you think about Disney. For Comcast, 60%. Kind of think about what their strategy is here, and you look at all of their portfolio of media assets. I mean, we're really excited about the theme park business because growth is great, returns on investment are great, and this is really a fantastic way for Comcast, just like what Disney has done, with kind of deepening all of those relationships with those Universal characters. You think of all the IP that they have with Minions, with Jurassic Park, now with Wicked, and some of the other franchises that they have with Harry Potter. This is just such a great way to build on that fan engagement.
How much can the theme park business, how much do you think that could be worth for Comcast? Because again, you mentioned that some of their core businesses like the video business, the traditional cable business, even the broadband business, they're facing some headwinds here. Theme parks are going to become more and more important for investors, I think, going forward. So what do you think the valuation could be?
Absolutely, Paul. So that's a really, really important point that you bring up. So you think of the cable business, which is really their mainstay. Cable valuations have actually dropped pretty significantly over the past few years. We've gone from about 10x to around 6.5 to 7 times EBITDA multiple. You think about the park business, though, it's actually quite the opposite. Most of the some of the pure play park operators are trading at about 12 to 14 times EBITDA. So again, this is an area of growth. Experiential businesses are seeing this huge upswing. And so we think that just based on about $5 billion in EBITDA, which we think Comcast can get to in a few years' time, that business could be easily worth, $45-50 billion or upwards of that.
So my takeaway is they want to be Disney. They're a Disney wannabe at this point. I gotta wonder if they're going to start poaching Disney executives too.
That's very possible. I mean, right now they're still a pretty small player, John, when you compare them to Disney. So you just kind of think about Disney in terms of theme park visitations. We are looking at about 150 million global visitors to Disney parks every year. Wow. Compare that to Universal or Comcast's parks, it's about 60 million. So still, a very small fraction compared to, or not a small fraction, but much smaller than Disney. But what they're doing now is a lot of expansion. So we had this new park, Epic Universe, which opened just last week. They're actually opening a new park in London in a few years' time. They're expanding with new properties in Las Vegas, in Texas. So basically, when you put all of that together, we're thinking that they are basically going to expand visitation from about 60 million by 50% to about 80 to 90 million. So they're really kind of closing in on that gap with Disney.
Stepping back, the Comcast stock story. I mean, how do people view it here? Because again, the core cable TV business just in secular decline. The broadband business, which had saved it for a good decade or so, that seems to be stalling because of competition. And the cable networks, I don't know what they're doing with them. What do investors think about Comcast?
Yeah, it's really a tough story right now, Paul. As you rightly point out, I mean, broadband is, again, majority of this business is really tied to how broadband does. So, any stock movements are directly correlated to the health of the broadband business, which actually is in a very, very tough spot right now. So this is a business that was gaining about 1 to 2 million subscribers every year. They are still one of the largest broadband providers at about 30 million subscribers in the US, but they are going to lose close to about 1 million subscribers this year as, the telecoms kind of really intensify competition. So it's really a tough story right now. The one thing that we are kind of looking out in terms of a positive catalyst is the spin-off of the cable networks. So this is something that they announced last year. It probably happens a little bit later this year. They're calling it Versant. What's going to be interesting is not just the spin, but what happens after the spin. So will Comcast really look to become kind of this consolidator of media assets? And that would, I think, be a little bit of an interesting story in media. But unless they can really revive growth in their broadband business, I think it's going to be a little bit of a tough sell.
What's Disney's response to Universal to Comcast?
So Disney, a huge response in terms of what they have planned over the next few years, John. So they are really kind of doubling down on their parks business. Again, this is really the bread and butter for Disney. 60% of their profit comes from the parks business. So they have about a $60 billion investment planned for parks over the next, 7 to 8 years. And it's not just the theme park experience. It's, they're having parks on water, what they call parks on water, which are the cruises. And that's a huge investment for them. We think that business basically doubles, triples revenue as they keep on adding these new cruise ships, to their fleet. So they're doubling down on parks as well.
Yeah, it's just amazing, John. I mean, Disney, well, you can't bet against the mouse, can you?
I go to Florida. I go to both Disney and Universal.
You go to both, exactly. All right, Geetha, thanks so much for joining us. Geetha Ranganathan, she covers all the media industry for Bloomberg Intelligence. And again, Comcast Epic Universe in Orlando, Florida, opened last week. It's going to be huge. I've seen some video of it. It's just amazing. And the question is, how does that compare with what you get at Disney World down there? Maybe you go down there and you do both. I think that's what both companies are kind of counting on there, and why not? Lots of good stuff down there in Florida. All right, right now, let's get a little bit of a reset on this market. We'll go to Charlie Pellet and get a Bloomberg Business Flash.
Hi, thank you very much, and here's what's going on, Paul. Happy Friday. We have got the Dow, the S&P, NASDAQ. Not so happy for the bulls, with the S&P right now down 20 at 58.91. That represents a drop right now of 0.35%, with the Dow down 62 now, down 0.1%. The NASDAQ Composite Index down 110, a decline there of just about 0.6%, while the Russell 2000 Index of small cap shares down by 0.4%. 10-year, 4.40%. The 2-year, 3.96%. Spot gold down $27 the ounce at $32.90, a drop there of 0.8%. And West Texas Intermediate crude down 1.1%, $60.28 a barrel on WTI. Among the day's economic reports, another reading on consumer sentiment. And with that story, here's Bloomberg's Vinny Del Giudice.
The University of Michigan reports consumer sentiment edged higher nationwide in late May after setting one of the lowest readings on record. Long-term inflation expectations improved after the U.S. and China stepped back from imposing staggering new tariffs. That said, the Consumer Sentiment Index is running about 20 points below last year's monthly average. It started to tank just after Inauguration Day. Vinny Dell, Judice, Bloomberg Radio.
EchoStar, that is the wireless and pay TV operator controlled by billionaire Charlie Ergen, has skipped an interest payment because of uncertainty about a regulatory probe. EchoStar received a letter from the FCC earlier this month disclosing a review of compliance with federal obligations to provide 5G services. Ticker SATS, as in satellite. Right now, we've got EchoStar down by 10.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. We have John Tucker sitting in for Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Brokers studio. And we are streaming live on YouTube as well. Coming up in just a couple of moments, Amazon Web Services, AWS, for the folks in the know. The CEO there, Mark Garman, he's going to be speaking with Bloomberg Television anchor Ed Ludlow. That's in just a couple of minutes. And John, you take a look at Amazon.com. It's got a $2.2 trillion market cap. I haven't seen the Wall Street research on this, but I'm going to say most, or certainly more than 50% of the value of that company isn't Amazon.com, the retail stuff that we all grew up with. It's their cloud business, Amazon Web Services. That's
you got to wonder, they're also under regulatory threat as well from, so you got to wonder what's going to be happening on that front.
Yeah, it's a competitive business. I mean, when you think about the cloud business, it's a great business. It's a growing business. The numbers are staggering. You talk to Mandeep Singh or Anurag Rana from Bloomberg Intelligence, and they throw around these huge numbers about the cloud and how it's growing. And it's Amazon Web Services, Microsoft, Google. Those are kind of the three big players, but a lot of other players are in it as well. But it's a huge business. AWS, it's just a huge business for them and very profitable. You think about on the Comcast.com, the Amazon.com, the retail stuff that you and I click on all the time. That's very low margin business, like most of retail is. But boy, the web services business, the cloud business, is super profitable. And it just really popped their profitability over the last 10 years.
And what's the future right now? What is the big focus with that?
I think the cloud, people are the cloud, Amazon Web Services, Facebook, they're looking at those as a way to play artificial intelligence, a way to play AI. They're the big hyperscalers kind of cranking it up, and they're stepping up their CapEx. And the street likes it. The street says, yeah, you want to put more money into your cloud business? That's fine, because we see the returns that you're able to generate off it. So Amazon.com off about 0.8% today. It's off at 7% year to date. That's very interesting. You don't see that underperformance very often. Trailing 12-month basis up about 15% here. So again, $2.2 trillion market cap, just extraordinary. So coming up, we're going to bring you Mark Garman. He is Amazon Web Services. He's the CEO over there. And he's speaking with Bloomberg Television anchor Ed Ludlow, talking about the future of AWS and the cloud. Let's take a listen right now.
Welcome to our Bloomberg radio and television audiences worldwide. We go right now to a conversation with Matt Garman, AWS CEO. Matt, it's good to catch up. It has been basically 1 year that you've been in the role as AWS CEO. As a place to start, what has been the biggest achievement in that time for AWS?
Yeah, thanks for having me on. It's nice to be here again. Yeah, it's been a fantastic year of innovation. It's really been incredible. And as I look out there, one of the things that I've been most excited about is how fast our customers are innovating and adopting many of the new technologies that we have. And as you think about customers that are on this cloud migration journey, many of them have been doing that for over the last several years. But this year in particular, that we've really seen an explosion of AI technologies, of agentic technologies, and increasingly we're seeing more and more customers move their entire estates into the cloud and AWS. So it's been really fun to see. It's been an incredible pace of technology, and it's been a really fun first year.
The moment that investors kind of sat up and paid attention was when Amazon said that its AI business was at a multi-billion-dollar run rate in terms of sales. What we don't understand as well is what proportion of that is AWS infrastructure.
Yeah, that is AWS, right? And so the key is that's a mix of customers running their own models. Some of that is on Amazon Bedrock, which is our own hosted models, where we have first-party models like Amazon Nova, as well as many of the third-party models like Anthropic's models. And some of those are applications, things like Amazon Q, which helps people do automated software development, as well as a host of other capabilities. And so there's a mix of that. And I think part of the most interesting thing about being at a multi-billion-dollar run rate is we're at the very earliest stages of how AI is going to completely transform every single customer out there. And we talk to customers and we look at where the technology landscape is, and we firmly believe that every single business, every single industry, and really every single job is going to be fundamentally transformed by AI. And I think we're starting to see the stages of that. But again, we're just at the very earliest stages of, I think, what's going to be possible. And so that multi-billion-dollar business that we have today is really just the start.
Can you give me a generative AI revenue number?
For the world? Or for AWS?
For you guys, for AWS, maybe Amazon as a whole.
Yeah, like I said, we are in multiple billions of dollars, and that's for customers using AWS. We also use lots of generative AI inside of Amazon for a wide range of things. We use it to optimize our fulfillment centers. We use it when you go to the retail site to summarize reviews or to help customers find products in a faster and more interesting way. We use AI in Alexa, in our new Alexa Plus offering, where we conversationally talk to customers through the Alexa interface and help them accomplish things through voice that they were never able to do before. So every single aspect of what Amazon does leverages AI, and our customers are exactly the same. Customers are looking to AWS to completely change, whether it's their contact centers through something like Amazon Connect, where it shows AI capabilities so that you don't have to go program it, all the way down to our custom chips or NVIDIA processors or anything where customers at the metal are building their own models. We have the whole range of people that are building AI on top of AWS, as well as Amazon themselves.
We always credit AWS as being #1 hyperscaler, but just what you said there about what the clients are using from the silicon level through to capacity, it would really help if you could proportionately tell me what percentage of workloads are being run for training and which proportion of workloads are being run for inference.
Sure. Yeah, and that changes over time. I think, look, as we progress over time, more and more of the AI workloads are being inferenced. I'd say in the early stages of AI and generative AI, a lot of the usage was dominated by training as people were building these very large models with small amounts of usage. Now, the models are getting bigger and bigger, but the usage is exploding at a rapid rate. And so I expect that over the fullness of time, 80%, 90%, the vast majority of usage is going to be in inference out there. And really, and just for all those out there, inference, it really is how AI is embedded in the applications that everybody uses. And so as we think about our customers building, there's a small number of people who are going to be building these models, but everyone out there is going to use inference as a core building block in everything they do. And every application is going to have inference, and already is starting to see inference built in to every application. And we think about it as just the new building block. Right? It's just like compute, it's just like storage, it's just like a database. Inference is a core building block. And so as you talk to people who are building new applications, they don't think about it as AI is over here and my application is over here. They really think about AI is embedded in the experience. And so it's increasingly, I think it's going to be difficult for people to say what part of your revenue is going to be driven by AI. It's just part of the application that you're building, and it's going to be a core part of that experience. And it's going to deliver lots of benefits from efficiency, from capabilities, and from user experience for all sorts of applications and industries.
But present day, it's fair to say majority is still training?
No, I think that at this point, definitely more usage is inference than training.
We want to welcome our radio and television audiences around the world. We're speaking to AWS CEO Matt Garman, who officially next week celebrates 1 year in that role leading AWS. A new metric that has been discussed, particularly this earnings season, we discussed it with NVIDIA CEO Jensen Huang this week, is token growth and tokenization. Has AWS got a metric to share on that front?
I don't have any metrics to share on that front, but I think it's one of the measures that we can look at is the numbers of tokens that are being served out there, but it's not the only one. And I increasingly think that people are going to be thinking about these things differently. Tokens are a particularly interesting thing to look at when you're thinking about text generation, but not all things are created equal. I think particularly as you think about AI reasoning models, the input and output tokens don't necessarily talk about the work that's being done. And increasingly, you're seeing models that can do work for a really long period of time before they output tokens. And so you're having these models that can sometimes think for hours at a time, right? You might ask these things to go and actually do research on your behalf. They can go out to the internet, they can pull information back, they can synthesize, they can redo things. If you think about coding and Q developer, we're seeing lots of coding where it goes and actually reasons and does iterations and iterations and improves on itself, looks at what it's done, and then eventually outputs the end result. And so at some point, kind of the final output token is not really the best measure of how much work is being done. If you think about images, if you think about videos, there's a lot of content that's being created and a lot of thought that's being done. And so tokens are one aspect of it, and it's an interesting measure, but I don't think it's the only measure to look at, although they are rapidly increasing.
Project Rainier, massive custom server design project. Yeah. What is the operational status and latest on Project Rainier?
Yeah, so we're incredibly excited about. So Project Rainier is a collaboration that we have with our partners at Anthropic to build the largest compute cluster that they'll use to train their next generation of their Claude models. And Anthropic has the very best models out there today. Claude 4 just launched, I think it was last week, and it's been getting incredible adoption out there from our customer base. Anthropic is going to be training their next version of their model on top of Trainium 2, which is Amazon's custom-built accelerator processors, purpose-built for AI workloads. And we're building one of the largest clusters ever released. It's an enormous cluster, more than 5 times the size of the cluster compared to the last one that they trained on, which again is the world's leading model. So we're super excited about that. We're landing Trainium 2 servers now, and they're already in operation, and Anthropic is already using parts of that cluster. And so super excited about that. And the performance that we're seeing out of Trainium 2 continues to be very impressive and really pushes the envelope, I think, on what's possible, both from an absolute performance basis as well as a cost performance and scale basis. I think some of those are equally going to be really important as we move forward in this world. Because today, much of the feedback you get is that AI is still too expensive. The costs are coming down pretty aggressively, and it's still too expensive. And so we think there's a number of things that need to happen there. Innovation on the silicon level is one of those things that needs to help bring the cost down, as well as innovation on the software side and algorithmic side, so that you have to use less compute per unit of inference or training. So all of those are important to bring that cost down, to make it more and more possible for AI to be used in all of the places that we think that it will be over time.
Matt, on Wednesday, NVIDIA CEO Jensen Huang summarized inference demand for me. I just wanted to play you that soundbite.
Sure.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Your pitch for Trainium 2, and as you know, I've kind of taken apart the server design and looked at it, is the efficiency and cost efficiency relative to NVIDIA tech. Are you seeing that same demand Jensen outlined for Trainium 2 outside of the relationship with Anthropic?
Yeah, look, we're seeing it across a number of different places, but it's not really Trainium 2 versus NVIDIA, and I think that's not really the right way to think about it. I think there's plenty of room. The opportunity in this space is massive. It's not one versus the other. We think that there's plenty of room for both of these, and Jensen and I speak about this all the time, that NVIDIA is an incredibly fantastic platform. They've built a really strong platform that's useful and is the leading platform for many, many applications out there. And so we are incredible design partners with them. We make sure that we have the latest NVIDIA technology for everyone, and we continue to push the envelope on what's possible with all of the latest NVIDIA capabilities. And we think there's room for Trainium and other technologies as well, and we're really excited about that. And so we have many of the leading AI labs are incredibly excited about using Trainium 2 and really leaning into the benefits that you get there. But for a long time, these things are going to be living in concert together, and I think there's plenty of room, and customers want choice. At the end of the day, customers don't want to be forced into using one platform or the other. They'd love to have choice, and our job at AWS is to give customers as much choice as possible.
What is general availability of NVIDIA GB200 for AWS, and have you, I guess, launched Grace Blackwell-backed instances yet?
Yes, yep. So we've launched our they would call them P6 instances, and so those are available in AWS today, and customers are using them and liking them, and the performance is fantastic. So those are available today. We're continuing to ramp capacity. We work very closely with the NVIDIA team to aggressively ramp capacity, and demand is strong for those P6 instances. But customers are able to go and test those out today, and like I said, we're ramping capacity incredibly fast all around the world and in our various different regions.
Matt, what is your attitude to Claude Anthropic's model being available elsewhere on Azure Foundry, for example?
Great. I mean, that's okay too. I think many of our customers make their applications available in different places, and we understand that various different customers want to use capabilities in different areas and different clouds. Our job is to make AWS, and this is what we do, is to make AWS the best place to run every type of workload, and that includes Anthropic Claude models, but it includes a wide range of things. And frankly, that's why we see big customers migrating over to AWS. Take somebody like a Mondelez, who's really gone all in with AWS and moved some of their workloads to there. One of the reasons is that they see that we have capabilities, sometimes using AI, by the way, in order to really help them optimize their costs and have the most available, most secure platform. In Mondelez's case, they're taking many of their legacy Windows platforms and transforming them into Linux applications and saving all of that licensing costs. But we have many customers who are doing that, and so our job is to make AWS by far the most technically capable platform that has the most and widest set of services, and that's what we do. But I'm perfectly happy for other people to use. Like, it's great that Claude's making their services available elsewhere, and we see the vast majority of that usage happening in AWS, though.
Will we see OpenAI models on AWS this year?
Well, just like, we encourage all of our partners to be able to be available elsewhere, I'd love for others to take that same tack.
Let's end it with this. A question from the audience, actually, which is where you're going to grow data center capacity around the world. I got a lot of questions from Latin America and Europe in particular, where Jensen flies to next week.
Yeah, great. So in Latin America, we're continuing to expand our capacity pretty aggressively. Actually, earlier this year, we launched our Mexico region, which has been really well received by customers, and we've announced a new region in Chile. And we already have, and for many years, have had a region in Brazil, which is quite popular and has many of the largest financial institutions in South America running there. So across Central and South America, we are continuing to rapidly expand. In Europe, we're expanding as well. We have many regions already in Europe. One of the things I'm most excited about, actually, is at the end of this year, we're going to be launching the European Sovereign Cloud, which is a unique capability that no one has, which is completely designed for critical EU-focused sovereign workloads. And we think, given some of the concerns that folks have around data sovereignty, particularly for government workloads as well as regulated workloads, we think that's going to be an incredibly popular opportunity for everybody.
Matt Garman, AWS CEO, thank you very much.
All right, there you go. That was Bloomberg Television's Ed Ludlow speaking with AWS CEO Matt Garman, talking about the growth of the cloud business in conjunction, particularly nowadays with AI. And I think the takeaway, John, is for Amazon Web Services, all forward here, all steam ahead.
AI is here to stay, and it's just at the very, very beginning, and it will control your life, is my takeaway.
Exactly right. So in AWS, Amazon, they're right at the forefront there. All right, let's switch gears. Finish up here strong here, and can you just get the latest on what's happening up with our friends at Harvard here? They obviously are within the sights of President Trump on a whole host of issues. Brooke Sutherland joins us here. She's the Boston bureau chief, and she's also the author of the Industrial Strength newsletter for Bloomberg News. She's up in Boston. Brooke, what's the latest? It seems like Harvard's getting a reprieve from the courts here. Where do we stand on the various issues?
Sure, and there are many issues that Harvard is dealing with right now from the Trump administration. You know, they just had commencement yesterday, and President Alan Garber got a really, resounding round of applause, which made for quite the contrast with last year when there were actually protests at the graduation ceremony over the way in which Harvard had handled, some of the reactions on campus to the attack on Israel in 2023. And so, we're seeing Harvard work its way through this. In terms of the legal challenges that it's facing, it was actually had a court hearing at the same time as graduation in Boston, where the judge granted a reprieve, a longer lasting reprieve to this ban on international student enrollment, which Harvard has argued would be absolutely devastating and is unfounded based on the Trump administration's claims.
If I'm an international student at Harvard, what am I doing right now? What should I be doing?
I think that's really still an open question, and I think a lot of international students are trying to figure out exactly what they should do, and that's been one of the points that Harvard has made, is that even with a reprieve from this ban, there's still so much uncertainty, and the ramifications of that for its student population are just huge. You have students trying to figure out if they'll have a place to come back to at Harvard in the fall. And if they don't have a place, they have to figure out how to transfer. And these are not easy questions to answer. And I think, we're interested in understanding better how different international students are dealing with this. But right now, I think there's just a lot of paralysis and so much uncertainty.
There is a lot of uncertainty around the dollars and cents here for Harvard. I mean, the freeze in funding, what do we know about the actual cost to Harvard here from the freeze in federal funding?
Well, we know that more than $2.6 billion in funding has been cut off that primarily supported research work. The Trump administration has also moved to cancel about $100 million of contracts with Harvard. And there are a lot of meaningful projects that are getting caught in between this feud. Research on ALS, on the effects of radiation on the human body and ways in which to mitigate that, which is something that's going to be very important if we have ambitions of putting people on Mars, which both Trump and Elon Musk have said is something that they would like to do. And so you're seeing, a lot of these projects really get caught in the middle. And then in terms of financial impact on Harvard, the biggest threats are, what Trump has talked about in terms of possibly revoking Harvard's tax-exempt status. The bill that passed the House of Representatives also includes a really significant endowment tax that would hit Harvard, as well as MIT, particularly hard. And then, of course, the ban on international students really gets at the heart of their financial well-being, which is tuition, because most international students tend to pay full freight to go to Harvard.
All right, Brooke, thank you for that update there. There's a lot of balls up in the air in Cambridge, Massachusetts for Harvard and others, but it seems like Harvard's in the sights for sure.
You thought it was a quiet Friday, didn't you?
Exactly. No, I'm running out of here.
way.
Brooke Sutherland, Boston Bureau Chief and author of Industrial Strength Newsletter for Bloomberg News up in Boston. All right, for our listeners in the U.S., reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The U.S. Supreme Court rules President Trump will be allowed to end humanitarian parole for more than 500,000 people from 4 countries. Legal analyst Lori Levinson says it means they could be deported.
It is a significant move by the Trump administration to try to end these humanitarian parole programs and immediately deport what are hundreds of thousands of people who came to the United States seeking some safety, were allowed in under the Biden program, which now Trump is ending.
President Trump says Elon Musk will join him later today in the Oval Office for what amounts to a send-off. CBS's Natalie Brand.
A senior administration official says that Musk is leaving on good terms. Again, we've been talking about his time is up because he was designated as a special government employee. So while his official role is coming to an end, it's possible we might still see him as an unofficial advisor. That remains to be seen.
CBS's Christopher Cruz tells us Musk's company SpaceX has had its Starship rocket grounded by the FAA.
The Starship Flight 9 mission launched Tuesday night from Starbase, Texas, after back-to-back explosions in earlier launches. SpaceX had hoped to release a series of mock satellites, but a door failed to open all the way. The spacecraft began spinning, and the first stage booster ended up in the Gulf of Mexico in pieces. The FAA says it will oversee the SpaceX-led investigation and will approve any final report.
President Trump accused China today of violating a deal to roll back tariffs and restrictions for critical materials, minerals that is. CBS's Kelly O'Grady says a closely watched private survey indicates consumer confidence and sentiment bounced back this month.
The reason why it didn't go down is because in May we got a number of trade deals, or at least the hope of trade deals. There was that laying down of the arms between U.S. and China on May 12th, as well as that UK trade deal, and you really saw a difference in the survey responses from before May 12th to after May 12th, but it wasn't enough to raise consumer sentiment, so basically it's just flat.
Deadly and destructive weather this morning southwest of Lexington, Kentucky. Timothy Graves is an official in Washington County.
We had a small, we think, a tornado. Weather Service will have to confirm that. We had 2 houses that were totally destroyed, 7 people injured, and 1 fatality at this time.
First public appearance today for former President Biden since his cancer diagnosis at a Memorial Day event in Delaware.
To the Gold Star families, thank you, thank you, thank you.
Wall Street, the Dow is down 80 points. This is CBS News. Popular candy has been recalled overseas.
Haribo has issued a recall of its Happy Cola Fizz gummies in the Netherlands because they were found to be tainted with cannabis. According to the Netherlands Food and Consumer Product Safety Authority, several people there got sick and reported feeling dizzy after eating them. So far, the contamination seems to be contained to only packs in the Netherlands and not found in any sent to the U.S. or elsewhere. Haribo is working with police now to investigate how it happened. Stacey Lynn, CBS News.
Bernard Carrick, the New York City Police Commissioner on 9/11, has died at 69. He was nominated to be Homeland Security Secretary in 2004, but withdrew. He also served time in prison for tax fraud, but was pardoned. The New York Times reports Robert Jarvik, the designer of the first artificial heart, has died. He was 79. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Elon's goodbye party and the Friday edition as Elon Musk marks his last day as leader of the Doge, complete with a presidential news conference in the Oval Office. We are joined by our friend Bloomberg's David Gura as we walk up to the big show that will happen before we're done here today. A federal appeals court allowing the Trump tariffs to stay in place, at least for now. We're going to see what the reverse taco here means for the markets with the stalwart. Bloomberg's Joe Weisenthal is with us later this hour, and as the Supreme Court rules, the Trump administration can, in fact, strip temporary legal status from about 500,000 migrants. We'll have analysis from our political panel on a big day in Washington. Rick Davis and Jeannie Shanzana will be with us for the hour. After, of course, we touch Wall Street with our friend Charlie Pellet, live from New York on the markets. Charlie, how's it look?
Right now we are looking lower. Joe Matthew, by the way, great having you guys, the whole crew here in New York this week. We've got the Dow, the S&P, NASDAQ, all in the red. Renewed trade tensions weighing on sentiment. President Trump writing on his social media platform that China breached the truce negotiated earlier this month between the world's two largest economies without specifying how. Complete coverage throughout the day right here on Bloomberg. S&P down 20 now. That's a drop of 0.3%. The Dow down 31, lower by 0.1%. NASDAQ in the red, down 110, a drop there of 0.6%. This is the final trading day of the month. The Bloomberg Mag 7 index slumping by 0.7%. The 10-year 4.40%, but the 2-year 3.90%. Gold down $28 the ounce, down 0.9%. A retreat for crude now down 1%, just above $60 a barrel, $60.33 on this Friday. And Bitcoin down $650 now, down 0.6%, 105,540 on Bitcoin. Ulta Beauty's first quarter sales, first quarter results topped Wall Street estimates. Ulta Beauty shares, they're up by 12.3%. Gap shares are slumping, now down by 20%. It reported a tariff impact of as much as $300 million. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues right now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. To share the same space with Charlie Pellet, a great honor here at World Headquarters in New York. Thanks for joining us on the fastest show in politics on Bloomberg Radio, satellite radio, channel 121. On YouTube right now, you want to see what Charlie Pellet looks like? Search Bloomberg Business News Live, the voice of the New York subway. We're also on Bloomberg Originals, and I could keep going. I'll point you to the podcast a little bit later because you might need to rewind some of this today. There's a lot of moving parts in Washington, and so much of it surrounds Elon, the big goodbye party. Imagine you leave your job and the President of the United States brings you into the Oval Office for a news conference to talk about how well things went. 130 days, right? If you listen to this program, if you watch us on YouTube, you knew this would be the last day. We told you that months ago. We brought you into the cabinet room where it sure sounded like farewell. Donald Trump's been speaking in the past tense about Elon Musk. So what a ride. From cutting spending in the federal government to selling Teslas in the White House driveway, wielding a chainsaw at CPAC, and bringing his young son X before the media repeatedly. We remember the ways. Just ask President Trump.
And Elon, because he's not very busy, has agreed to head that task force. Be interesting. If he has the time, that'd be a good one to do it.
He likes this place. I can't get him out of here. He just likes this place.
President Trump has ceded the presidency to Elon Musk. No, that's not happening. But Elon's done an amazing job.
Elon can't do and won't do anything without our approval. And we'll give him the approval where appropriate. If there's a conflict, that we won't let him get near it. But he does have a good natural instinct.
Boy, we've come a long way, and big thanks to Elizabeth for the memories. What must be going through Elon Musk's mind as he reads the New York Times this morning, drilling down on his drug habit, the pill box that he apparently travels with? Some of the ideas that reporters have had that the receipts might not add up to the promises. It could be a chippy conversation. We're going to find out together. We'll bring you in the Oval Office. They tell us at least at 1:30 p.m. Eastern Time. In the meantime, we spend a bit of time with David Gura, Bloomberg's correspondent, host of the Big Take podcast, with me in studio, and it's a rare treat, David. It's great to see you. I don't know how many big takes you've actually put together that revolve around the story of Elon Musk, but you've been bumping into him, covering politics as long as he's been in Washington, and much has been written about the scars that he's leaving town with. Has this been a good experience for him or not?
Perhaps we'll hear more about that today in the Oval Office as well, but you're right, and we cede some of this ground to our colleagues who produce the Elon Inc. podcast and really focus on the whole Elon apparatus, but we've seen him try to find his way around the nation's capital, obviously digging through data, the way that this bureaucracy works, and making really substantive changes. So he is leaving here after 130 days, having done a good deal. I mean, USAID is gone. Subsumed in part by the State Department. So many employees let go as a result of the work that he and his colleagues at Doge did. And he's been a constant presence, yes, in the Oval Office, but in the cabinet room as well, at rallies with President Trump, as you mentioned, when those Teslas materialized on the White House lawn and President Trump decided to pick up one himself.
Yeah.
So he's played a very prominent role. And as we heard in that tape, there have been moments when it's been, shall we say, uneasy for this president having to, I think, navigate dealing with somebody whose profile is so huge. He's somebody who's so widely recognized around the world, and that's, I think, a personal issue, a legal one as well, because a headline for this tenure at Doge is he running it or not? Is he the effective leader, or is he somebody who's really just sort of guiding things behind the scene? He, of course, has been adamant that Doge will continue with that, almost meditative in that sense. Doge is bigger than one man and will continue.
Yeah, he's compared it to Buddhism.
Buddhism, that's right.
I don't quite understand, but Donald Trump talks about the sacrifice that this guy could be doing anything. He's the richest guy in the world. He's sleeping in the office, for crying out loud, which was the case for a little while. The fact is, though, the real sacrifice was reputational, was it not?
And we've seen him reckon with that in recent days. Of course, he spoke with our colleague Michelle Hussein at the Qatar Economic Forum and with other reporters as well since then. And he's seen the share price of his car company go down, bounce up a little bit since he announced that he was finally going to be leaving government. But what stood out to me in that interview was the first question that Michelle asked, which was, how are you going to divide your time? How are you dividing your time? And he's somebody who's not just helming one company in doing this, but helming several of them and reporting to a board of directors and shareholders. And it has been something that's been an amazing thing to watch. I mean, I think back, you asked how long I've been covering or dealing with Elon Musk as a reporter and a journalist.
Yeah.
This was something that came up before just in the context of his companies. How can a guy run Tesla and also have a hand in several other companies? The notion that he could be stretched too thin was something that preceded his time in government. So this is just added to that. And I think when you look at what his mandate is now, the mandate, again, by the board and shareholders, investors in his companies, it's a big one. It's to right not just one ship, but several on the private sector side.
Everyone's trying to get inside his personal life here, whether it's the children or the drug use or whatever it might be, his sleeping schedule. People want to know what makes him tick. And the New York Times had a heck of a story today. It was the chief executive officer of Tesla and SpaceX traveled with a medication box that held about 20 pills, was taking so much ketamine that it was affecting his bladder, according to the report. The White House didn't talk about this, and there are questions about whether he was supposed to be drug tested or something here, but this is ugly stuff, and he's going to be asked about it in the Oval today.
It's a big investigative piece. Megan Twohey, one of the reporters on this, is on the investigative team at the Times, and she, of course, was integral in the Harvey Weinstein story and won a Pulitzer Prize for that. And the other reporter, Kristen Grind, was at the Wall Street Journal before she came to the Times. She's done a lot of reporting on the tech sector broadly and on Elon Musk as well, and on his drug use previously. And he is somebody who has admitted to taking ketamine, he says, with a prescription, and that's what comes up in this piece as well. How much is he taking it in the guidelines of that prescription or more? You mentioned the Adderall. Let's just talk a bit about the drug use. What the Times is alleging here is this was happening on the campaign trail, and they admit they don't know if it's continued while he's been working in government. Then there's the other side of the story, which you allude to, which is just his personal life more broadly. And the Times says he has 14 children now, several ex-wives, been through divorces, has had children with women with whom he hasn't been in romantic partnerships. That is, as you say, a messy and sprawling story that we get some insight into here, but it plays to what we were talking about just a moment ago, which is the professional life of Elon Musk is a sprawling and busy one. It seems the personal one is too, and one wonders how distracting that's been, how distracting it continues to be for him as he makes this transition from the White House back to the private sector.
So think of the office today. The Oval Office will he be standing near the desk with the president sitting? Do they drag a podium in there for him? Maybe they each take a turn. The optics here are beyond curious. And you've got to think the president said, what can I do to help you out, right? How about we set the record straight and bring the press in?
It's funny, you look at that post on Truth Social from the president, which is full of all kinds of clauses here. This is his last day, but not really, because he will always be with us, helping all the way. You get the sense this is going to be something like we saw when Nikki Haley left her post at the UN, for instance. A moment with these two people where they were kind of side by side, and there was a lot of praise for the other person. We'll see that. But it's a familiar tableau, getting back to your point. We've seen Elon Musk in the Oval Office for formal occasions before, yes, often with his 5-year-old son X there as well. For me, what's curious is the naming of this as a press conference, because, again, we've seen this over and over again, certainly with foreign leaders coming through the Oval Office or with Gretchen Whitmer. It's become the scene of spectacle in a way that it hasn't been before. But you're right to raise the question. This being labeled a press conference, what does that mean? Who's going to be taking the questions, and how wide-ranging is this going to be?
Yeah, it's going to be a tour de force. We're going to carry it live. I think we'll probably hear a lot of, who are you with?
Yeah, there you go.
When the questions arrive. But boy, you do wonder if it comes out on the other end here with regard to his companies. David Gura, the attempt to repair the reputation for Tesla alone could take years.
I think that's true, and I've heard that from folks who follow the company closely, and a lot of complaints about how the inventory, the cars they make, haven't advanced as much as you might think that they would have. There's still speculation about robotics in the cars, and having this sort of taxi system. All of that seems rather pie in the sky as we can look at a company that kind of just needs to find its footing in a way that it had before. And when I say before, it's not hard to kind of graft onto that, the before and after being when Elon Musk got into politics and before that.
Fascinating. Would you love to sit down with him?
I mean, I would imagine it's a tricky interview. Just watching Michelle do it.
Absolutely.
And then watching others do it as well. What's the approach? How is he going to behave? How much is it going to be about the media? I think it's bound to be tricky. Yeah, sure. I'd love to sit down with him, but I know that it would not be an easy undertaking, to say the least. Yeah,
he's the best we have. David Gura, I'm delighted you could come and see us, as always.
Nice to see you.
Right here in New York, everyone. The host of the Big Take podcast. Find it if you're not already subscribed on Apple, Spotify, whatever platform you like. You'll be better for it. The stalwart is on the way in next, Joe Weisenthal. We're making the best out of being at world headquarters here as we get into the tariffs and the tacos on the fastest show in politics. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower, a solid month for the U.S. equity market, ending on a weak note as President Trump said China, quote, totally violated a tariff agreement, spelling fresh turmoil for the president's trade agreement. Today, we've got the Dow, the S&P, NASDAQ all lower right now. S&P on this final trading day of May down 29 points, drop there of 0.5%. The Dow lower by 74, down 0.2%. NASDAQ down 155, a drop there of 0.8%. 10-year at 4.40% with a 2-year 3.90%. Gold right now at $32.90 the ounce. Gold, the precious metal, down 0.8%. West Texas Intermediate crude down 1.3%, 60.18 for a barrel of WTI. Bitcoin now down by 0.9%, holding above $105,000 at $105,200 on a Bitcoin. Palantir shares are pushing higher, up now by roughly 5%, putting the stock on track for a record close after the New York Times reported that the Trump administration has expanded the data analysis software company's work across the federal government in recent months. Again, Palantir right now climbing by 4.7%. Recapping, stocks lower, S&P down 32, now down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts, and Balance of Power continues now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much, and thank you for joining us on Balance of Power here on Bloomberg Radio, satellite radio channel 121, and on YouTube. It's a good time to do this, by the way, because Joe Weisenthal is coming up next. Search Bloomberg Business News Live to catch our live stream from today, New York. It's one of the great treats of being here whenever I have the opportunity to come to world headquarters, to come to the big city. You got to get a good pastrami sandwich.
That's right.
And you're really lucky if you get to spend some time with the stalwart. Joe Weisenthal, Bloomberg Executive Editor for Digital News. You have like a big title like that.
No, it's not. You know what? Actually, can I take this moment?
Yeah.
I've been like trying to excise this aspect of my bio for a long time. And I keep finding random databases where that's stuck in and then it disappears. I'm just the co-host of the Outlaws podcast.
That's right. And band leader.
And I'm the one of the singers for the country music band Lightsweet Crew.
Sure are. I love that.
Yeah.
You're the Telecaster in the lineup at Bloomberg.
That's right. That's right. The telly. Someone else plays the Strat. Someone else plays the Gibson. I play the telly.
Fantastic. Well, it's great to see you, and I'm delighted you could come in. We always learn something when we spend some time with Joe. And yes, the podcast is called Odd Lots, but you probably know that because you subscribe to it. There's this idea of the taco trade has fascinated a lot of us. And I wonder because the best thing about you is you don't care about a lot of the stuff that we care about. You're really coming at this from the market's perspective. Yeah. So I can ask you if that's real or not.
So what I would say is that it does feel like every headline about trade, period, is like taken less seriously than the last headline. But I would even include, the various court rulings that we've seen. So, for example, there was that court ruling, I guess it was on Wednesday night, that said the tariffs were illegal. Now, if that had come out in, say, the middle of April, I think that would have been this huge deal, right? It would have been massive. And it's like, oh, look at this whole court. It just overturned the entire thing. You got a little market bounce. And that didn't last that long. Yeah. And then there was another reversal the night. So what I would say is that there's sort of this, I'm trying to think of like the analogy in science, but this sort of diminishing impulse with every headline about tariffs. It's like, oh, Trump says the Chinese deal is off track. Yep. That would have been a huge deal, I think, in April. Now it's like, oh, just one of the headlines.
Absolutely right.
Yeah.
So then there's some truth to this boy who cried tariff thing.
It does feel like
you can only run the same play so many times.
It does feel like it, and it does seem like if the message of tariffs and the implied tool for negotiation is, look, we are willing to take pain. To inflict pain on you in order to give you some concession towards us. And then each time you inflict domestic pain, and usually it's expressed in the stock market pretty quickly, then you sort of reverse yourself in a short period of time. I mean, I just think it's I'm not I've never taken a negotiation seminar or anything, but intuitively you would think, okay, the people on the other side of that take each one of these threats less seriously.
Yeah. The fact of the matter is, since the pause, I love these names. Somebody's made a lot of money.
Yeah.
And there's going to be a big question about market manipulation every time this happens as well, right?
Yeah, but
you must hear from the volatility guys who are in heaven right now.
Someone's going to make a lot of money. You know, on the questions of market manipulation, what that even means. You know, some people are very conspiratorial, right? Like, oh, who within the Trump administration knew what? And
who was buying and when.
calls and stuff like that. But all of these conspiracy theories rest on some premise of internal White House communication and coordination, right? The idea that there is someone besides Trump in the White House who knows what's going on in Trump's mind, which strikes me as very unproven. The existence of this, right? Because to say like, okay, I'm gonna trade ahead of a trade announcement. I must know something that before Trump was going to say it. Does anyone in the Trump administration know what Trump was going to say before he says it? Sometimes people in the Trump administration say things, and then he comes out and undercuts them a week, an hour later. So, you know, it's a very strange market, but I still tend to be skeptical of this idea that there must be like people trading, because I'm skeptical of this idea that anyone actually knows what's going to happen in a meaningful way before they.
There's a lot of logic there. I mean,
there's a lot of logic.
His
There's a
own
lot of
cabinet
logic,
learning things by watching them on TV. That's going to happen again today at 1:30, about an hour from right now. As we told you, we're going to bring you into the Oval Office for this news conference with Elon Musk. It's like a goodbye party, I guess, without the cake. It's his last day on the job here with the 130-day contract. You know what the argument with Elon and the questions about conflict of interest?
Right.
This guy's the richest man in the world. What the heck does he care about making a couple of extra dollars in the government? Is that fair?
It's an you know, this argument has actually been used a lot to justify when sort of people and they're like, he's already rich. So it's
a room full of billionaires.
Yeah, it's a room full of billionaires. You know, I've never like found that to be particularly skeptical. It's like, oh, they're all really rich. Why do they care about making money? It's like, I don't know. I don't think they got to be billionaires by not caring about making money.
Right.
All that being said, it does seem like Elon has become particularly ideological in various ways. I mean, I think he's getting very obsessed with the deficit over the years. And I think he's like, you know, even a way.
So you were compelled by what he said a couple of days ago, this big, beautiful bill.
Something happened, I think, over the last year where he got like really freaked out about just the sheer size of the national.
Well, he got to see it up close, right? I mean,
or he saw some chart that someone tweeted at. Okay. And then it's like, oh, that's a line that's scary. I mean, seriously, like it could be that too. I mean, the screen poisoning, it's like, it comes for us all if we spend too much time on the internet. Right. He spends a lot of time on the internet. Yes. You get like really obsessed with something. You know, various things seem to have happened in his life that have put him into an more ideological posture than maybe he once was when he was just a guy building a business and trying to figure out ways to work with or work around the federal government. So, but you know, look, it's not clear what was particularly accomplished by any measure, either in terms of a deficit reduction or, quote, making the government, you know, government efficiency, right, Doge. So I don't know if he feels as though he has accomplished anything or his Doge has accomplished anything, but at least, you know, like he said in that interview recently, I guess it was with CBS, you know, certainly on the deficit side, he's disappointed.
All right, so we're going to get to do this in real time with Joe Weisenthal, James, right? We have headlines crossing the terminal right now.
Here we go.
U.S. plans wider China tech sanctions. Here we go, indeed. With subsidiary crackdown, people familiar, Joe, describe a bid to target subsidiaries. A new rule here would cover them, subsidiaries of Chinese firms under U.S. curbs.
Yeah.
He just posted, the president, the Democrat-inspired and controlled Congressional Budget Office purposefully, he says, gave us an extremely low level of growth, and he's complaining about the CBO as well. But I want to focus on China. Because
it's funny, you want to focus on China, even Trump can't focus on China.
How true.
I mean, isn't that the funny thing right there? It's like, here's this headline, it's like, meanwhile, let me check the Democrat CBO. But yes.
But the market's obsessed with China. So does this count as a ho-hum, or are we going to freak out here? Because it looks like
the market's down.
We're getting down to our lows.
So S&P down about 1%. It's not nothing. I mean, I think
that could be any Friday.
It could be any Friday, absolutely. And we're still so far above those April lows. But, you know, certainly below still the highs in February. What I would say is, taken all together today, all of the headlines that we've seen today.
Yes.
So now this headline, the headlines earlier about things going off course. You know, I think it's reasonable for the market to sort of, again, maybe reprice things lower. Yeah. And, you know, maybe Trump wants to look tough again because people are talking about the taco trade or whatever
it is. He's coming out angry today, right? He's going to be swinging today.
That could be an element of it here for sure that's going on.
So as Joe mentioned, S&P 500 down 1%. The NASDAQ is down 1.5%. Ryan, terminal user, just pops in to say the Odd Lots podcast on Elon was amazing.
Many people are saying it.
But they're also, I keep hearing this. What do you make of the story, the New York Times expose today, the drug use, the kids? That's not going to help the repair tour here, the rehabilitation tour, is it?
No, I mean, look, the guy's got a lot on his plate, and I'm not surprised if his personal life is a mess.
Yeah.
Right?
Okay.
Right? I mean, I don't know.
Should an investor care?
A lot of people have speculated all these things for a long time.
I know,
about, expert theories about him.
You're still fascinated by him, though, right? Ooh.
He's a really interesting historical. I mean, here's the depressing part to me. It's actually, I'm just saying the part. There is this hope in the United States that we can have some sort of hard tech renaissance, industrial renaissance, and so forth, manufacturing renaissance. There is no question in my mind that Elon Musk is the best avatar, so to speak, for sort of American industrialization. He built one of the biggest car companies in the world during the 2010s, when most tech companies, et cetera, in the U.S. were just focused on software. It's extremely impressive. SpaceX is one of the most impressive companies in the world. His rocket company, whatever it's called, the satellite company, extremely impressive.
Starlink, sure.
It's a little grim, to my mind, when I think about the future of sort of industrial capacity in the United States, that the one individual who has clearly been an extraordinary success over the last 15 years or so in the United States is A, such a political lightning bolt, and B, seems to be having a hard time, keeping it all together, which is understandable on some level. Yeah. But when you think, we want to have this capacity sustained decade after decade after decade. No, we have like one guy. We have one guy who's all right out. We have one guy whose company is leading the way with respect to rocket tech and reusable rockets and so forth. It's a little depressing that so much is hinged on this person who's, again, both politically and personally volatile.
Really interesting point of view. Now, you're going to leave me in 2 minutes and go back to your lifestyles of the rich and famous.
That's right.
But I'm just, in our remaining 90 seconds, we just said a lot here. And after you leave, I'm going to get 10 more headlines. And then he's going to come out with Elon. And then there's going to be a post when he goes to the U.S. Is this market investable? Or do you just back off for a while until he goes to sleep?
Here's what I would say. Look, I don't know, and no one should ever listen to my advice. But I would say there's two things. One, it probably is, you're supposed to ignore all these things, right? That's what every professional investor says, is that you're supposed to ignore all of these things and then think long-term is all noise. But what I would say on top of that, maybe the market might be investable. Is this an environment in which a business wants to make actual real capital investment? Do you want to be building a new factory? Do you want to be expanding headcount, et cetera? And there, I think you can make more clearly the argument that the answer is no, that there is so much uncertainty about the policy side that it's like, well, why not wait 6 months, see if the smoke clears a little bit before we actually make a commitment? So what I would say is, I don't know about the market. You're probably never really supposed to pay attention to the news. Yes, you really should not be listening to the news ever, and yet people do, and which we both appreciate.
I love this.
But from a business perspective, you can understand why, all right, if I were thinking about, I want to build something new that's going to expect to last me for years, maybe I wait it out a little bit.
I'm so glad you could come over. The great American band leader, Joe Weisenthal. He also co-hosts a podcast called Odd Lots, and it's a treat to spend some time with the stalwart. Thank you, Joe. We'll have our panel up next right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Do want to begin with a number of developing stories at this hour. Getting word from the UK that the Treasury says the UK has completed its exit from NatWest shares. Trump Media raising $2.44 billion for its Bitcoin Treasury plan. And Hamas says it is consulting Palestinians now on that U.S. proposed Israel ceasefire. So a number of developing stories. Stay with Bloomberg for the latest. Right now, we've got U.S. stocks trading lower. A down Friday here, wrapping up the trading month with the S&P 500 index down 47 right now. That is a decline of 0.8%. The Dow down 176, down 0.4. And NASDAQ right now down 258, drop there of 1.2%. Our Mag 7 index down by 1.8%. 10-year, 4.40%, with the 2-year currently yielding 3.90%. Gold down $32 the ounce, down 1%, 32.85. And West Texas Intermediate crude down now by 1.1%, 60.25 a barrel on WTI. The Trump administration is planning to broaden restrictions on China's tech sector with new regulations that would impose government licensing requirements on transactions with companies majority owned by already sanctioned firms. We got fresh data today on U.S. trade as White House tariffs cloud this year's economic outlook. And with that story, here's Bloomberg's Vinny Del Giudice.
A record drop in imports, we're talking 20%, triggered a historic narrowing in the U.S. merchandise trade deficit from $162 billion in March to $87 billion in April, the smallest gap in more than a year. American businesses had been stepping up the pace of imports before the tariffs took hold. The duties also threatened to put a damper on household spending, which drives America's economy. Vinny Del Giudice, Bloomberg Radio.
Crude oil lower, on track for a weekly decline. Again, West Texas Intermediate down 1.1%. Shares of oil majors also trading lower now. ExxonMobil down by 1%. ADRs of BP down 0.5%. Chevron right now down 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go. He's here in New York today. Joe Matthew.
Great to be with you, Charlie Pellet. Indeed, live from World Headquarters. Thanks for joining us on Balance of Power. I'm Joe Matthew in New York as we prepare to assemble our panel on a big day for political show business. We've got a couple of big ones coming. Less than an hour from now, we'll be headed to the White House for a joint news conference. At least that's how this is being billed. It's kind of hard to tell how this is going to work in the choreography, but we're going to have President Trump in the Oval Office with a news conference alongside Elon Musk, who's having his last day, as we've been discussing throughout the hour, on the job as the leader of the Doge. We'll see how that goes. We'll find out together. And I'm guessing that it could be wild. We'll find out. But there's a much bigger event later in the day. 5 p.m. Eastern time, or so they say. It's on to Pittsburgh, West Mifflin to be exact, on to Pennsylvania, U.S. Steel. This is being billed as a big rally, remembering a week ago the president announced what he called a partnership, not a takeover, but a partnership between Japan-based Nippon Steel and U.S. Steel. This was a deal that he originally opposed when it was framed as a buyout, a takeover. But this partnership hasn't exactly been explained. You hear talk of a golden share that the U.S. government will control. And we're not sure. We're going to learn a lot more about it tonight. This is going to be a big victory lap. We suspect that we're going to be seeing steel workers on stage. Lee Greenwood's going to be singing, and the full treatment. That's where we start with our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick Davis, partner at Stone Court Capital, a Republican strategist who happens to also work in the investment business. Rick, from your view, as not only a Republican strategist, but a partner at Stone Court, when you hear about a partnership like this, what does that imply?
Well, you do have to scratch a little off the surface to understand what this deal is. And it looks amazingly similar to the deal that Biden said no to. Price paid, $14 billion, pretty much the same. Yet Trump has negotiated to have an American board, which is interesting, control, and a golden share. And we don't know many details around the golden share, but this idea that the United States government is going to have a hand in running the U.S. Steel with Nippon as an owner. And it could be a good thing, and it could be a disastrous thing. Yeah. Anytime you get government involved in private business, it generally doesn't go great. And as an investor, I've always been opposed to government bailouts. And to some degree, this is kind of a new version of that. Somebody else's money, but we get to decide what levels of steel production they're going to be and who picks the board. So it's an interesting deal, and I think we'll learn more maybe tonight about it. But as it's sort of same old, but in this administration with a new twist.
Well, Rick laid that out perfectly for us, Jeannie, and that's why a lot of people are asking, why would a company based in Tokyo commit to spending tens of billions of dollars in the U.S. for a company that it will not have control over? I don't know if we hear more about this tonight in what's going to be, a campaign-style rally, but at what point does the president need to detail this, and what are the unions going to say about it? They didn't want to take over.
Yeah, first things first, Joe, what is the difference between a partnership, an acquisition, and a takeover? I mean, you laid that out so perfectly at the top. What is this? The president insists in all his Truth Social posts on calling this a partnership. It smells and it sounds a lot like a takeover. That's number one. Number two, what we hear is that the government's role in this, and at least what we're hearing, is this is going on for 10 years. So the question is, what happens after that? And of course, from the public sector perspective, what are the national security implications of this? And oh, by the way, also from the political end, the president was so opposed to this. He was really trying to out-protectionist to Joe Biden as best he could on the campaign trail. And yet the deal, at least as far as we're hearing, except for this strange now partnership moniker, looks and sounds exactly the same. So will the president explain that? I wouldn't hold my breath, but those, I think, are big questions. All of that said, this is probably really good for Pennsylvania. This is probably really good for the steel industry in the United States. So it's sort of a case of, he can do what we never let John Kerry do, which is, switch and flip and flop all over the place and not have to explain a word of it.
Voted for it before he voted against it. Jeannie, Donald Trump is posting on Truth Social about China, Rick. As we consider what's happening today in Pittsburgh, it's really interesting, making this partnership with a company based in Japan while he accuses China of violating an agreement to ease tariffs. China, perhaps not surprisingly to some, he writes, has totally violated its agreement with us. So much for being Mr. Nice Guy. Following that, we see some other headlines on the terminal. The U.S. is planning a wider China tech sanctions crackdown here with a specific focus on corporate subsidiaries. It's helped to pull the markets to their lows of the day here. We're down 1% on the S&P 500, Rick. This is still apparently Donald Trump's market. We hear about the taco trade, but my goodness, it could change 3 more times today. Should the president address this either in the Oval Office with Elon Musk or at the rally tonight? Because China is a massive fixture in investors' minds.
Well, I think he has been addressing it, and anybody who's missed the message that we're in an economic war with China is not paying attention to what's coming out of his mouth. Donald Trump has been at the forefront of redefining the relationship between the United States and China. Prior to his presidency in 2017, we had a get along strategy, and we thought that as much as we invested and tried to influence China, the more democratic they would be and the more cooperation they'd have. But Xi Jinping changed all that. He has a different attitude toward the West, and the only one who's gotten that is Donald Trump in the recent past. And so, when he says he's the nice guy but slaps 145% tariff on China, I'd hate to see what he does when he gets mad. This is not going to change dramatically. Maybe on the edges, there'll be a trade deal someday, maybe, and there'll be some relief on those, or at least some kind of status that changes. But the end of the game is we are in an economic war, not a competition. not strategic partners. We're in a war economically with China, and it will go through every ounce of the Chinese industry by the time the Trump administration is over. This is the part he completely gets.
Well, I thought we had a deal with China, Jeannie. That's what the president said a couple of weeks ago. The markets rallied when it happened. This idea of a framework. If this is the reaction a couple of weeks later, how can we believe any of these proposed deals coming from the White House?
Joe, I distinctly remember 90 deals, 90 days. Is it July 9th? You know better than I do. I'm not holding my breath on that either. And while I appreciate what Rick is saying about, Donald Trump getting it, I'm not sure there's much sunlight between what either Donald Trump nor Joe Biden, nor quite frankly, most people in DC, their views about China. The problem is, as far as policy is concerned out of this administration, and granted it's only been 120 days, is if you look even just as a small example, what they're doing vis-a-vis the universities and Harvard, if we are going to confront China in any meaningful way, we need to be doing our best to build our capacities in things like AI and quantum computing. We need to have the best and the brightest here to do that. Those are our unicorns. And yet the president, and now we're hearing the Secretary of State, they want to make sure to shut that down. And you know who's enjoying this immensely is Xi Jinping. So I don't know about his policy for confronting China, except he keeps talking about a deal on tariffs that doesn't seem to be forthcoming.
Jeannie Shanzano and Rick Davis will be back with us in the second hour of Balance of Power as our great panel goes through the day here, walking up to the big Elon event that's at 1:30. One of the most interesting things I have read this week, knowing that the president's going to be talking about DEI and woke and maybe both of these events, was a great piece by Simone Foxman. Despite the backlash, DEI has not disappeared at U.S. companies. The headline, and what you read inside is fascinating. Another pleasure of being in New York is having Simone Foxman in person. Great to see you.
Great to see you too.
And great work here. So belonging is the new word. The idea here is that the programs haven't ended. We're just calling them something different.
Yeah, and interestingly, since this my story came out, the Gravity Research has just put out a study talking about usage of what it calls charged DEI terms, including DEI, diversity itself, finding that they've really fallen off a cliff. Diversity mentions down in the Fortune 100 issue reports down 30% in 2024 and 62% this year. When mentions of things like inclusion are down much less. 13% last year, 43% this year. Essentially, companies, they don't want to talk about this, but underlying their rationale for having diversity programs or for having programs that, they might now describe as corporate culture is still there. And for large part, they haven't really changed that much.
They're pulling, if you talk about Walmart or Target, they're pulling things off the displays in the front of the stores, the sort of Pride Month tributes that they both ran into. But your point is what's happening in the boardroom is not changing, right? And in the HR department. Is that fair to say?
Absolutely. I mean, look, Walmart, we found, was actually mentioning diversity, equity, and inclusion and looking for associates who support that as of job postings posted earlier this month, even though it says it's moved towards belonging, though it says it doesn't use race or gender to inform certain financing for diverse suppliers, it does still have pages touted towards consumers on its website that say these are brands owned by women, Black, and Hispanic people. So what's the business case here? Clearly, it's seeing a business case from consumers that want to buy these products, or else it wouldn't necessarily have these landing pages, because this is the sort of thing that conservative activists, whether Robbie Starbuck or, the legal activist Edward Bloom, these are the sorts of things that are likely going to, just raise some hackles.
Sounds like this isn't ending, though. It's just this is a semantic story because companies know what they need.
Well, what we were supposed to see from the Trump administration were some indications of lists of companies that federal agencies believe to be needed to be targeted for potential civil rights violations. May 21st, we understood that deadline to be. We have heard as yet nothing. Company advisors are calling me constantly being like, where is this list? So.
Wow. Great reporting, Simone. Great to see you. Simone Foxman, find the story on the terminal and online. Maybe the Doge computers, they don't sniff it out when they change it to belonging, right? They don't see the DEI page. Simone, fascinating reporting. We have a lot more coming up in our second hour, including Elon Musk's goodbye party in the Oval Office. They say it will be a news conference with the president. We'll find out live together as we welcome our global television audience right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's an office party for Elon. Welcome to the Friday edition of Balance of Power as Elon Musk marks his last day as the leader of the Doge with a send-off in the Oval Office, complete with a presidential news conference. I'm Joe Matthew alongside Kaylee Lyons at World Headquarters in New York. Welcome to the program on Bloomberg TV and radio. Kaylee, this is all set to happen this hour, and I suspect could go in a lot of directions.
Well, yeah, not just about the Doge or about Elon Musk's service to the Trump administration and U.S. government, but I would imagine the president's going to have some questions to answer on a few different issues, including what exactly he meant when he True Social posted earlier today that China is not sticking to its trade deal with the U.S. No more Mr. Nice Guy is what he said. He just didn't really get more specific than that, Joe.
No more Mr. Nice Guy. Big questions about the impact of the Doge. What do the receipts actually show versus the promise? And the deep dive in the New York Times today, the expose on Elon Musk's lifestyle, could all add up to quite a romp with reporters. Of course, they're framing this as a news conference. I'm assuming there will be questions.
I'm assuming as well. And of course, this isn't the only time we're going to hear from the president today. Is at 5 o'clock in the late edition of Balance of Power. He has scheduled an appearance at a U.S. Steel facility outside Pittsburgh, where he's going to talk about that Nippon Steel deal. Maybe we'll get some actual details as to what it entails. Is it a partnership or is it a takeover? We're all going to find out together later this evening. I would imagine that could go in a lot of different directions as well. Just like this market is going in a decidedly different direction after we got some news on a China tech sanctions crackdown expanding to subsidiaries. So let's check in on those markets now. Charlie Pellet's here with us.
Thank you very much, Kaylee Lyons. We have got the Dow, the S&P, NASDAQ all declining. You mentioned U.S. Steel ahead of the big announcement today. U.S. Steel right now up by about 0.6%. Under 3 hours to go until we wrap up the trading month of May with the Dow, the S&P, NASDAQ all very much in the red. Trade and tariffs front and center again today. A solid month for stocks ending on a weak note as President Trump says Beijing, quote, totally violated a tariff agreement, with the market extending losses on a news report that the U.S. does plan to broaden restrictions on China's tech sector. Here's where we stand, very close to lows of the day right now, with the S&P down 54, drop there of 0.9%. Dow Industrials down 205, down 0.5. NASDAQ Composite Index down 292, a drop there of 1.5%. The Bloomberg Mag 7 Index down 2.1%. Tech being hit hard today. The 10-year 4.39%, but the 2-year 3.89%. Gold now down $25 the ounce, down by about 0.8%. West Texas Intermediate crude just above $60 a barrel, slumping today by 1%. And Bitcoin now lower by 2%, 104,011 on Bitcoin. Palantir shares pushing higher, putting the stock on track for a record close after the New York Times reported that the Trump administration has expanded the data analysis software company's work across the federal government in recent months. Palantir shares right now, they are trading higher on a down day for the rest of the market. Palantir right now up by 1.7%. Balance of Power continues now. Back we go to our New York studio. Yes, they're here in New York. Once again, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Here in New York for the last day before we have to head back to Washington, which will be the center of all of our attention, scheduled half an hour from now. I guess it's always our center of attention for Joe Matthew and myself, but especially when you have the President of the United States, Donald Trump, and the richest man in the world, Elon Musk, set to give a joint press conference together. This could get interesting. 1:30 p.m. is when it's supposed to kick off. We'll see how much we stick to that timing, but we know what it'll be about, Joe, and it's about the Doge.
Is X going?
That's my question. He's at the White House a lot.
I have big questions about the optics here. Is he standing next to the desk with the president sitting? Do we have podiums in the Oval Office? It's a curious venue
What
for
hat
an
will
event
Elon
like
be
this.
wearing?
What hat will he wear, and will actual questions be, taken by reporters? Like you said, it's set for 1:30, probably not on time, as few things are at the White House, no matter who seems to be living there. But when it begins, we'll bring it to you live, of course, right here on Bloomberg. Then we reel into the 5 o'clock speech at U.S. Steel, Kaylee. That's being billed as a big rally and could keep us up a little bit later than usual tonight.
Yeah, he has a tendency to speak for a while at these kind of things. And we assume that we're going to get more details about the U.S. Steel Nippon partnership or deal, whatever it is, if the United States is getting a golden share in this and will still have full control over this company or not, knowing that there does seem to have been a tone shift between campaign Donald Trump, who said this needs to stay in U.S. hands, no way this deal can go forward, versus President Trump, who is much more open to this idea after the CFIUS review.
We talked to Stephen Myron about this a couple of days ago on Balance of Power and asked him about the terminology here, and he didn't seem to care as long as the jobs were preserved and the jobs added, the investment dollars were made. But this idea of a golden share has got our attention, and I suspect we'll hear about that later from the president. Joe Doe is watching all of this from his perch at Bloomberg, our metals and mining reporter with his eyes on U.S. steel. Joe, it's great to have you with us. Welcome to Balance of Power here on Bloomberg. Can you tell us what you understand about the structure? Because this sure looks like a takeover, at least when you look at the dollars involved here, and not unlike the deals that had been proposed, to Kaylee's point, not favored by Donald Trump or Joe Biden. But tonight he's going to be talking about a partnership in a company that the U.S. government will help control. How does it work?
Yeah, Joe, that is the question. What is the structure of whatever this deal is? And I think we're still a bit in the dark. We're maybe starting to see some bits and pieces flow out. Of course, earlier this week, one of the senators here from Pennsylvania had mentioned the $14 billion supposedly being invested by Nippon Steel into U.S. Steel. But I think, listen, the investor class is watching very closely. They do want to know what this deal actually means. The golden share, let's think of it more like a mitigation agreement, right? That's the national security agreement. Golden share, I don't know if it's actually a golden share. That might just be branding. But the point here is, what is the United States federal government place going to be in this entire thing? Are they going to have veto powers over how much production can be shut down or not shut down? Are they going to have veto powers over jobs? How many can be cut in bad times and good times, right? I mean, right now, all we're talking about is, does this deal get done or not? But after the deal is supposedly done, this goes back to being a steel company. And steel companies are still commodity companies that go with the ups and downs of the market.
Well, that's very true. And of course, it being a steel company is why, initially at least, President Trump, like President Biden before him, was opposed to this deal, because they said there's great national security implications and interest the United States has in retaining its own steel production capacity. I want to ask you about a different element of the commodity space, though, specifically critical minerals, Joe, because President Trump today was talking about China not abiding by the terms agreed to in Geneva in regard to the trade agreement. The USTR Jameson Greer indicated that one of the big sticking points may be that critical minerals were not flowing in the way that China promised they would after they restricted them in retaliation for President Trump's very high tariffs. Do we have a sense of the critical minerals flow, what actually is happening?
You know, over the past 2 weeks, I've been in discussions with various people that are in this critical mineral space, the rare earth space, and they have indicated, you know, listen, it's not like anything drastically changed with the new trade deal. The new trade deal was very specific about companies that would have certain things lifted on them. But remember, the export controls that were implemented by China, I think this is what they're really getting at here, with these 7 rare earths that are implemented the day after the President of the United States mentioned the reciprocal tariffs. Those export controls went on every nation. It wasn't just the United States. So I think there's a procedural thing here that might be under discussion with Chinese officials and U.S. officials, which is this isn't just a U.S. thing, so it's not just a specific U.S. discussion. So right now, as we understand, it's not clear that these export controls have been lifted, but it's also not clear that it was ever agreed to in the beginning that they would be lifted in the way that the president seems to be suggesting.
All right, Joe Doe, we appreciate it. Bloomberg Metals and Mining reporter doing God's work, literally on the side of the road in Pennsylvania, where President Trump will be today with an umbrella in hand. Our audience on Bloomberg Radio is missing how hard Joe is working for us today, surviving the elements to cover this U.S. Steel visit that will be happening later. We really appreciate it. But of course, before we can get to U.S. Steel later this afternoon, we have to get through a joint press conference between President Trump and Elon Musk first. It's scheduled to begin just over 20 minutes from now, and we want to get into it with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, is a Stone Court Capital partner and Republican strategist. Jeannie, a Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. His days as a special government employee, Jeannie, are about to be over. They're going to talk about all of the work the Doge has done over that time to shrink the size of the federal government. We do know thousands of people's lives have actually been affected by layoffs in the federal government, but it doesn't seem that the kind of money Elon Musk said he was going to save, he got anywhere close to actually saving. So what kind of victory lap is this really going to be?
You know, Kaylee, I keep wondering, what does Donald Trump give him for a farewell address? Like a little chainsaw for his desk, or, you know, I don't know, something like that. Coupons for free nights at the Lincoln Bedroom. You know, I am so baffled by this because, of course, what Elon Musk is trying to do is to leave gracefully so that he can reconstruct his image. And of course, impact those sales in a positive way. To have a press conference now, I don't know how this helps him rehabilitate his image. But of course, the reality of Doge is that the $2 trillion in cuts promised, by some calculations, people are saying, so let's say by Elon Musk's calculation, it was closer to 160 billion in the end. But other people are saying, in fact, Doge cost money simply because of those IRS cuts to people that hurt the ability of the IRS to take in income. Either way you slice it, it is far less than he promised. And of course, they have a bill going to Congress now. But I am not convinced Doge is going to live on beyond Elon Musk and his chainsaw.
Rick, how is this going to work, chainsaw or not? This is the Oval Office. The president's going to be sharing space with a non-elected official. He's not a world leader. Are they going to sit on the chairs in front of the fireplace like you've got a prime minister in town? Does he have Elon stand next to the desk? This could be awkward.
Well, we've seen White House, Oval Office events where Elon stands next to the desk. In fact, even X usually gets standing room only treatment inside the Oval Office. And we've seen many occasions where Donald Trump would have people in his administration or from other countries come into the Oval Office and stand around the president's desk while he sat. So I think the physicality of this thing will be interesting to watch, right? Because I think there must be some pecking order for what treatment you get if you're on the good list or the bad list. Lately, the bad list is when you're sitting next to one another in the most formal posture.
How
and
true.
You get beat up. He's not going to attack Elon Musk. They'll be playful and they'll be interesting. They won't answer any of the questions that you want them to, but they see this as a long-standing relationship that will continue on. Elon Musk and the president say they'll continue to discuss the affairs of state. And yes, I do think this is part of what Elon Musk believes is his rehabilitation back to the private sector, where he can become popular again for the things that he's done to improve the country and the world, his inventions. And I think that would be the best outcome, is for the president of the United States to say, Elon Musk invents really cool things and I'm going to drive a Tesla and someday I'll go to Mars.
Remember when the Teslas were lined up outside the White House?
How could I forget?
Showroom.
Yeah.
We forget the things that have already happened in this administration. Rick, I do wonder, though, about your thoughts on what Jeannie was saying, which is that she doesn't believe that the Doge effort lives beyond Elon Musk. Knowing there was a Doge caucus formed in Congress, there were lawmakers ready to take up this mantle as well, really pursue this effort to shrink the government. Does all of that just kind of fade to the wayside?
It's been a whirlwind in only a few months. Doge went from basically running the entire federal government to being an asterisk. And I think that's the real question now, is not so much the Hill, because they like to do their own thing. And the Doge caucus, I think, was just a way to fit into the narrative with Elon Musk being so powerful. But at the end of the day, you do have Doge employees. They're sitting in these agencies. They are now under the thumbs of the cabinet secretaries, which happened even while Elon was there. And yet we do see active efforts on the part of this administration to implement IT reforms, including a very big contract for Palantir brought in by Doge to basically start unifying databases throughout the government. So if you blink, you might miss it. But the reality is there is a pretty significant effort underway that could substantially change things like privacy and government access to your data and the integration of data through different databases that is going to be talked about for quite some time.
What does Elon Musk have really to celebrate when it comes to the Doge today, Jeannie? Will it be cutting spending? Because the promise was $2 trillion on the way in, and it looks like $16 billion on the way out when you consider the wall of receipts. Or will it be the fact that he took the chainsaw or the proverbial sledgehammer and started to destroy agencies like USAID, which was part of the aim of this administration?
You know, I think he is going to try to celebrate something that I don't think deserves celebrating. And I think you just heard it in Rick's answer. The promise was the $2 trillion in cuts you just talked about, Joe. The reality is far less, maybe 2 or 3%. even again, some people saying it may have cost taxpayers to have Doge in there. But what this is going to cost us, in addition to money, is issues of privacy. And the contract that Rick was just talking about is a very good example. We don't know how this turns out at the end, but the outcome of this, I don't think, is going to be known as it pertains to our rights and liberties for a very long time. And what's frustrating and fascinating about this at the same time, under a GOP that has long been committed to a smaller federal government, they opened the door to private company to go in and take away some of the most valuable information that we treasure and people don't want being shared. So I do think that that is going to be likely the legacy, but I'm not sure it's the legacy that Elon Musk is going to celebrate. And I would also just add that nobody is going to miss Elon Musk more than Donald Trump, except for the Democrats. I mean, the real losers here with him leaving are the Democrats, who have enjoyed this enormously and would like nothing else more than for him to stay, so they can continue to beat up on him, as he said.
Yeah, Jeannie, what are they going to run on in 2026 if Elon Musk is no longer a daily fixture in Washington headlines?
Yeah, I mean, you don't get it better than the world's wealthiest man coming in to make cuts, fire people, cut cancer research, food assistance to the poor, AIDS research, AIDS funding. I mean, it was just, tailor-made for the Democrats. They're going to miss him enormously. They'll just have to look back wistfully at Wisconsin and be happy and proud that they control the Supreme Court thanks to Elon Musk, probably.
This could be one of those events, Rick Davis, where Democrats are making ads for some time. If you were helping to prepare the president and Elon Musk to meet the press today, to what extent do they need to be on message?
Yeah, look, I mean, being on message in this administration is different than what I was taught how to be on message.
That's for sure.
And so, you would want them to say things that would actually appear in a Republican ad, not a Democratic ad. And that would require the discipline to say that they came to Washington to reduce the size and scope of government, its intrusion into your daily life, and that's what they've done. I mean, there are ways of spinning a meteoric rise in government and a quick exit in a most positive way. My guess is it'll be more entertainment value, which probably will disappoint the Democrats a little bit. But if you can sort of dodge that TV commercial in the making situation, I think you'd be considered very successful. But I doubt it. I'm going south on this one. I think I think this is going to be a circus, and it's worth tuning in to Bloomberg to watch it happen.
Oh, see, now I'm excited. Rick, yes, indeed. We just got our first view of the Oval. They're setting up the desk. Someone's going to be seated. That'll be Donald Trump, presumably. Where Elon Musk ends up is another question. Rick Davis and Jeannie Shanzano, a great panel, Bloomberg Politics contributors. We count down about 10 minutes to the start of this event. Assuming it's on time, we'll bring it to you live here on Balance of Power on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks in the red. Just a couple of hours to go until we wrap up the trading month of May with the Dow, the S&P, NASDAQ, all very much in the red. Trade and tariffs, familiar themes dominating sentiment. Right now, the S&P 500 index down 48, 58.64. That is a drop of 0.8%. Dow Industrials down 164, now down 0.4%. The NASDAQ Composite Index hard hit down 259, now down 1.4%. And the Bloomberg Mag 7 Index, that is trading lower by 1.8%. 10-year yield 4.40%. The 2-year 3.89%. Spot gold down $25 the ounce, 32.92, down 0.8%. West Texas Intermediate crude oil down 0.6%, 60.61 a barrel. Brent crude, the global benchmark, down 1%, 62.71 a barrel. EchoStar, that is the wireless and pay TV operator controlled by billionaire Charlie Ergen, has skipped an interest payment due today because of uncertainty about a regulatory probe. SATS on the ticker. It is now down by 11.1%. Balance of Power continues right now. They are here in New York. Back we go once again. Your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet here in New York with us. Thank you so much as we await here on Bloomberg TV and radio the beginning of a joint news conference between President Donald Trump and outgoing Doge leader Elon Musk, who is wrapping up his time as a special government employee. This media event, of course, meant to commemorate that, perhaps take a victory lap, but it also may be an opportunity for the press to ask some questions, both Elon Musk and President Trump, on un-Doge-related issues, like maybe getting some clarity from President Trump as to what exactly he meant when he posted on True Social this morning that China has totally violated its agreement with us, the U.S., of course, being us. So much for being Mr. Nice Guy. Still looking for clarity as to what exactly the violation China has committed here is, Joe, and how this factors into efforts to advance a trade deal between the U.S. and China.
No more Mr. Nice Guy. That's right. The markets didn't like that message. But this also comes, Kaylee, just hours after a federal appeals court turned over the federal trade court ruling that had the markets reacting as well yesterday. The push and pull here, the confusing headlines continue. Now the tariffs are restored, at least temporarily. And so there are great questions about how businesses are supposed to weather this kind of uncertainty. Of course, the same we can ask about investors. And I'm glad to say we're joined here in New York by John Denton, the Secretary General of the International Chamber of Commerce. Mr. Secretary, it's great to see you. Thanks for being with us here in New York. The ICC represents over 45 million businesses in over 170 countries. What are they supposed to do?
Well, first of all, it's great to be the prelim for President Trump and Elon Musk press conference. And if we want to be sort of zeroed in, I'm happy to participate in that discussion as well, because the message I would be giving is the same as I'd giving you guys here. I mean, we've just surveyed the whole of the ICC, and what we're finding is, and I don't think you'll be surprised, uncertainty actually is a tax. And so what we're seeing on a global basis is heightened levels of uncertainty. And in a way, the decision of the court, the CIT yesterday and the other jurisdiction that there was a matter heard in, doesn't actually reduce the uncertainty. It actually clouds it even further. Because what we're seeing now is a lack of consistency. There will be changes in the coherence about the frameworks that will be applied. And what that says to business, large and small, is let's just steady on. Let's take our time. Why don't we delay? There's no cost to delay in a way. And of course, what we're seeing are things being, basically kicked down the road for another 3 months, which will generally mean for another 6 months. And what that also means is some things kicked down the road won't be picked up again. So we are seeing that on a global basis. Of course, there's different levels of uncertainty operating. There's a lot more interest and uncertainty because people are much more sort of zeroed in here in advanced economies. In developing and emerging economies, particularly I've just been in Africa, it's really partly bewilderment, not quite certain why we're being wrapped up in this sort of stuff as well. But also, we don't have the resources to worry about it. We also have other stuff just to get done.
Sure.
And so people just continue on. But what you're starting to see are basically people saying, let's just not hire that additional person or keep that open. It's interesting that the two matters, or the matters that were actually heard in the various courts on this issue, came from small businesses. What that tells you is small businesses are really feeling this as well. And they do not have the resources that large businesses have, that it can't do war rooms, they don't do scenario planning. It's just problematic. And even for large businesses, this is very complicated.
Well, so when you say businesses, whatever the size, are largely just kind of wait and see mode still, are we seeing any kind of material reorientation of supply chains, thinking about shifting their sources of supply or where they are looking for end markets for things that they are exporting? What kind of decisions are businesses willing to make?
Well, the first thing, people are looking at this, but as they don't know yet what the final outcome will be, a lot of it's exploratory, and also to commit now and to discover that subsequently the actual tariff that was levied is actually unable to be levied and are going to be repaid. It's kind of like, let's just hold off here. I mean, I've just been in Mexico with the business community and government there, which we're working with them saying, well, hold on, we do know this with Mexico tariffs, USMCA, that any good that is USMCA compliant will actually not have to pay any tariffs. And we also know as a fact that only 49% of goods from Mexico into the US are currently USMCA compliant. But that's actually not because the goods aren't. It's just the cost of compliance outweighed the benefits. They paid an extra 2.5% on the tariff for that. But now they're going to go up. We're looking at, well, okay, well, there are things we can do. We can actually lower the cost of compliance. I mean, the ICC will create a tool or apparatus to enable that to happen. So businesses are looking with this mix of friction about how they can work their way through it, but committing new capital or reorienting your supply chain, that becomes quite difficult at this point in time.
You said something really interesting right off the bat, that uncertainty is a tax. We keep talking to economists who are trying to drive home the point that a tariff is a tax. So is this approach effectively a double tax on your members?
Well, I mean, the double tax regime, we should all try to avoid that.
Yeah.
But effectively, uncertainty is a tax because the cost of things goes up as you delay. And of course, a tariff is a tax. I don't think there's any disputing about that. The question, I think people are arguing, who pays the tax?
Yeah, well, that's right.
The end, what we're seeing, even in the US economy, is consumers are going to pay that tax, and they're starting to pay that tax because you're starting to see in supply chains, you're starting to see in retail increases in costs. So, and we're seeing the sentiment move towards inflationary pressure. So that tax is going to come through and be felt by people.
Well, so when we consider the idea that President Trump says, whatever, if you want to call it a tax or what have you, it's going to bring more revenue to the U.S. But the other goal of this entire thing is to bring more business to the U.S., to have companies investing in manufacturing capacity here, making things in America rather than elsewhere. And I wonder what you're hearing from businesses in the international community about their desire to come to the United States, given this uncertainty that we're talking about.
Well, let me be 100% clear. This is the greatest economy in the world. Of course, if you're a business person, you want to have a piece of this, and you want to have more of it if you possibly can, and you want to invest in it. I mean, I'm an Australian. Australians invest heavily in the US. But what we want to know are what are the rules around which we can actually make these allocations of significant amounts of capital. If the rules are not clear, the actual risk factor goes up and the cost of capital goes up. We applaud 100% any government seeking to improve the conditions that will enable investment to actually occur. I mean, I want more in Australia. I actually want more in Africa. We applaud that. But the way you attract capital and businesses is by having clarity around what the rules are and also how you enforce the contracts that you're entered into. That's what we want. And that I'm sure is part of President Trump's vision.
Well, this is interesting, and I can't imagine what it's like to be in 2025, in the age of the second Trump administration, the Secretary General of the International Chamber of Commerce, with the comments we hear about globalism coming from not just the White House, but the MAGA community, the populist community that elected him. Do you feel like you're on an island as the face of globalism?
No, I mean, the world is so interconnected. It's just, you may, the way you describe it may change a little bit.
Is he on an island in a world of globalism?
Well, there's one thing that's for sure. The US is one of the most connected economies in the world. So the president does not sit on an island. He sits on one of the most connected economies in the world. And that's actually one of the great strengths of the US economy. In any issue about balance of power, the most connected economy will be the most powerful economy. So we hope that will continue. But the reality is planes still need to fly across borders. That's part of globalization. Mail gets delivered. You require multilateral agreements. That all happens. Let's not forget that the plumbing is still there. What we might call it might be different. But also there is actually a fair point the president makes, which I think we actually share as well. We need to make certain there are more winners out of the process of opening borders and enabling trade to take place across borders. But what we also know is that this has been one of the great enablers of economic development in the last 100 years. The reason we've been able to move Africa a long way out of poverty is because they're part of a multilateral or a trading system that functions. The reason we've actually seen a decline in poverty globally is because we actually have got rules-based trading systems operating. Nobody wants to see that go. And I tell you what, the US accounts for 13% of global trade. The 87% of the rest want to keep this going. And one of our jobs is to keep it going.
Well, you've brought up Africa a few times now, which obviously is seen as kind of a landscape of competition between the U.S. and China as to who can gain the foothold in Africa. Are you seeing evidence of companies anywhere, not just in Africa, but businesses looking to reorient themselves more toward China and away from the United States? As you talk about the U.S. being the biggest, most connected, powerful economy in the world, do you see risk that the U.S. could easily cede that to the second largest economy currently?
But I think the reality is over the last 10, 20 years, there's been a reorientation of trade anyway. There's a lot more what's called South-South trade. And of course, what we see now as the major trading partner for a lot of even Latin American countries is actually China, if it's not one or two. But what's really interesting is if you want functioning economies, you want a market-based system which is governed by a political system which is effective. Market-based economies actually lead to more economic development. One of the greatest calling cards for democracy is actually effective market-based systems. And of course, the greatest alignment on democracy is with countries like the US, Australia, European Union. They're not with state-led economic models. So the more we can encourage economic development, and frankly, the point I've been making in Africa, and I've been honored to meet with President Ruto, I've also been in South Africa because I'm part of the G20, B20 process, is that the development assistance economic model is really diminished now. It's got to be replaced by something, and that's got to be the private sector-led model. And frankly, I think we're at one with the new US administration on that as well.
This has been fascinating. I hope you'll let us know when you're back in the U.S. We should continue this conversation.
Thanks very much. Are we being knocked off now for the Trump market?
Looks like we're going to start a little late.
Absolutely.
We just
Thank you so much.
A break, but it was great speaking with you. John Denton, Secretary General of the International Chamber of Commerce, here with us at our global headquarters in New York. We very much appreciate the time, but as John just pointed out, we are still waiting with our eyes on the White House for President Trump to take a seat, take a stand next to Elon Musk inside the Oval Office. The optics, of course, remain a question, but we are expecting them to talk about the work of the Department of Government Efficiency, and we'll be bringing that to you live when that begins. So stick with us here on Balance of Power on Bloomberg TV and radio.